currently India is doing to US, how much of this could be shifted to other countries?
This 25 includes many categories of product. So if you look at only apparel or the garments, that's approximately about 6 billion. Then we have textiles, then we have, let's say, the home furnishings. So it's a whole gamut of product which is talking about this 25. So I can give you a specific reply for the $6 billion. And also, like, as you said, like what is my company is doing. So what we are doing is that we do not want to lose any market share from our customers. So naturally, like the same product, if it is shipped out of India or manufactured in India, it attracts this additional penalty tariff. And that's if the customers are not willing to pay, then I have to make those production in other countries like Bangladesh, Indonesia, Vietnam, or Guatemala. So that way, like I will retain the customer. And then when this tariff is removed, then I can bring that product back into India. That gives me one more challenge, which is what is to happen now. The factories and the employees that we have now working, so what will happen immediately? So that's a big concern. We do have almost about 50% exposure of our total turnover into US market. And India is about 25% of our total top line. So that means if you see like almost 12.5% of our total top line is at this point of time at risk, which is placed in India. So this business have to be replenished by some other goods, other customers for markets like Australia or Japan or European Union and UK. So these are the places that we would be looking into. UK and European Union had a FTA, which are basically a free, almost duty-free agreement with some other countries, our competing countries as well. So India was not so strong in these countries, whereas Japan and Australia, we enjoy an FTA. So that means we are as competitive as any other country. So that's something like as an industry, I have to look into. So yes, Pearl Global is definitely more ready, I would say, compared to some other players who might have a very high exposure into US. So that's the big concern that India and the government and the industry bodies or the councils have to immediately address. So that's the situation on ground as of now.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tech has changed. So should your tech show.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires.
Welcome back to India Market Open. Right now we are talking about sectors that could see an impact on the back of tariffs, and there is that pressure that did build up in terms of where markets were concerned, because we started off the day with marginal cuts. The cuts have deepened further, and this has been the trend that we have been seeing over the last couple of trading sessions. But currently as well, if you pull up Nifty 50, Bank Nifty and the broader markets, you'll see that mild recovery that has come in from the day's lowest levels. We are now hovering around that 24,600 mark in terms of Nifty 50, Bank Nifty also. The cuts are to the tune of around 300 points, but again, that uptick from the day's lowest levels. Let's pull up mid-cap and the small-cap index as well and see if the similar trend is being mirrored there. Absolutely. The indices, which were down nearly 1% when you talk about mid-cap and small-cap, that is recovering. Small-cap has seen the largest recovery now. That sector, that index is down now 0.4%. It is going to be an interesting day of trade, because this does show you that the volatility, I beg your pardon, is high on the back of the expiry day. So you will see these gyrations that keep happening during the session. But where we settle down is going to be the important point. VIX right now at 12.54, an uptick of around 2.9% is what you're seeing. But moving on, we've spoken about textiles as a sector with terms of impact with Pearl Global. Now let's understand what the auto ank impact will be, because it's very interesting in terms of auto and auto ancillary, where some things will see a 25% impact, some products might see a 50% impact as well. RK Forgings is one of the companies in focus as it looks to tackle the impact of tariff trumps, though that stock is at the day's highest levels right now with gains of 1.2% coming in there. Before we are joined by the management, let's bring in Puneet to help us understand the company's impact in terms of tariffs. Puneet, over to you.
Well, thank you for that. So just some key points. Roughly about 27 to 30% of RK Forging's revenue on a yearly basis comes from the export market, and specifically from the US itself. And that's largely on the exports of the forging capacity of the company. That is in line with the other players in the forging space as well. And that could get impacted, and was already impacted with the first line of 25% tariffs on forging companies from India. That's the first key point. The second one is that most of the companies were also expecting a pre-buy because of the EPA norms, which is the green norm, starting FY27, and some pre-buy was expected in H2 of FY26. That seems to be that it will be largely absent because of the change in policies by the Trump administration. So that positive trigger seems to have gone away now. And the third key point is that most forging companies, including RK Forging, is now looking at Europe, which is starting to see revival in growth. If these strategies do work, that will be a key positive, at least in the near term. But these are the three key points for the same, and the last one being essentially that within US as well, clients are willing to take the tariff hit because there are not enough capacities, and that does benefit someone like RK Forging as well. So those are the key aspects of it, and the conversation with Mr. Naresh Jalan will be taking these points forward as well.
Most certainly. Puneet, thanks for that. Let's get him in. Mr. Jalan, Managing Director, Ramakrishna Forgings, more importantly, viewers, a veteran in this space who has looked at multiple such cycles. Mr. Jalan, I dare say, is this cycle, or is this piece of this additional 25% punitive tariffs and the uncertainty around it very different from any of the past cycles that you would have seen?
Yes, I think obviously this tariff is one thing which we had never imagined also when we started our exports. And I think this is punitive measure, I think, but all said and done, it's, I think, part of business cycle, and it's going to go away. I think we are very hopeful that in coming months or days, maybe that, because US does not have a capacity to manufacture forgings as low-cost country. And I think it will sooner or later realize, and this punitive measures are going to go away.
Mr. Jalan, when we were talking to some of the textile companies or one gems and jewelry company unlisted, but in this space, they were talking about some uncertainty as things stand around order bookings post the next 3 months. What is your experience, sir, in terms of your conversations with your key clients in the US? What are the conversations looking like?
No, I think we don't see any uncertainty in terms of new order book or new order wins or new RFQ getting floated. Right now, the demand per se is on the lower side. And I think because of this uncertainty, the overall demand in the US economy is down in terms of passenger vehicles or trucks. the overall demand being down, that's the reason we are seeing less offtake. Otherwise, in terms of pulling out business or shifting business, we don't hear or see any incremental news coming out of US for us. Or I think I can say for entire automotive segment, I don't think there is an alternative to India in terms of the auto component sector.
That's interesting. No alternative to India as well. Mr. Jalan, good morning. Hiral on this side. So let's understand. I mean, when you talk about RK Forging as well, the company has substantial exposure with regards to the North American market, right? And this particularly comes in from the commercial vehicle components which are used in Class 8 truck orders. Now, the question is your Class 8 truck orders is already under pressure over the last couple of months right now. It has been dwindling. So you're already seeing that kind of an impact that does come into companies like yours. Now, secondly, when you talk about the tariffs as well, the other aspect everyone is talking about is alternative routes in terms of other countries, which you can look at. Or secondly, looking at diversification in different sectors. What is the strategy that Ramkrishna Forgings is going to look at?
No, we are not looking at any diversification in terms of our manufacturing facility is concerned. We are doing well with our customers, and I think we have been able to, in past couple of months post the announcement of tariff, been able to negotiate with most of our customers in terms of pass-through of the tariff quantum. And I think we are well on track in terms of our new order wins and new sectors within North America. So I don't see that as a challenge. Right now, the biggest challenge which we are facing is on the demand side. I think with all this tariff and uncertainty, the demand within US for all kinds of vehicle, whether it is, it's not limited to trucks or Class 8. It is sectors as a passenger vehicle or light commercial vehicle, every sector is showing a downward trend. That is what is challenging for us. In terms of tariff, I think it is a cost impact, but it is a cost impact for the customer. And we are trying as best as possible to become more competitive in terms of doing more value engineering and doing all sort of engineering to reduce the cost of the product. But in terms of tariff, it is a pass-through for us.
Okay, so tariffs will be a pass-through. The other question I have is...
Sorry, just ask in one question. Mr. Jalan, appreciate it's a pass-through, but will there be takers for a higher-priced auto component product from India? I heard you say that there are no alternatives to India, but will there be takers if indeed the pricing is so high?
So I think that's my answer earlier also. They don't have an option.
Alternative. Okay.
I think within US, I think you don't have a manufacturer. And in terms of auto tariff, it is uniform for all the nations across the globe. So 25% tariff is what everybody pays. The additional 25% tariff which has been announced is not applicable for auto components. So obviously we are limited to this 25%.
No, so Mr. Jalan, So Mr. Jalan, one clarification over there, on the back of what Neeraj asked you, is there any supplier that could supply from Mexico as well? Because that has been taken as an alternative when you talk about auto components. And number two, when you talk about auto components as well, the tariffs do range from 25% to 50%, right? There are some components that do fall under the 25% bracket. There are some components that do fall under the 50% bracket. So anything that any clarity that you have on that front as to which are the components that fall under the 25% bracket, which are universal across the globe and which do come into the 50% bracket?
So in terms of my company, I can say all my auto component exports fall under 25% category, and there is no export which falls under 50% category for auto components. Only forgings which fall under 50% category are non-auto forgings, which is particularly goes to oil and gas. So that is one sector wherein 50% tariff is applicable. And that is not today. That is the day oil, steel and aluminium tariff were announced as 50%. That tariff has been applicable. This 25% punitive tariff, which has been announced later on, is not applicable to any of them. So from day one, we knew the 50% and 25% auto tariff, 50% is for steel and aluminium. and 25% is for
So,
automotive.
Mr. Jalan, would it be right to say that because 25% is a universal tariff across the globe, with regards to where auto components go, I'm talking about forgings, everyone's competitiveness continues to remain the same as it was, because they will see a similar kind of price increase, that cost competitiveness. So not major things that change around then.
Yes, I think that's right. I think that is what we have been always telling, that it is going to be day as usual for everybody. Everybody has to ultimately go and pay this tariff, except for Mexico and Canada. But both these places also buy forgings. Today, out of my North American export, 80% of my forgings go to Mexico. So basically, the forgings which go into Mexico are converted into finished goods, and then they enter to US. So obviously, Mexico also does not have any large forging facility. So I don't think any pullback of order is going to, or we are going to see any cancellations of order. Whether it is limited to our company or whether it is limited to India. We don't foresee any major setback in terms of orders and inflows of new orders.
Got it. Okay. Mr. Jalan, just trying to bifurcate this for the portion of the tariffs. Sorry if I'm repeating this, and sorry if I have to repeat it, but just wanted that clarity. For the portion of the products which might be subject to 50%, would there be takers at that higher price, or you reckon the supply chains might get shifted?
So, like I said, whatever tariff is applicable at 50% is for majorly for oil and gas and non-auto components,
right,
which fall under steel and aluminium. So that 50% steel and aluminium, 50% is applicable throughout the globe. Nobody has been given nobody has been given an exemption for this 50% for steel and aluminium.
Got it.
Whether it is China or anybody. So I think everybody will need to ultimately pay, other than creating a new manufacturing within US.
Got it. Okay, just one more question, Mr. Jalan, from mine at least, and which is just the natural course of diversification that any business would want to do, and maybe that gets heightened, not because there is a tariff that is looming, but because of the nature of the conversation that has happened with other sectors, that you might want to diversify away from a point of concentration into other areas. Are you contemplating that as well, Mr. Jalan? You're not hit by tariffs, but you may still want to do it as prudence.
I think as prudent, we took this effort, I think 2 years back itself, when we started looking at more and more businesses from Europe and other places, Southeast Asia and other places. And I think we are working very diligently and very focused way in creating a parallel North American business platform within the Europe. And I think we are not far away. I think we should be in next 8 to 12 quarters reaching there, wherein our European operations or European businesses is going to be equal to or bigger to North American business.
Right. Mr. Jalan, and when you're talking about, the demand as well, I was just looking at the Class 8 truck orders, and it's actually reached a 16-year monthly low, while medium duty orders are the weakest since the outset of the pandemic. Now, even FTR, they've indicated that these numbers are coming in, and it's seeing this kind of a downtick mainly on the back of tariffs. And secondly, the freight rates, everything is becoming a concern. Now, if this is the scenario that will continue, what is the kind of impact you will see overall in terms of FY26 and FY27? Because Class 8 trucks also is one of the biggest aspects that you actually supply to.
No, I think if you see the August numbers which have come in the month of September, I think this has shown an uptick versus July, and that brings an optimism. I think with all these tariff issues right now behind us, I think people will now start living with tariff. I think the way forward, people will need to understand the way of life is tariff is not going to ever end. So I think it's going to be at some point of time, there is going to be an inflection that we are going to get back to normal. We are not seeing peak, but we are going to get to normal of 16,000 vehicles a month. And I think maybe in next 3 months, maybe in 6 months, that's going to be there. But in terms of RKFL, I think with the new business wins within North America, already starting to create revenue, and also within Europe, we are seeing in next 6 months to create revenue. I think we should be. I think we are looking at in next couple of months worst days to be behind us, and I think we are going to be back on our track of growth.
It's going to be interesting. 15, 16,000 in the next 2 to 3 months. If you talk about Class 8 truck orders, that is an absolute rebound that the street would see as well. But thank you, Mr. Jalan, for being patient and speaking to us. Yes.
That is an optimism an entrepreneur has to stay with.
Absolutely. Optimism is what is the need of the hour right now. Thank you so much for joining us on NDTV Profit. And Neeraj, that's interesting because right now we are talking about 8,000, 9,000 kind of units that are being sold on a monthly basis. As Mr. Jalan was indicating, the August number with the kind of sales that probably he's doing, he's saying he's seeing a rebound. And it will take 2 to 3 months probably to come back to that 15 to 16,000 kind of a monthly number, and that is a very encouraging statement for him to make, as a corporate dealing with North America. But absolutely no major impact if you talk about tariffs on forging companies.
Yeah, well, thankfully for them, it is a universal tariff which they have to play as well, so which is actually pretty good news for them. Or no bad news for them. I can't say the same for textiles or jewelry at least. Okay, on to more news and updates. GST rationalization, well, that's the other big news, right? Big boost for two-wheeler companies. Puneet Johnson to tell us why is it that the two-wheeler majors might be, well, active today, if not buzzing today. Puneet, they were buzzing. They've come off a little, but still, fill us in.
Well, it's a long-term, revival essentially of the two-wheeler space, and that seems to be in the lower end and the entry-level motorcycles, especially because of this GST rate reduction. Now, from 28 to 18 is where it will go. And just looking at some numbers, prices currently hover between 85 to 95,000 per vehicle. Because of this GST rate reduction, we could see a 7 to 8% price reduction according to Nomura on all of these models. And one of the biggest beneficiaries will be Hero MotoCorp, because 80% of all their motorcycles are under the 100cc or at 100cc space. So that is going to be a big fillip for this stock, and hence we've seen that huge recovery essentially from hovering around 3,600 rupees per share. It has seen a huge jump up over the last month and a half. So that's one of the key positives. The other one, Jeffries, they've come out with a note today hiking target price across the board for all the 4 two-wheeler companies, and Hero being the biggest. They've upgraded to a hold from an underperform. Target price has now gone up to essentially 5,200 from 3,800 rupees per share, and that is essentially from this GST rate reduction is what they're mentioning. Someone like TVS is also you've seen a hike to 4,200 from 3,500, and Bajaj Auto as well from 8,000 to 9,000 as well. So that's one of the key positives, this GST rate reduction. And the valuation differential as well. Before this whole GST rate reduction, Hero was trading at 50% discount or 50% lesser than TVS Motors in terms of valuation, and that seems to be catching up now. So all these positive factors contributing to the move of all these two-wheeler makers.
Thank you, Puneet, for that. So it's your GST rate rationalization which has come in and which is actually showing that impact in terms of markets as well. And it's the two-wheeler sector which is seeing that uptick. Thank you. And this is on the back of what Jeffrey's note has highlighted. But moving on from here on, plunging in trade is Indigo, and this is on the back of reports indicating that the Gangwal Group is likely to sell its stake through a block deal. Blocks have happened. Somit joins us with the details. So, Somit, what are you picking up?
Well, yes, Indigo's stock is under pressure, and this is because of the block deal that has happened in trade, where the Gangwal Group has sold some of its stake. Now, as per the term sheet, they were supposed to sell close to 3.1% of the equity, that is close to 12.1 million shares. The offer size was close to 7,028 odd crore rupees, and the shares were offered at a price of around 5,800 rupees per share, which was at a discount of 4% compared to Tuesday's closing price. Now, post this, the Gangwal Group will be left with around 4.8% stake, and there's a lock-in period of around 150 days to sell this additional remaining shares that the Gangwal Group has. Now, why Gangwal Group has been selling their shares? Because of the fallout that had happened between the co-founders of both the company, that is Rakesh Bhatia and Rahul Bhatia and Rakesh Gangwal, and this was owing to disagreements related to related party transactions and corporate governance. And the dispute began back in 2019, and Gangwal had exited from the board of Indigo back in 2022, and back back then he had clearly stated his intention to completely exit from Indigo over the next 5 years. And he started selling his stake from September 8, 2022. The first stake sale happened of around 2.8% equity, and that derived a value of close to 2,000 crore rupees for Mr. Gangwal. And currently he's looking to sell around close to 3% at a valuation of close to 7,000 crore rupees. Over the years, he has mopped up close to 45,000 crore rupees from various block deals that he has done in open market in Indigo, and the residual value of its stake, that is around 4.78% stake that remains with Ms. Gangwal Group, is valued at close to 11,200 crore.
So, what has actually consummated today? 3.1 totally, or is it 2.2?
So 3.1% is what they were looking to sell, but what dealers are indicating right now is that the block size was actually reduced because of lower demand. 800 million was the total block size, which has been reduced to around 500 million because only 40% commitment was coming in from long only funds. So because of weak demand, we have seen this block size. We are hearing that the block size has been reduced from 800 million to 500 million.
Around 2.2 is what has exchanged hands so far, is what we know. So I think it's going to be interesting if the remainder does happen. But as Somit is indicating, the block has been reduced because of low demand and 4.5% downtick on the stock. But moving on, Dr. Agarwal Eye Hospital will now be merged with its healthcare hospital, and that's the reason why, if you're seeing both the counters actually are trading near the day's lowest levels. Agarwal's Healthcare, a 15,000 crore market cap company. The eye hospital is a small cap with a market cap of around 2.5 crores. Varsha is joining us with all the details behind the merger and what is creating this kind of pressure on both these counters. Varsha, over to you.
Well, thank you so much for that. The merger is happening now. This is because they want to simplify the corporate structure, and the merger will be completed in Q2 FY26. Now, the Morgan Stanley, if you see, have given an overweight to Dr. Agarwal Healthcare now, because they see that this merger will simplify the structure, and this could be a re-rating for the stock according to Morgan Stanley. They say that the EPS will be the merger will be EPS accretive by FY27, and the share swap ratio that Dr. Agarwal Healthcare has been which is given is at 15% premium to Dr. Agarwal Eye Hospital's weighted average volume in the last few days. Now the acquisition is at EV/EBITDA multiple of 22x, which is at a 14% discount to overall hospital sector multiple, which is trading at around 25x. Now merger is expected to be completed by Q2 FY27. And this could be a re-rating for Dr. Agarwal's eye healthcare, which is why Morgan Stanley has given an overweight to this stock.
Got it. Okay. Thanks for that, Varsha. So this is interesting, and when I saw the small company size and Morgan Stanley covering, I was a bit skeptical, but then I realized that healthcare plus eye hospital Milake, it's a sizable one, right? 16,000, so nearly $2 billion worth of combined market cap.
But the question is why the pressure on the back of the merger? I think in spite of a Morgan Stanley being overweight, that's what we need to check, and I think we should try getting the management to understand what are the nitty-gritties with regards to where the merger goes as well. But moving on, from big retailers to small businesses, NDTV Profit dives into how the festivities are boosting local businesses, from sweet shops overflowing with modaks to bustling flower markets and sari stores. NDTV Profit brings you an inside look of the economic buzz. Take a look.
We are currently standing in Matunga, where on every corner celebrations of Ganpati Chaturthi are going on, and as you can see, Josh is very high. And while we witness these celebrations, we are also going to be bringing you how the small businesses of Mumbai are bracing themselves for a consumption boost. For example, your local sari walas, sweet shoe owners, and as well as more and more consumers coming in heavy numbers, and worshippers celebrating the festival with a lot of josh. So let's see how these celebrations continue to unfold. Firstly, I would like to understand what kind of footfall do you see on days like this?
On days like this, so footfall is near about 800 to 1,000 people a day, approximately.
And what kind of sweets are they more interested in?
So basically it's a festival season of Ganesh Chaturthi, so more of modak, and we have more than 83 varieties of modak, probably the highest in Mumbai. Nobody must be having that kind of modak. So there are Kaju modak, Malai modak, flavor modak, fancy modak, fusion modak, chocolate modak, ukdi modak, all sorts of modaks.
And will this footfall continue for Diwali and festivals that are coming after that as well?
Yeah, of course, the footfall is going to be good until at least March. So now there is Ganesh Chaturthi, then there is Dussehra, Diwali, and post there it will be followed by the wedding season.
And so what kind of preparations do you do on your part before the consumer numbers increase?
So we stock up the raw material. Of course, as it's a perishable product, we cannot stock it well in advance. So on the day, the work starts early in the morning and it is freshly prepared. We have our own manufacturing unit, so all the products are in-house and freshly made.
एक हार बनाने में आपको कितना टाइम लगता है बड़ी मूर्ति का?
बड़ी मूर्ति का 1 घंटा 1.5 घंटा होगा।
अकेले आप बना लेते हो?
अकेले बना देंगे।
और कितने का जाता है एक बड़ा हार?
बड़ा 8,000, 5,000, 6,000 वो हिसाब से 15 फुट 20 फुट वो हिसाब से बना के देंगे।
किस तरह की साड़ियाँ फेस्टिवल में ज्यादा बिकने लगती हैं?
अभी सब ट्रेडिशनल साड़ीज ज़्यादा बिकती है। ये महाराष्ट्रियन शॉप है, महाराष्ट्रियन के हिसाब से सब ट्रेडिशनल साड़ीज ज़्यादा बिकती है।
फेस्टिवल से कुछ दिन पहले या फेस्टिवल के टाइम पे कितने पीस जनरली बिक जाते हैं और फेस्टिवल के बिना वाले जो महीने होते हैं उसमें एक दिन में कितने पीस बिक जाते हैं?
देखो कस्टमर का फ्लो, जैसे जैसे कस्टमर आते हैं वैसा साड़ीज का सेल हो जाता है। तो समझो 500 पीस महीने में बिकता है, विदाउट सीजन में समझो 200 पीस बिकता है।
आपके खुद के रेवेन्यू पे भी कितना फर्क मान लीजिए अगर आपने इससे पहले के कुछ महीनों में इतनी कमाई करी तो कितना परसेंट कितना प्रतिशत तक बढ़ जाती है फेस्टिवल के महीनों में?
समझो ना अभी ये सीजन में अभी हम लोगों ने फेस्टिवल महीने में आपको 4-5 लाख 5 लाख का फर्क गिरता है। फेस्टिवल जब आता है तो 4-5 लाख रुपया बढ़ जाता है।
And for our final segment, to top it all off, we are here in Ganesh Gali at Mumbai Charaja. And as you can see, festivities are ongoing with full force and devotees are coming here in large numbers to offer their prayers to the idol. And as the festivities continue, we would urge you as well to go and celebrate the festival with your family. That's all in this segment of NDTV Profit. Keep watching.
Yes, indeed. Okay, let's get in, a short conversation, but a conversation nevertheless. With Ajay Srivastava, it's always good having him. Ajay, thank you so much for taking the time out and being with us.
Good morning, Raj. It's been wonderful to have you. Be there on this place. Wonderful to be with you.
Thank you so much. Well, Ajay, not so wonderful in terms of news flow. It's finally out that we have those 50% tariffs. I heard the people that we spoke to since morning all said that this might be short-lived, etc. But until it goes away, do you think there is a cloud? Or is the market baking in the worst already?
I think market is baking in the worst because I think if you look at the listed universe, Nikunj, that listed universe is not so much directly impacted compared to the vast majority of SMEs, unlisted companies, which are underpinnings of the Indian economy. So directly speaking, a lot of the listed companies, whether it's auto component company, auto export companies or pharma companies, are today sitting out of it by and large or with minor impact. And therefore, the listed universe doesn't have a direct P&L impact of such of the tariffs. I think it's a vast segment which is unlisted sitting there, which is ultimately going to translate into lower consumption story and the lowest GDP story. But that will unfold over a period of time. You know, the optimism of GST cut perhaps will get tempered, just as the way we saw the huge euphoria on interest rate, which was mistimed, has been totally lost in the next 2 months with interest rate higher than they are. So I think this is going to impact the consumer euphoria story much more than I think the listed universe story, because they are by and large insulated. They address the Indian market. A cement company doesn't care a damn about the tariff, for instance. Steel company is very happy with the protection. Paper companies are happier with more protections coming from them. So Indian industrialists, listed space by and large, are in a very happy space, and they will in fact, with using the tariff as an objective, get more and more tariff protection for themselves and their companies. So I would tend to believe that listed universe, much less impact. I think consumer space will see the impact in the next 2 months as the consumption drops, the unsecured loans start to soar up, and so on and so forth. That's the story which is important today, not necessarily what's the impact on the listed companies, which is, I think, quite little.
Okay, but so Ajay, would you therefore believe that, okay, one view that came in the morning, Ajay, was that if indeed tariffs stay, then earnings cuts could continue. you don't believe earnings cuts could be the reason that the markets may go down because of tariffs. It may be sentimental, it may be GDP slowdown, it may be employment problems, but not earnings cuts.
No, I think earning cut is a logical extension of a fall in GDP at the end of the day, Nikunj, because that's what is happening.
Neeraj, you're missing Nikunj too much, but this is Neeraj.
Neeraj, sorry, I'm missing Nikunj. See, it's like this, that the GDP cut is going to impact everybody across the board, whether you want to buy a house, whether you're going to buy consumer products, and anything at all at the end of the day. Therefore, you will see an earning cut is already happening. Our problem is different. Our market is overvalued. We got stocks of P's of 90 and hundreds. Companies are flat year on year and the P is 100, 110. It's absolutely ridiculous state of valuation in this country, and at what valuation mutual funds are buying. Absolutely insane. Nobody logical would buy these shares at these valuations, and therefore we are sitting on a pile of FI exit because no one rational can understand why are you buying a share which is flat year on year on profits but quoting at a P of 100. It's insane, absolutely. So I think we have more a problem of valuation, which is absolutely nonsensical in most cases today. Certainly every P's of 75 and above are absolutely nonsensical, and compared to just the issue of earnings. So, it doesn't matter how much you earn. You're not going to justify 75 P in a scenario like this or any scenario. So it's quite simple arithmetic. You get out and invest in countries where the P's are 10, 12, 20, 25, and the earnings are 15, 20% growth, as simple as logic. So issue is not about earning, issue is about valuation, which are just disproportionate to what we are making in this country.
Ajay, at this juncture, you're talking about valuations, we're talking about tariffs, you're seeing the way GDP will translate into an earnings degrowth as well. What would you advise an investor to do? Buy right now? And secondly, if buy, what sectors?
See, they're always good stories. In any market, they're very good stories which are running around. Today, for instance, I would certainly believe that the gold loan story has got a tremendous way forward, because for the simple reason, as this problem unfolds, and hopefully it does not continue, but even if it continues for long, the first recourse of most entrepreneurs, workers, etc., who get impacted is going to be the gold loan. I think that's one story which has done well in the last 1 year, should do well in the next 2 years. I think that's a brilliant story built out there, and that should do well. Segments like hospitals, they just do well at all points of time in the economy. The worse the economy get, the more people head to the hospital at the end of the day. So I think you have got domestic segments which are reasonable stories, little expensive perhaps, but still a reasonable growth stories to work with. I think the stories which are problem areas are consumer, which have got tremendously re-rated at this point of time, and retailing stories which are just outrageously expensive to buy into. And on auto is again a story which is long-term good story for India, because as your past guest told you, you can't replace an auto supplier overnight. You can do it in good time, but you can't replace him overnight. So at the end of the day, between autos, gold loan, and you're seeing the story coming out in terms of hospitals, I think you have reasonably good stories. And of course, some of the new age economy stocks are doing reasonably well at this point of time. You have got a reasonable portfolio. India is having so many IPOs, good stories coming out. So it's not that we have got dearth of stories. It's just that fact you need to buy at the right price to make a return for yourself. 20% return is what you should be targeting, and that's difficult in the market. So be very selective, I would say. No hurry to buy. You'll get your chances. You've seen your chances. You already got again. You got in September. You're getting again in the month of August, September, as we get into September. So year to year, you are getting chances to buy. Now, if you're bought on a high, then you are, my friend, you're in trouble. But if you kept your powder dry and go and buy in markets like this, the stocks that you like, I think you'll be in. So I think contrary to what most people say, keep buying. There is no timing issue. I'm a firm believer. You need to wait a while to get your entry right. If your entry is not right, stock cannot give you the return, no matter how good it is.
Wise words of wisdom. Unfortunately, out of time completely today. But this truncated conversation means, Ajay, that we have to do one up very, very soon.
And I apologize for confusing you.
No,
sorry.
Not at all.
You're still my favorite. You're still my favorite.
By the way, that I know. But thank you so much for joining in
care.
today, Ajay. Thank you so much. And with that, we wrap it up on this leg of India Market Open from Hiral, me, Alex, and the team that put this show together. Thanks so much for watching.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशित आई, ऐसे बॉय मिलते मुंबई में, चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex and with me is Shreyansi, and we'll take you through the next 1 hour of trade. Morning, Shreyansi.
Well, absolutely. Good morning, Alex.
Well, let's take a look at how the markets are faring. And it was a bit of a wobbly start for the benchmark Nifty 50, but we are off the low point of the day. Cuts of about 0.5% for the benchmark. And really the big conversation today is the imposition of the additional tariffs that came through yesterday at 9:31 a.m. and the equity markets market participants coming to terms with that fact. But having said that, quite a bit of the selling that you saw towards the start of the session has dissipated somewhat, or at least has been bottomed out by buying at the lower levels, because the broader markets have actually recovered quite sharply from the low point. The mid-cap index recovering by as much as 0.6%. You have the small cap index that's recovered close to 1% from the low point of the day. And if we look at the advanced decline ratio, it will likely show you that the gap has narrowed quite considerably. That is indeed the case. It's still tilted in favor of the declines, but the gap has narrowed quite considerably. Now, what I find interesting is that generally when you talk about foreign institutional selling, you talk about IT and you talk about banks that bear the brunt of this selling, and indeed IT is one of the big losers in trade today, down about 1.2%. It continues to be tic-tac-toe for this index. One day it gains quite considerably. In the recent past, there's one day in which it gained 2+%, and then it has lost since that point. And then you have the Nifty Bank that has recovered from the low point of the day, but is down about 0.5%. I wonder what HDFC Bank is doing, because this really, in the start, was one of the laggards and proving to be a bit of a drag for the benchmark as well. It's recovered, but still down about 0.7%. And of course, there's a lot of newsmakers, but we should get our experts on for the day. We've got Shahina Mukaddam, who is independent market expert, and Kush Bora, who's the founder of kushbora.com. Thank you so much to the both of you, as always, for taking the time. Kush, I want to come to you at the start. It is monthly expiry, so that additional volatility is really par for the course. But we've recovered quite smartly from the low point of the day. How would you approach investing/trading in a day like today?
Sure. First of all, very good morning, guys, and a good morning to the viewers as well. I would be a little cautious. The view that we had in the morning, and that's what we shared in our report on our advisory as well, which is shorting from here on does not make sense, because on a certain parameters, Nifty, even Bank Nifty for that matter, has actually gone into oversold territories. So some rebound or some mild short covering that you're seeing from the bottom, of the from the lows that the markets have made so far is par for the course. However, structurally things don't look as as stable. So I would be a little cautious. On the downside, 24,400 remains as a support. On the way up, I think Nifty will find resistance around the 24,750 mark. So, be a little cautious. I think the morning trade that was perhaps on the long side on the short covering bounce, that's been done. I would actually stay out of this market at least for a day or two. Let things settle. Let's get a clearer direction, and then perhaps play the index, Nifty on the Bank Nifty. But for now, I think that trade is done, and I would sit, on the sidelines.
Okay, let's kick things off. And by the way, in case you are tuning in for the first time, then welcome. And everybody who's tuning in again, welcome back. We've got two ways that you can contact us, either on the number at the top of the screen where you can send us a message, or you can call us on the landline number at the bottom of the screen. Let me take the first question. Oh, by the way, just a standard rule, we will only take one of your stocks, so don't ask about 15 stocks, we won't be able to take them. The first question today is about HBL, and let's try and pull that stock up. The question is coming in from Porshad, who's writing in. HBL Engineering is the name of the counter, and he's wondering whether to buy today. It's not doing too much, up about 1/3% or so. Kush, very quickly on the charts, what's the view?
Very interesting moves. I would definitely consider, buying it. I wouldn't go whole hog and buy it out, all the quantity that I want to in just one go today. But the stocks actually made, new highs. The relative strength is apparent. It had a very strong accumulation, over the last, week or 15 days. And it's seen, an up move. And, it's down only because of the market conditions. Otherwise, it's on a very strong footing. So yes, this is a good find. I would actually accumulate here. And also, if the stock dips close to the 750 level, within this band, I will continue to accumulate. On the downside, my stop is at 725. And on the upside, I would gun for targets of 8, 10, and 8.
Okay, all right. We've got a call from very far away. Abhi is calling us from Australia. Abhi, first of all, very good morning to you, or good afternoon, I should say, because it's later in the day for you. Where exactly are you calling us from, and how can we help you? Abhi, can you hear us? Abhi, can you hear us?
So I'm calling from Australia.
Yeah. Yeah.
Yes, I can hear you. Can you hear me?
I can hear you. Where exactly are you calling us from, and how can we help you?
I'm calling from Australia. Good morning to all of you. So I've got Northern Capital shares at 44,550. I bought at 173.37. So I was wondering, is it a good time to sell and exit the market, because of all this, the Trump insanity that is going on? Or should I just, stick to it, or just book a profit and, just stay away from the market till everything gets settled? Yeah, I'm a bit of,
I'm curious about the quantity that you've bought. Is this a concentrated bet that you've taken on this company?
Yes, actually at one point I had 50,300. So all of my money was in this. Then slowly I exited some in around 224. Then I thought of keeping the rest for long term, but the Trump was out of syllabus.
Sure.
So I just thought, why not? Try to exit. I just don't know, to be honest.
I like the way that you've described it. Donald Trump out of syllabus. I might just borrow that down the line. But having said that, Shaina, the question is on Northern Arc, and he's making significant gains. But as he's pointed out, 44,000 shares is what he's got. It's probably a large part of his portfolio. What should he do with this? He's sitting on gains of over 30 lakh rupees.
Yeah, good morning, everyone. And
I would suggest that he's entered at a good price. He should continue to hold. They are coming up with very good numbers, and I think they are more domestic. It's more of a domestic play. They have done very well in the quarter 1 numbers. I would say you can continue to hold. You could keep a stop loss if you like, since there is so much uncertainty in the market. You keep it at about 230, which is not very far from here. But at the same time, you protect your profits also, and you can hold it. I would say that a medium-term target could be somewhere even close to about 270, like a year's target. So hold it for now.
All right, then that's a hold coming in. Thank you so much, Abhi, for calling in, and thank you so much, Shahina, for taking that query. The next one that we actually have, first things first, Shahina, very good morning to you. The first query, the second query, in fact, for you that we have is coming in from Mohit, who's writing to us from Ludhiana, wants to know about JSW Cement for a period of next 5 years. What do you have in mind for this one?
Yeah, I think JSW Cement, it is a hold from here. Management is pretty aggressive. Valuation is a bit, expensive. At the same time, I think they are, through their merger and acquisition, likely to move into the top 5. I would say in over the next 3 years. So you would continue to hold. I think cement is another space which is actually domestic play and likely to, retain its. I would say positive sentiment over the medium term, given the uncertainty over some of the US exports from companies which are targeting the US and US exports. So I would say JSW Cement is decent. Ultratech is another stock if you want to be in the segment that you could be invested in.
Worried at all about the recent price declines, or do you think it's just seasonal? It'll recover in the third quarter.
Yeah, I think prices, I would say in the south, of course, prices will improve, over some of the other segments, over the other, maybe west. At the same time, I think prices will improve over the coming quarters. So one can hold. Like, I think this season, it's normally, prices are lower compared to the second half of the year. Even in volumes, of course, second half is better. So I would say second half should be better.
Well, and second half should be better. That's the view coming in from Shahina as well. Tell you what, we also have a caller calling in. We have Kiran who's calling in from Hyderabad. Kiran, a very good morning to you. Which stock do you want to ask about?
Good morning, ma'am. I purchased BSE 58 shares today at 2222. So should I stay invested in it for a short-term trade, or should I actually have a query that today morning NSDL also corrected a lot, and with huge volumes it recovered from 1205 to 1260 rupees. But BSE is also having volumes, but it is unable to recover. Should I continue in this, or should I shift to some other stock is my query, ma'am.
Alright, then since you're looking at BSE from a short-term perspective, I'll take this across to Kush. Kush, a very good morning to you. I wanted to know what you think about 58 shares of BSE at a buy price of about 2,222 rupees.
Morning, Shranshi. I think the medium-term structure for BSE has been disturbed a little, ever since it made that 3,030 kind of highs, and there has been selling pressure emerging, and we know from multiple news flows that have attributed to this slide on the downside. However, what I would suggest is a hold on BSE. The reason being that the volumes on the downside seem to be dissipating now, and the stocks actually hit oversold territories on certain parameters and could see a rebound. So his entry price is fairly attractive. However, as I always do, I would suggest a stop loss at the 2100 mark, and on the way up, the stock does have a potential to hit about 2330, and once that is taken out, perhaps even 2400. So from a near-term short covering kind of a trade perspective, with a tight stop loss around the 2100 mark, continue to hold BSE.
Okay, all right, continue to hold is a view on BSE. Jayesh Patil from, I should say, sorry, apologies. I'm used to speaking to a lot of people from Maharashtra. Jayesh Patel from Baroda and Gujarat is asking about a number of stocks, and he's listed out his entire portfolio, but I've chosen to speak about one of them, Hero MotoCorp, and his buy price is, let's pull the stock up please, if we can. His buy price is slightly elevated, 6092. He's got 4 shares, and he's wondering what to do. Should he hold on or should he exit? I'll come back to you, Kush, on the charts. The entire two-wheeler pack is buzzing in trade today, and I wonder if it has anything to do with the anticipation that consumption as a pack will do well. What would you say about this particular trade, though?
Spot on, Alex. And if you see not just Hero Moto, the peers, even TVS Motor, that's actually hardly seen any dent. And even Eicher Motors, these continue to do well. Hero Moto, after testing those 3,500 lows, has seen a fresh, lease of life and is continuing to, shine brighter. I would suggest a hold on this one. The stock's in an uptrend. You could see some consolidation sideways here or there, especially given the market, scenario. But on the whole, the trend for Hero Moto has reversed for the better. His buying price is elevated, so there is a possibility that he might have to exit at or maybe just above cost. But with the kind of accumulation that you've seen in Hero Moto, especially in the last 4 weeks, very encouraging. I would suggest a hold. Nevertheless, a stop loss is always advisable. So positional stop is suggested at 4,800, but the view is bullish. Continue to hold and exit close to or just above your cost.
Got it. Okay, so that's a view on Hero Motor Corp and the two-wheeler space in general. We've got our next caller. Venkat is calling us from Bengaluru. Venkat, very good morning to you. How can we help you today?
Yes, good morning. Thank you for connecting me.
My pleasure.
Yeah, my query is on Shriram Finance.
Okay.
So it is falling down from 2 sessions. So may I know what is the reason? And I want to invest. What is the correct price I can enter?
Okay, do you currently own the stock?
No. I should, newly I have to buy.
You want to buy, okay. But you want to buy for the long term, right?
Yeah, long term. So I need both fundamentals and the technicals.
Okay, all right. I'll come to you, China, on this one. Indeed, it is one of the big losers in trade today, 3% plus lower. Do you spot any fundamental reason for why the stock is underperforming?
No, I think it is with the rest of the market. Otherwise, I would say that Shriram Finance, in terms of valuation now, it is much more attractive compared to some of the other stocks, NBFCs in the similar range in terms of valuation. So I would say you could continue to hold Shriram Finance as of now. And since he wants to buy, I would say that you could buy it, but you could buy it for the medium to longer term. The way the market is moving, you could see some bit of softness in the shorter term. But a long-term investor, Shriram Finance should do well because auto sector OEMs is also picking up. And so that should support Shriram Finance. Also in terms of their cost of funds, that I think should bottom out and it should come. In fact, it should be lower going forward. So one can be invested for the longer term.
Because ultimately, if you're talking about vehicle sales picking up, then a corollary of that would be that the lenders in the space will also benefit. But a quick view on the technicals on Shriram Finance, very quick view. Kush?
Alex, just quickly, I think viewers have found a loophole. They only ask one stock, but now both fundamental and technical views.
I'm making an exception today, though. I'm feeling generous.
Sure. No. Alex, I would wait a little because even on the downside, the volumes are still heavy. So for me, I think a good accumulation point on this one would be close to the 560 mark, 555, 560. That would perhaps be a good entry point from a technical standpoint.
Got it. All right, Manta is calling us from Vancouver. We're getting a lot of calls from overseas today. Manta, very good morning to you. Or rather, it's quite late in the night.
It's quite late. It's around, exactly, it's around 10 o'clock. 10:17.
Yeah.
You and us are exactly half an hour difference. You are day, I am night.
Absolutely. So how can we help you?
I was just trying to get your analyst view on Suzlon Energy.
Okay.
I had 20,000 shares of Suzlon. I booked profit and sold off 10,000 shares at around 75 rupees each. My purchase price was 6 rupees and 86 paisa. I still hold 10,000 shares.
Wow.
I just want to, now the price is at 56. I expect that by the end of this year, that to touch to 100 rupees.
Wow.
I just want to know from your analyst, am I right in my forecast, or is there something else what the analysts feel?
Well, Manta, very quickly, I know this is a long distance call, but I'm curious, what is this analysis based on? The expectation that it will hit 100, and are you talking about the calendar year or the financial year?
Is the by the financial year. I mean the first quarter maximum, latest by December I expect, or else by the first quarter of next year.
Okay, and what is this based on?
This is simply based on the hot market that the alternative energy resource holds.
Okay.
and India is leading on that. And Suzlon has come a long way in its recovery process. I feel that the management is in a very firm and good hands. The companies are being run fantastic.
Okay.
It will show that result.
Yeah. But having said that, it's quite the target, 100 rupees. I wonder if you agree. What's the view, Shaina, on the fundamentals? 100 rupees by March for Suzlon?
I think that's wishful thinking because, of course, as he says, the demand is huge and order book, they have got a very good order book position. They are confident of growing by about 60-70%. They are growing at those rates in terms of revenues. But if you look at valuations, it's already priced to book. It's about 10 times. And if you see EV by EBITDA, it's 30 times 1 year forward. So I would keep my expectations reasonable. And he's done a very wise thing of booking profits at 75. And I would say that, if there is a good bounce back, again, he can take some more profits of the book and keep holding for the long term the rest. So I would say keep your expectations more moderate.
Alright, and thanks, Shahina, for that take coming in. So, looks like that is a little bit out of syllabus, Alex, for Suzlon Energy. That is the take coming in from Shahina as well. And we have some interesting commentary coming in from our viewers today and a lot of long-distance calls coming in from across the seas. But let's also take this next one coming in from Pranav. In fact, Shahina, this is for you. Yatharth Hospital is what Pranav is asking about. Wants to know if it's a good time to buy. What do you think?
I don't cover it.
All right, Kush, I'll take it across to you. Just a quick chart check on this one, Yatharth Hospital.
Very interesting setup, has been on my radar for some time. Very interesting accumulation. In fact, the entire hospital space is doing well, but you still have to be selective. Yatharth, I think, is at a good juncture. Consolidating, could break out from here. Stop loss at 690. On the way up, 740 and 775 should be your targets.
Okay, I'm coming back to you. And by the way, the last question was all the way from the United States. Arib from Delhi is asking about this, and he's got a question on Chambal Fertilizers. He's holding 22 shares at a price of 567.38. He's got a view that he wants for the next 2 to 3 months. So therefore, on the technicals, Kush, what's the view?
Alex, the view is not so constructive. While the fertilizer pack is usually something, that does see some sort of attraction and upward movement, especially domestic facing and all that. Right now, the entire pack seems to be consolidating, and the last couple of weeks, any kind of positive news has been sold into. However, that said, since this buying price is not too far and stock is still in a consolidative zone, I would suggest a hold on Chambal Fertilizers for now. Slightly deep stop loss at 535 because that happens to be the lower end of the band. And on the way up, you could actually see a target of 575 as the first one. And once that is taken out, to 600 as well.
Okay. Anshu is calling us from Australia. Guys, are you pranking me, or are these calls indeed coming from overseas? Anshu, hi, good afternoon or good evening, as the case may be. How can we help you today?
Good afternoon. Yeah, actually, I bought Vellore Estate shares, 1790 is the quantity. I bought them last week.
Okay.
And at the price of 178 rupees. So I would like to know whether I should continue to hold it, or what's the future perspective for this?
What is the time frame that you have in mind?
Oh, I can hold it for, let's say, 2.5, 3 months.
Okay. And where in Australia are you calling us from?
Sydney.
Wow, fantastic. All right. Formerly DB Realty, but Valor Estate now. So short-term views being short, border levels of 178, not too far away from the current market price of 170. What's the view on the charts, Kush? I'm coming back to you.
Alex, we need a second version of this show. Ask Profit Global and Ask Profit India.
I think it already is. It goes without saying.
In a way, it's merged. No. My view on Valor Estate is positive. I have had a constructive view on Valor Estate from 120 odd levels. The stock sprang up to 250 and has seen sharp profit booking from there on. But if you see on the charts, the profit booking has actually been on very low volumes, and hence my confidence in the stock is still very much intact. His buy price is also not too far from the current price. So yes, very much a hold on Valor Estate. Here too, I'll suggest a deepish stop loss just to factor for volatility. 150 is where you place that stop loss. I won't be surprised to see the stock surge in the next 2.5 months, maybe a little longer as well, back to levels of 195 and post that 220. So still remain constructive on DB Realty or Valor Estate, that's the name is.
All right, then thanks for that take coming in as far as Valor Estate is concerned, Kush. But the next one is coming in from Hyderabad for a change. It is from back home. I want to go across to you, Shahina, for this one. Jio Finance, what do you think for a fresh buy for the long term?
Yeah, Jio Finance, one can look to buy and hold it for the longer term. They are actually, the mutual fund that they launched recently in their tie-up, joint venture, is doing pretty well. And in terms of valuation also, I believe compared to the rest of the NBFCs, it's the valuation is quite decent. So one can hold Jio Finance and even keep adding it at any depths that you get, in my view.
Okay, all right. We've got our next caller, believe it or not, from Dubai, and Mohammed is calling us. Mohammed, very good morning to you. You're behind us. See, I've got to remember all my time zones now. How can we help you today?
Hello.
Hi, Mohammed. Can you hear me?
Hi, Alex. How are you?
Yes, very well. I hope you're well as well. How can we help you today?
It's regarding this Hindustan Aeronautics Limited.
Right.
I want to have your outlook in the shorter view because this stock has rallied and now I think that is a reasonable price. I can hear you.
Yeah. Got it. Okay. You're going to have to mute the television when you call us because, as much as I don't mind listening to my own voice, it gets a little disconcerting. Let's talk about the long-term prospects for HAL though. And Shahina, I'm coming to you on this one. What's the view? Would you buy right now?
Well, he's asked a short-term question. At the same time, I would keep buying HAL. They are getting, good orders. And I would say defense is one sector that's likely to do well, both in the shorter term as well as in the longer term. So, I would be buying HAL at depths, yeah.
All right, then. So that's the take coming in as far as HAL then is concerned. But tell you what, let's take the next query that is coming in from K. Narasimha Reddy, writing to us from Hyderabad. Lots of queries coming in from Hyderabad as well. This one is coming in on Marico. Shahina, what do you think about this one? Because 160 shares is what Narasimha has bought at a buy price of 627 rupees. What do you have in mind for this one?
In terms of FMCG, Marico is, one of the better ones in terms of valuation also. And at current levels, I would say it's better to hold. Can keep a stop loss closer to about 680 and hold with a target close to, I would say about close to 780, 790.
All right, it's time for a very quick break. We've got more stocks and more queries lined up on the other side. I would encourage you to stay tuned. Do stay. And we'll be back before you know it.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग, जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड क्लास, क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
Tech has changed, so should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome back. You're watching Ask Profit on NDTV Profit, and this is the show that gets you answers to all of your stock-related questions. We've had an interesting show so far with callers from Australia, from even Dubai and certain other places. And we've got a message from Frankfurt, which I will take. Our viewer says that since we are taking overseas questions, he thought he'd try his luck. Let's see if it works. Sanjeet is writing in from Behrampur and asking the next question though, and he's asking about Bajaj Finance, which has been, if I'm not mistaken, a bit of a laggard in the recent past. If we can pull up the last few weeks, maybe a month or 3-month chart, just to see what it's been doing in the recent past. Because I remember a few sessions where it's not done too much. All right, so there you go. So if you, depending on the time frame, it has actually underperformed, not done too much in the recent past. Let's talk about the long-term prospects though. And Shahina, if consumption as a theme is something that you would play, then Bajaj Finance would benefit. Would you agree as a lender in this space?
Yeah, it will. And I would say that, even with two-wheelers, four-wheelers, the coming season should be quite positive in terms of growth. Bajaj Finance, after the softness in stock price and the correction that we've seen over the medium term, I would say valuations about 4.5 times price to book. FY27 is not too expensive for the quality of Bajaj Finance. And while Q1 numbers were a bit subdued, I think going forward, considering that I would say OEM should do better. Cost also, in terms of cost of funds, also should be quite reasonable. I would say that you could continue to hold it with a medium to long term.
Then the next one that we have is actually we have Dilip who's calling us from Hyderabad. Dilip, thank you so much for calling in. A very good morning to you. What do you want to ask about?
Hi, very good morning. Thanks for accepting my call. So, yeah, I'm currently holding Gravita share around 1,500 shares and at the price of 1849 rupees. So currently I'm sitting around minus 3 lakhs. So I'm looking for a 6 months view on this. Even though it gives very good results recently, but still it's going down.
Right,
like
I quickly
few days, yes.
Understood. So I just was a little curious. I wanted to understand if you have a long-term or a short-term outlook when it comes to this particular counter.
I would like to hold at least a year. This.
All right then. So at least a year is what you're looking at. Tell you what, I'll take this across to Shahina. Shahina, I quickly wanted to get your word when it comes to Gravita India. 1,500 odd shares thereabout. 1,800 rupees thereabout is his buy price as well. That's Dilip asking about Gravita India. What do you think about this one then?
I would say that he can continue to hold. In terms of valuation, it is not too expensive. So I would say that, yeah, you hold it. It's about price to book about 2.2 times. So it's not too expensive. They do lead acid batteries and they have got sufficient orders on hand. So it's a smaller cap stock. So you can continue to hold to the medium to longer term. 1 year that he's saying, I would say that he can make a decent return and he can look for better prices to book profits.
prices. I do want to very quickly take a view from Kush, because Kush, he's sitting on losses over 2 lakhs right now. What advice would you give based on the buy price?
I was afraid you'd ask me. Alex, the view is not too constructive. Every rise has been taken as an opportunity to sell. The stock's having difficulty finding, strength to cross the near-term averages as well, 20-day, 50-day. So for a rebound trade, he could still hold on, or rather for a rebound play, he could still hold on. But please keep a very tight stop loss near the 1600 mark. If that is broken, I think the medium-term structure will worsen further. So not very constructive, but keep a stop loss around the 1600 mark and hold for a rebound.
Okay, all right. So that's a view on the charts for Gravita India. Banco products is what we're talking about next. And Anwar is writing in from Kerala, from Calicut, which is now called Kozhikode, as you know. 2,200 shares is what he is holding, and he's looking at whether or not it's a good dividend payer. Is it a good hold for the long term? What's the view, Shahina? I think he's sitting on a sizable amount of profit, so he's wondering whether to hold.
Dividend pay yield is around 1.82 times, 2%. So I would say it's average. It's not particularly a dividend play. It's a small cap, but I would say if he's holding it for the medium term, it does look like it's going to remain positive. I would say you can continue to hold it with you can keep a target of 550 and look for a target close to about I would say 630, which is not too much upside from here, but you can hold it for now.
All right, then, so that's a whole recommendation coming in as far as Banco then is concerned. The next caller that we actually have is Arvind calling in from Uttar Pradesh. Arvind, कैसे हैं आप? मैं आपसे पूछना चाहूँगी कि आपका किस स्टॉक के बारे में पूछना चाहेंगे आज आप?
आज मैं एनडीटीवी के बारे में पूछना चाहता हूँ। एनडीटीवी का जो शेयर है वो 140 के रेट के आसपास चल रहा है, और इसने जो मीडिया सेक्टर है इसने परफॉर्म नहीं किया पिछले 3 साल से। तो मेरा एक्चुअली लॉन्ग टर्म व्यू क्या रहेगा मीडिया सेक्टर का अगर हम बाय करते हैं तो उसमें से एनडीटीवी और भी आपके हिसाब से कौन से शेयर्स हैं जो परफॉर्म कर सकते हैं?
जी मैं पूछूंगा आपके लिए। Shaina, it must be said, of course, that we are part of the group, and so therefore that is a caveat that we have to ask with. But in the media space, would you hold on to NDTV, or would you buy something else?
Well, the stock has corrected substantially from the highs, and it is consolidating at current levels. It is making losses, continues to make losses, but I would say that it will depend on the subscribers. If you can add your subscribers for the medium term, I would say if you're holding it for the medium, it's a very small cap stock, just about 900 crores as of now in terms of market cap. So, if he's holding, he can keep a stop loss close to 130. But otherwise, it looks a bit weak for the 6-month holding period.
All right. So that's a view on NDTV. Obviously, NDTV profit is a part of NDTV. Ather Industries is the name of the counter that we're talking about next, and Vijay Babu is asking the question, and he's bought at levels of 820. The quantity is 350. He's writing in from Hyderabad and asking about this. So Kush, on the charts, what's the view?
Not too great, I'm afraid. The stock's actually had a selling spree for some time now, hasn't really been able to recover in a meaningful way. I think it's a good idea to perhaps, exit this one. The stock actually testing the 730, medium-term support zone as well. If that is broken, the structure could worsen and the stock could head to 700 odd levels. So given the kind of underperformance and the constant selling that you're seeing at every rise, I would suggest an exit on Ather Industries.
As far as Ather is concerned, but tell you what, the next one that we actually have is coming in from Uma, writing to us from Chennai. Shahina, I'll take this across to you. Uma's writing to us about 2,000 shares of Ashok Leyland bought at a buy price of 120 rupees. She's mentioned. What do you have in mind for this one? What do you think about this particular counter then?
Ashok Leyland has done pretty well. Even if you saw the quarter numbers, they were quite good. And I would say that even at current levels, it looks quite strong in the four-wheeler space. And, in terms of volumes also, I think they should do much better in the second half coming part of the year. So I would say it's definitely a buy at dips, hold. You can hold, and then I would say a target of close to about 150 type of levels you could see over a year's time frame.
Satpati has got the next question. He's writing in from Bengaluru and he's asking about MSTC. He also points out that his questions aren't taken very often. Apologies, Satpati. It's not like we're missing out your questions on purpose. But the question is on the fundamentals of the stock. He's bought at levels of 852 and he's been holding for 2 years. He says fundamentally it looked good when he bought and even now he thinks that it's fundamentally okay, but he's holding with a loss of 40+%. It's a very sizable amount of money that he's losing, though the stock is up about 6.4% in trade today. Shaina, fundamental coverage on this one, and should you hold?
It looks quite weak if you see the shorter or medium term. It's a trading stock in metals. I would say that even first quarter numbers were a bit disappointing, but I would say there are other stocks in the trading segment also that would be, much more attractive compared to MSTC. So if he wants to hold, he can keep a stop loss close to about 430, and then he could see if there is a bounce. But otherwise, I would say I don't see too much upside in the 6-month period for MSTC.
Is it better to exit then? I know that it's a substantial loss, but then what happens is that you can set this off and you're losing out on opportunities if you're trying to recover your price. That's the problem, right?
Yeah, I would say so. It's better to switch. He could look at something like a Hindalco. I think if you're looking at a medium to 1 year, 6 months to 1 year, I think Hindalco should do better than MSTC.
And since this is, look, it's an issue, right, Kush, because he's sitting on a sizable amount of loss. So therefore, even though the stock is up about 6.4%, the advice on the fundamental is to get out. So what is the right price, in your opinion, to do that?
Yeah, so it's always difficult, Alex, to suggest or recommend booking such a heavy loss. But I mean, when it needs to be done, it needs to be done. Right now, I would suggest a stop loss at 430, and the stock could see a minor pop or rather a continuation of the pop that it's seeing right now, because the last 2 weeks have seen a very decent volume accumulation, and also there is a positive RSI divergence on the daily setup, which could actually take the stock to about 485, 500 kind of levels, maybe slightly higher as well. So I would suggest a trailing stop loss approach where you start at 430 right now, and as the stock moves higher, you keep trailing your stop loss upwards and keep exiting so that your loss is a little lesser than you're looking at currently.
All right, then that's the take coming in as far as MSTC is concerned. You've got to do what you've got to do. That's the take coming in from Kush as well. The next one that we actually have, Shahina, is coming in from Gayatri, who's writing to us about Piramal Pharma and wants to know about sitting at a loss at this point in time, of course, bought at a buy price of 224 rupees. That's Gayatri from Bengaluru writing to us. What do you have in mind when it comes to this counter, Shahina?
The stock has given you a bit of recovery from its, corrections, but I would still say it's a switch in the sector. They have some problems with the US FDA, which, had conducted, an inspection. And their Turbhe facility in February 2025, they did get some observations. So I would say valuations are quite attractive in terms of pure numbers, in terms of PE, etc. But I would say at current levels, it's not a buy. You can relook at it a couple of quarters down the line, because in the CDMO space, they have quite a good order book. But I would say don't get in as of now, wait.
Get in as of now, but wait, and you might want to switch out from Piramal is view. Govind is calling us from Hyderabad, asking, I believe, Govind, about Action Construction. Is that right?
Correct, sir. Hi, Alex, sir.
Hi.
Happy Vinayak Chavthi to all of you, sir.
Wish you the same. Wish you the same, and to your family as well.
Yeah, thank you, sir. Thank you very much, sir.
Please go ahead.
Sir, I have purchased Action Construction at the price of 1,200 rupees per number set, sir.
Okay.
Actually, last quarter, the result is average is coming. Can I add some more, sir, for long-term investment for 2 to 3 years, sir?
Okay. You bought at 1,200 levels, and you've got a long-term view. The stock is up quite considerably in trade today. So therefore, let me ask you, Shahina, Action Construction bought at 1,200 levels. The way that it's going, it might just recover. He might just recover his buy price. So what's the view on the long term?
I wouldn't be so confident. The numbers were pretty weak in the Q1, and it's a small cap. And I think in terms of valuation also, it is quite expensive. In terms of price to book, in terms of P, P is about 30 times, price to book 9 times, market cap 12,000 crores. Numbers were weak in the Q1. I would say it's better to look at some other stock, switch.
And what other stock would you suggest then, if that is indeed the case?
See, if you're looking at construction, as he is invested in, that you could look at NCC. I think that would be a better space to look at, or some of the real estate stocks also. If you're looking at DLF, I think that would be something that he could look at instead of Action Construction.
All right, then the next one that we actually have is coming in from Senthil, who's writing to us about Tata Motors. Kush, what do you have in mind for this one? 200 shares of Tata Motors. Buy price is about 690 rupees. What do you have in mind for this one?
My suggestion would be, as and when he gets his cost price, he should exit. This is one stock that can be held or bought for a 12 to 18 month kind of a time horizon, maybe longer. The momentum's missing. We've seen multiple times the stock fizzle out at the 695, 700 zone. No momentum per se. So yes, for now, you could continue to hold with a stop loss at the 650, 55 zone. But the moment you get your buying price, it's a better idea to exit. And as we discussed earlier in the show, perhaps two-wheelers is a segment that you want to consider. Or in the same space, four-wheelers, Mahindra & Mahindra is a better option.
I remember there's corporate action going to take place towards the end of the year as well. With Tata Motors, it's going to split into a commercial vehicle business as well as the passenger vehicle business, and lots of headwinds for JLR globally, which accounts for a large part of the consolidated revenue and profitability at this point for the company. We've got Vikram Sola that we're talking about next, and Kumar is writing in from Frankfurt. He is indeed getting lucky. Kumar, it is your question that we're taking. He says that he came across a stock on KYC, which is, by the way, the next show. It starts at 11:13. We talk about one particular stock on a daily basis. You get the rating that we have based on several parameters as well. So I'd encourage you to take a look at that show. But he's wondering whether there's a target for the long term. He says that it's still at IPO level, though it's at a higher PE than its peers. And that indeed is very close to the IPO level, about 9% higher. Shahina, on the fundamentals, any view on Vikram Sola?
No, I don't.
Okay, I'm not sure, Kush, if you have enough data. Is that you don't have enough data? Okay, unfortunately, then it is not your lucky day today, and we will have to hold this question for the next day. Lemon Tree Hotels is the name of the question stock that we're talking about next, and Subramanian Padmanabhan is asking this next question. He's holding at levels of 122 rupees. He's sitting on profit. Should he book and move to Indian hotels is the question. And Shahina, it's an interesting one, right? And there are several offerings in the hospitality space now, not just one or two. So which would you pick? If not Indian hotels, there are other options to choose from as well.
Yeah, Lemon Tree is a good hold. You can continue to hold in terms of valuation compared to its market cap. It's one of the small cap hotel space. So Lemon Tree is a good pick and good hold at current levels. Other stocks that I personally also invested in and hold, ITC Hotels, that is also doing well. And of course, Indian Hotels is the market leader, but in terms of valuation also, it is the most expensive. So these three stocks can be part of your portfolio. Lemon Tree is a hold.
Whole recommendation coming as far as Lemon Tree is concerned, and that's the pecking order as far as some of those hotel counters are concerned. But Shahina, tell you what, the next one that we have is actually coming in from Gul, who's writing to us about Nesco. 50 shares, buy price 896 rupees, is keeping 1 year in mind. Also wants to know if you should be adding more. What is your recommendation for Nesco then?
Yeah, Nesco has started showing us a good momentum. They're doing pretty well in terms of their order book. Also is good engineering products that they have got. I would say, despite the good rally that we've seen in the shorter term, the pickup, I would say it's a good hold. You can keep, the investor can keep a stop loss close to about 1,350. But I would say you could look at targets, about 1,530, 40. So to that extent, it's a hold at current levels.
Okay. By the way, the flashes on the bottom of the screen, remember that is where the news breaks first. And you should pay attention to this, because this really is a talking point of the day, of the morning, of the week. The latest update, and this is sources coming through. I'm guessing we will be calling our correspondent in New Delhi to get you more details on this story. Efforts underway to resolve the ongoing discord between India and the US. Barbs been fired from the US side. India so far has had a measured response, and there's no real big statement that has been made by the administration about these tariffs. Of course, it was expressed even yesterday, and sources told us yesterday that there was hope that this would be resolved. Seemingly now it's clear from government sources that efforts are underway, and there will probably be back-channel conversations happening between the US and India. Of course, yesterday you had Scott Bessent make certain statements about India. You had Mr. Navarro, who is the counsel to Donald Trump, talking about the ongoing purchase of Russian oil. And there were certain statements that, well, you should have to take with a little bit of a pinch of salt, because he was talking about the fact that the Ukraine-Russia war is being perpetuated by India because it is continuing to buy Russian oil. That remains a sticking point in this conversation at this point, because India, among all of the major trading partners that the US has, currently has the highest tariff, and that includes China, where a conversation is currently underway to set terms for a tariff agreement. But various other countries now attract a significantly lower rate of tariff, not least of which our neighbors, even Bangladesh has a lower tariff at 25%. So this is a step in the right direction. Perhaps, remember, a lot of market participants anticipate that it will take a month or two at the outer end to resolve this. This is not a sustainable situation. India being one of the largest economies in the world, and a country that has a significant amount of economic potential. To alienate it is not in the best interests of either the US or India. In the meanwhile, of course, the government working very hard to bolster domestic growth, as well as to protect the industries that are facing trouble. And those include, not least of which, the textile companies, the gems and jewelry companies, as well as the chemical companies, to say the very least. Also a few shrimp exporters and rice exporters impacted on account of the higher tariffs. But let's go back to the questions, and we've got a question from Hari, who's writing in and asking about REC Limited and asking whether this is the right time to buy this stock. Stock is at 360. Kush, what's the view on the charts?
So, I'd actually wait up, because, there have been talks and there have been, setups which suggested that the stock could actually move higher, but has fizzled out, hasn't really seen a meaningful recovery, and, not least with some spike in volumes. While it is close to the medium-term averages or medium-term support zone of 350, without seeing an uptrend or an uptick in the stock, it would be, slightly preemptive to go and buy. So I would wait up and not buy. Maybe I would prefer to buy it on the higher side. Once 370 supply zone is taken out, perhaps it would make a good entry point, not at the current time.
All right, so not at the current levels, that's at least REC for you, but tell you what, the next one that we actually have, Shahina, is coming in from Ashok, who's writing to us from Mangaluru, wants to know about your take as far as United Spirits then is concerned. What do you have in mind for the next 1 year, say?
I think United Spirits is likely to see, a bit more competition from the domestic players. I would say Radico is a much better pick than United Spirits as of now, because of the make in India, buy in India type of government policy. So I would prefer Radico. So if I'm holding United Spirits, I would switch over to Radico.
All right, Prakash from Chennai has got the next question, and he's asking a really long-term view. He's not stipulated what he defines that as, but Birla Cables, he's got about 2 lakhs invested after liquidating his investment in SBI Life. In fact, he asked the question on our channel itself. So, Shaina, on the fundamentals, would you buy Birla Cables for the very long term?
I don't really track the stock.
Okay, so then let me ask you this: in the cable space, what would you buy if you were to buy for the very long term?
See, basically, the cable space is actually becoming very competitive, because Birla is talking of entering the space. I really don't know, whether Birla Cables is the same company that he's talking about, and how it is. I thought it is going to come through Ultratech or Grasim, so I'm not too sure which of the two. So I would say it's, I don't have a specific pick on Birla Cables or
Birla
opinion.
Cable
And
is part of the MP Birla Group, so it's not really the same company that we're talking about, but it is in optical fiber cables and copper telecommunication cables. But having said that, I'm talking about the likes of Havells or certain other players that you would talk about in that cable space.
Havells, I would say it's more of an electrical play rather than cables. But overall cable sector, I would say like KEI, some of those cable stocks, I would say as of now to avoid overall sector because the sector will become much more competitive.
All right, and that's a take coming in as far as some of those cable companies are concerned. But the next one that we have, in fact, the last query in this particular segment that we have is coming in from Sunil Patil, writing to us from Maharashtra. Kush, I wanted to come to you with this one because he's asking about 12,000 shares of Orient paper bought at a buy price of about 39 rupees. Has been holding on for the last 1 year. What do you have in mind for the next 4 months?
So it doesn't look all that attractive, to be honest, because there has been a very long phase of consolidation that's been going on, at least for the last 4 months. The stocks consolidated. The lower end of the band is at 27. The upper end is at 30. Despite the kind of positive news that you saw the positive moves that you saw in the paper space, the stock hasn't really been able to build onto that rally. My suggestion would be to keep a tight stop loss at the 26 mark. If that's broken, exit. Right now, no big upside visible, in the coming months for the paper stocks, especially Orient paper.
Did have a pop earlier in the trading week though. Vara Prasad is calling us from Hyderabad. Vara, we're running out of time, so very quickly, what's your question?
Sorry, I want to just know the entry level for Vari Energies.
For the long term, right?
150 to 200 shares for long term.
Got it. Kush, what's the view on the charts? 3350 is currently the price. Would you buy for the long term?
You could actually enter right now. The stock's giving a breakout. Keep a stop loss at the 3250 mark. On the way up, you're looking at targets of 3600 and 3850 as well.
Got it. It is now time for the rapid fire segment, and this is, remember, where we throw as many questions at our guests as possible over the course of 2 minutes. The first one is on UPL. We've got Tanuja who's writing in from Kozhikode, bought at levels of 252 5 years ago. Can we switch to something better as a view? Shaina, what's the view?
He can hold UPL if he wants to be in the segment, but otherwise I'm not too positive on UPL also, the overall segment. So I would say it's a switch. Hold for the longer term, switch for the short term.
Okay, Cross Limited is the name of the counter. If you have a view, Kush, KROSS, bought at levels of 205.29. Would you hold?
No, it's an exit.
Aniket wants to know about Shakti Pumps for a period of 5 years. Is this a good entry point, Shahina?
Yeah, I would say it's a good entry point and it's a hold.
IndusInd Bank, bought at levels of 991. Can you average it out at this point? Vijay Kumar wants to know. Shaina?
No, I think there are better stocks available. No.
Okay.
Avoid.
We've got, Diamond Power or Aster DM. Which one is good to buy at this point? Dushyant wants to know. Shaina?
I would say Aster DM would be a decent stock to hold for the longer term.
Okay. All right. We managed to take 36 questions today. Thank you so much to the both of you for taking the time and for your valuable advice. Pleasure speaking with you. And that's a wrap on this edition of Ask Profit from Shreyansi and myself and the team that put the show together. Thank you so much for watching. Up next is Know Your Company, and this is NDTV Profit.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation,
Hello and welcome to KYC, that is Know Your Company on NDTV Profit. My name is Hiral Datia and with me is Puneet Javeri. Today on KYC, we are going to actually dissect a Quess Corp in trade. It's going to be an interesting company to talk about, and the scenario is absolutely interesting as well. The reason being is what's happening with hirings right now, because all of us have been talking about the negative impact in terms of where IT as a sector goes, because that's where majority of the downtake that has happened so far. But let's quickly run you through as to why a Quess Corp. Firstly, we want to understand the business outlook for FY26, and the reason why this is important is after the three-way demerger that has happened, how is business actually shaping up? Moving on, if you talk about the other aspects, which segments will lead the hiring in the second and the third quarter, which usually is an absolutely strong quarter? That's the second question that we ask. On number 3, what's the outlook looking like for GCC hiring, as IT as a sector has been slowing down as well? And moving on, can the professional staffing sustain the double-digit margins that we've seen so far? So these are a few of the questions that are on my list. Puneet, what are you going to look at as well?
I think one of the key aspects is, of course, of the company is largely into hiring for both banking as well as for technology, and that space has been largely impacted from the tech space. So I think that will be one. Monsoons, amongst other reasons, has been one of the key aspects which is impacting a lot of companies, but those are some of the key aspects to look at.
Right. In fact, will Middle East and Singapore growth also continue from here on is what we need to watch. What's the plan for on-site as well as GCC business transfer is what we should be looking at. And very lastly, how is the Hamara Jobs ONDC integration progressing for the company? So we usually look at 5 questions. These are 8 questions that we will try looking at with the management from here on. But moving on, let me quickly take you through, about Quess Corp. Firstly, as we know, the company is in the business of overall staffing is what we know. Apart from that, if you look at the presence, 9 countries is what they're present in, and they have a workforce of little over 550,000 associates, serving over 3,000 clients across diverse sectors. Talking about the demerger as well, they have done a 3-way demerger. All the 3 companies have been separately listed now. The main business, which is Quess Corp, is into workforce management. And the first new company is Digitide, which is into BPM solutions, InsurTech, as well as the HRO business. If you talk about the second one, which is Blue Spring, that company is into facility management, industrial services, as well as investments. Overall, if you talk about the market split as well, Quess Corp, it actually had a market cap of around 3,900 odd crores, Digitide around 2,900 odd crores, and Blue Spring around 1,200 odd crores. And this is basis the split that had happened then. So let's just be very mindful of that aspect. If you talk about the first quarter as well, in terms of the matrix, Quess Corp around revenue of around 3,650 odd crores on a PAT of 50 crores. Blue Spring reported a loss and a revenue of around 800 odd crores, and Digitide a profit of around 10 odd crores on a revenue of around 740 odd crores. General staffing, professional staffing, overseas business and digital platforms. These are the segmentals that you're looking at, where general and professional has seen an uptick, whereas overseas business and the digital platform has seen a degrowth from 5 to 18%. So that's with regards to everything that you need to know about the company. But let's quickly take you through the rating parameters from here on. On the first one, we have the income statement that we are talking about as well. We'll talk about the balance sheet, cash flow, return ratios. Moving on, if you have to look at the other 4 parameters, the shareholding, street credentials, street coverage and valuations. This is what we will discuss from here on. Puneet, let's start with the income statement.
Well, definitely. It is one of the key aspects because we've seen the demerger happening now of this particular entity. So you are seeing some kind of revenue correction that we've seen. Now for FY25, and we've only taken the last 2 years because these are comparable post the demerger. If you see from the FY23 level, compare the FY25 revenue, you will see a dip, and that's largely because the 2 demergers of the 2 new companies that Hero just spoke about. So in that aspects, 14,990 crores is what they did in FY25. It is a growth, but you will see that there's an impact on the net profit substantially. It's down almost 6 times from the FY24 level. This was largely because of a demerger expense of about 30 to 40 odd crores that they did, as well as a write-off of about 118 odd crores, which impacted the profitability in FY25. So that has dragged down essentially the ratio in this particular aspect, and for that reason, we've given this a thumbs down. And in FY26, they are expecting some of these expenses won't be a part, especially the demerger expenses. The receivable aspect will be something that we'll quiz the management on. But on this aspect, we've given this a thumbs down.
Right, so that's with the income statement. Let's quickly look at the second parameter, which is the balance sheet of the company. Now, what's interesting in terms of the balance sheet is their net worth to an extent has come down significantly from a 2,800 crores that we saw in FY24. It's actually come down to little over 1,000 odd crores. And in terms of the cash and bank as well, that is nearly halved for the company. So these are 2 aspects that we are looking at, because of which we are giving it an absolute neutral rating so far.
Specifically, this has also seen that kind of demerger impact, which we've seen move
There
into
will be some movement that will
Spring.
happen, correct, to the other companies, which is Blue Spring and Digitide.
Yeah. And in terms of cash flow, let's move on to the third metric now, and that largely seems to be stable-ish to say the least, because we've seen that kind of degrowth in terms of hiring trends. You're seeing that impact in FY25 as well. Companies guiding for a better performance in FY26 that will be led by professional staffing as well as the hiring in GCC trends. So we've given this a neutral, not given this an absolute thumbs down, largely basis of this aspect of a better outlook. But for FY25, it was still a better performance compared to FY23, but a neutral rating, giving the uncertainty in hiring for the tech as well as among the other sectors that it caters to.
Okay, so that's with regards to where cash flows go, but let's look at the return ratios. Now, what's interesting with the return ratios is if you have to look at 23, 24 and 25, it's the lowest So clearly, the return ratios are well below your historic highs that you've seen as well. In fact, 10.36 is where the return on capital employed was in 2024, 23, 8.45, and right now 2.92 is really low. Simultaneously, if you talk about the return on equity as well, there again that number is in single digits, 2.36 lower level, versus a 10.35 and a 8.97 that we've seen in the previous years. So clearly there is improvement that is needed on the return ratios, and that's the reason why we give it a thumbs down so far.
And essentially, the return ratios are expected to go and do better going forward, largely led by, what is happening in GCC trends amongst others, because that is a very, very high margin business for the company. But clearly the trends, seeing that impact of the high margin businesses moving to the other key verticals, and hence thumbs down. The next one is shareholding, and this largely, we've given this, in terms of shareholding, largely, in this particular aspect, a thumbs up, and that's because of maintenance of that kind of shareholding that this one has kept. So from 56%, it's largely been there. We've seen some increase from March of 2024 in terms of the level for public shareholders, and hence, we've seen in terms of the stock largely underperforming, the retail investors coming in anticipation of a better growth area. But we've given this a thumbs up based on the confidence that the promoter has kept in the business.
Okay, so that's with regards to where the overall return ratio shareholding goes. Street credentials is that we've already spoken about as well. Valuations, let's quickly look at that aspect from here on. If we can just get the overall street creds on the screen. In the last 6 months, we've seen a downtick of around 55 to 56% in terms of where the stock price goes. That the counter has actually underperformed in all parameters. If you have to look at the last 5 years as well, it's a downtick of around 31, 32%. So not really rewarded the shareholders to that extent. So that is what we need to look at from here on. But, as Puneet was mentioning, the GCC hiring, which is a high margin business from here on, if that is able to improve the business, in turn, improve the return ratios as well, potential for things to come up and reverse. And that's a question that we will check with the management. But overall, a thumbs down in terms of the street credentials, Puneet.
Well, and that's largely also seeing that kind of merger impact, which we saw in April. About pre-merger, the price was 604. Post-merger, we saw that dip to 400. But since then as well, we've seen some form of impact on Quess Corp, largely basis on the operating performance as well. In terms of valuations, the nearest competitor is TeamLease, and we've always seen that kind of valuation differential between both these firms. Currently, valuation for both seems to be, on the lower side for FY27 specifically, baking in the negatives for this year. The outlook, of course, will be something to watch out for as we go into Q2 and Q3. Q2 and Q3 are, big seasons for hiring, and that does benefit companies like Quess Corp as well as TeamLease. But at least for on both the next couple of years, we've seen valuations largely been positive compared to TeamLease. But in terms of growth, that largely has been absent, and hence we're giving this a neutral for now. But in terms of commentary, that depends on what happens in Q2 and Q3, has some upside risk to say the least, and that's reflected essentially in the analyst ratings as well.
Valuations absolutely reflective in analyst ratings. But let's quickly just go through everything in terms of the street credentials that we're looking at in terms of coverage. 8 buy calls, 1 hold. But with that as well, you have a 42% upside, right? So from what Puneet is mentioning about from a valuation perspective, the business perspective, the GCC that could start contributing, probably that is what is being indicated in the upside that, the analysts are giving right now. And 8 is not a bad number, and hence a thumbs up in terms of where the street credentials go, the coverage goes. Let's quickly look at the final performance now. So the income statement is a thumbs down, and your return ratios are a thumbs down. If improvement comes in, probably that could change in the future. Balance sheet cash flow, absolutely neutral because of the impact of the demerger that we've seen. Your shareholding, street coverage, both are a thumbs up. Valuation right now is sideways, but your credentials, because of the returns that it has given to investors, is a thumbs down right now. So from 8, the overall rating is a 3.5 in terms of where Quess Corp goes right now. The conversation that we will have with the management is actually going to tell us how this 3.5 probably will improve from here on or not. Let me welcome in Guruprasad Srinivasan, Executive Director and CEO at Quess Corp. Srinivasan, welcome to the show and a pleasure to speak to you at NDTV Profit as always. My first question coming to you is, overall, with the demerger that has been done, now the business that Quess Corp will actually focus on, what's the outlook looking for FY26? Because usually Q2, Q3 is a strong quarter for the company. So taking aspects into consideration with what's happening around IT, the GCC business that you're looking at as well, which is a high margin business, how is Quess Corp actually stacking up?
Sure. Thank you so much and happy to join you all on this call. So first and foremost, let me start from the demerger structure in itself. So we had a very successful demerger, which officially we announced, and two other companies that got listed in the month of June. So Q4 results itself, if you look at, we started, announcing the result independently by each of these entities. So Q1 is the first, standalone result that we announced of independent entity Quess Corp. A couple of specific callouts. First and foremost, we had a double-digit EBITDA growth year on year, and our debt levels have become, for Quess Corp, debt level is, we are a debt-free company now. And the other parameters are like post-demerger, the business structure in itself has become far simpler. So we have 4 lines of businesses. The first one is general staffing, which contributes about 53% of our EBITDA comes from general staffing business. The second set of business is India professional staffing, where 29% of our EBITDA comes from India professional staffing business. The third quadrant is our international business. About 18% comes from our international, 18% EBITDA comes from our international business. And the last one is a digital platform, which we have incubated for future in terms of building our digital strategies around. So 4 lines of businesses, simplification of corporate structure, and debt-free and much leaner balance sheet is what we were able to achieve by Q1, and we've just announced that as a result.
Mr. Srinivasan, good morning, sir, and thanks so much for joining in. It's Puneet this side. You mentioned that debt has now, wiped off from the balance sheet. Essentially, that will help the return ratios for you going forward. In terms of, hiring trends, if you can give us some perspective. Quarter 2, quarter 3 generally is very strong for you. We're almost, halfway through quarter 2, and while you can't talk about numbers, have you seen any kind of hiring revival essentially in sectors like technology amongst others? If you can give us some perspective.
So let me go by platform and business. So Q2 has been definitely, we see a lot of green shoots coming across Q2. If I were to start specifically from a segment, if you look at, I think, general staffing, we have an open mandate of almost about 40,000 plus. To be precise, about 42,000 open mandate that we are on. It's a good way to start Q2. And between July and August, we have done substantial hiring, specifically in manufacturing, consumer retail, and telecom. As you rightly said, India being the season between July to up until Diwali till October, we are seeing mandates, open mandates being fulfilled, and the other sector is supply chain logistics. Specifically, I think 1 or 2 sectors which are a little slow than anticipated is BFSI is slightly slow, but otherwise manufacturing, consumer retail, telecom, and supply chain logistics is doing well. Coming to professional staffing, GCC has been the most spoken about, and we are definitely, while the mandate quantum may not be high, our fulfillment ratios are far better, and we have been able to do good. Almost 70% of our fulfillment comes from specifically from GCC as a segment. So a couple of indicators probably that viewers would be interested. The rural consumption is far higher than urban consumption. 75% rural consumption is coming up from, and that leads to a lot of expense and the investments that can go into the segment, which is helping us to probably do our more open mandates are coming in from tier 2 and tier 3 segments, which is good to see than the key markets and urban markets. So almost 37% of our hiring we have done in tier 2 and tier 3 cities as we speak. And most of the manufacturing units are also being set up in tier 2 and tier 3 locations. So that's where we are now seeing a lot of demand coming in, which is in a way good for country like us. There will be more spending pattern in rural markets. So that is going to give rise to more jobs as we move forward.
Okay. So when you talk about, an uptick that's coming in from tier 2 and tier 3 as well, which segments are you looking at in terms of hiring? What percentage of your revenues will come in from there? And in turn, the margin impact that you see, is it a low margin game or is it a high margin game?
See, staffing would always would be in a range between 1.4 to 1.5% in terms of EBITDA, because it's a volume game. And the way we reorient ourselves is we definitely headcount is important for us, but profitability is much more important than our revenue. So we focus on our profitability for this business, specifically for general staffing, and of course, professional staffing has always been on EBITDA measurement. So coming back to your question, one third, almost, I said 37% of our hiring is coming in from tier 2, tier 3 segments. Again, the segments which are driving this are manufacturing, consumer retail and telecom, and logistic and supply chain. More e-commerce going closer to the customer in tier 2, tier 3 location, and you need entire delivery and solutioning around it to cater to their customer needs. So plus the retail being the season, and more retail going closer in tier 2, tier 3 location rollout. That is what these are three segments which are driving, and it also reflects in a similar ratio in our revenue as well as we move forward.
Mr. Srinivasan, my question then is, you're talking about that margin range of 1.3 to 1.5% when it comes to staffing. But now that you're focusing on GCC, you're expanding into, global technology services, which is a high margin business. Do you see that further upside that could come in? And if yes, what should that range look like then?
Good question. So if you look at our results between Q4 and Q1, our contribution from general staffing in Q4 was about 59%. The EBITDA contribution, what I mean. And in Q1, that 59% has come down to about 53%. So while headcount grew and we had net additions, our contribution to overall EBITDA as across Quess for general staffing came down from 59 to 53. So on the same way, if you take the second quadrant, which is our professional staffing, from 21%, we moved to 29%, which means our high margin businesses are contributing well back, which is helping us to, our overall blended margin across group, we moved from 1.8 to about 1.9. And by end of this year, we've been guiding and we are modeling accordingly to be around 2%, and we are on course to that.
Mr. Srinivasan, a couple of questions. Now, on professional services, you mentioned professional staffing, you mentioned that, the contribution of EBITDA has gone down to 53%, but that continues to be, where the growth essentially seems to be visible. Could you talk to us about what is your strategy for increasing your GCC contribution? Because I think you mentioned that you're roughly around target. You already have 157 GCC companies that you work with, but the scope in India with the increasing focus seems to be much higher. So could you just talk to us about the opportunity, and if you can give us some kind of quantification that we could see in the next year or next couple of years for you specifically from within this segment?
I think just one correction. You said 53%. What I referred to was general staffing contribution coming down from 59 to 50. So that is what I mentioned. And our high margin businesses going up from 21 to 29%. So that's what I was trying to clarify. And coming back to GCCs continues to be, we have, there are about, if you look at, there are about 1,600 GCCs expected to grow at at 13% year on year. By 2030, it is expected to be about 2,500 GCCs who are going to set up their captives back in the country, of which currently from 1,600 we cater to about 10% of GCCs in terms of hiring. Almost about 3,000 plus around 3,300 headcount of ours are currently present in GCC. So with this, we continue to grow. Probably, I think over 20%. I wouldn't hesitate to say that the kind of demand that is coming in and the fulfillment which is coming in. And as a company, we also pivoted to cater to in terms of building better recruiter capability, bringing in more AI and digital as part of our mix to ensure that fulfillment and delivery happens much quicker and faster. So definitely, this particular segment, which is high margin, would continue to grow about 20% year on year for us, and we are slated towards that.
Okay. And when you talk about IT as a segment as well, that's seeing some bit of softness right now. And plus you've seen a decline in terms of the open job mandates as well, right? So how are you actually strategizing to navigate this aspect? Because that is something which has been reflected in the fourth quarter numbers as well.
So this is specific has been the trend for IT services companies. For all IT services companies, absolutely, I would we are not seeing any major demand coming in for Q3 as well this year, as we're already close to Q3. This has been the phenomenon for almost last 6 to 8 quarters, and we've only seen headcount coming down there. However, our exposure to IT services is about 15 to 16%. We do hire in a very small format even now, but the exposure or the kind of the percentage what we cater to is about 15 to 16% currently. But otherwise, majority of our demand still comes from out of IT services. See, the other two quadrants beyond IT services are GCC, and the another segment within this is all the non-tech companies hiring tech talent for domestic consumption. So there we are seeing a lot of traction. Like companies are into their own automation journey, and there we are seeing demand coming in for non-tech companies hiring a lot of tech talent. Like, look at Quess itself. We'll have about 200 tech talent for our own technology and strategy. People are working for us, which probably 3 years ago wouldn't have been the kind of people. The kind of population that we will have only for technology. So the local adoption is also going up. So from that standpoint, the demand we still continue, or we will continue to see, coming in from specifically from non-tech companies hiring tech talent, and GCCs will continue to contribute more this year.
Right. So, Mr. Srinivasan, everything said and done, understanding what the business is doing, where it is going, what the investors now want to know is when do they start seeing good returns, right? I'm sure you cannot really respond in terms of the way stock is moving, but let's understand from a return ratio perspective as well. We've seen levels of 10.3, 10.4 on both ROE and ROCE. How long will it take you to get there, number one? And two, what's the immediate target that the company has in terms of improvement from levels of 2.9 right now?
So when would the indicators look better? Definitely this year itself. I wouldn't hesitate to say that for multiple reasons. One is we are a debt-free company, and in terms of our equity level post demerger is almost about. If I look at the kind of trajectory that we are in, between 4 quarter, we would roughly. We'll roughly deliver about 350 crores of EBITDA, and our conversion from EBITDA to PAT is higher because there is no much of depreciation line item. So from that standpoint, we are very well slated to be close to a 20% ROE company, which we have been aspirational for some time. But this year, I definitely foresee that indicator is going to be definitely ticked for as a group for us. And of course, the market
higher single digits.
Oh yeah, absolutely. We'll be close to higher teens.
Okay, you're saying in the ROE, ROCE, you'll be in higher teens.
Absolutely.
All right. This is something which I think the street was watching out for. But thank you. Completely running out of time, Mr. Srinivasan, for joining us on the show. So that was the management of Quess Corp, talking to us in terms of what's expected. And I think, Puneet, the last answer is something which actually would make the investors' day. From a 2.9 to a higher teens number is really strong.
Well, definitely. And I think those key aspects which we gave a thumbs down on, those did get addressed in this conversation.
So I think that's something we should be revisiting soon, but completely out of time. With that, it's a wrap on this edition of Know Your Company. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tech has changed. So should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or all of these other things?
No, as a child, I enjoyed playing tennis. So I always thought that, okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
Biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy business?
I think the biggest advantage is long-term thinking. A negative, sometimes the perception of family businesses from the outside can be one where it lacks professionalism.
The next generation in a family business is the most important generation for the future of that business.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Nifty and Sensex recover from early losses after opening lower, while mid-cap and small-cap stocks continue to face selling pressure. And speaking to Fox News, US Treasury Secretary Scott Bessent described the US-India relationship as complicated but expressed confidence that ultimately both nations will come together. Turbulence hits Indigo as shares tumble up to 4% following a block deal. Sources tell NDTV Profit that Rakesh Gangwal's family is divesting a 3.1% equity stake and are the likely sellers. Two-wheeler companies meanwhile accelerate growth as GST rates are expected to drop from 28% to 18%, prompting Jefferies to raise the target price for all four listed two-wheeler manufacturers. And a boost coming in for textile stocks as the government extends import duty exemption on cotton till December 31st. KPR Mills, Gokuldas Exports, Trident, other textile stocks as well recover. Good afternoon. You're watching Markets at 12 with me, Shreyansi Singh. First things first, let's take a look at what the markets are doing at this point in time, especially when you take a look at the sectoral picture. It is not at all looking pretty. Quickly taking a look at the Nifty as well, as you can see, of course, holding on to losses at this point in time. And when you take a look at the list of sectors as well, it's largely just metal that is holding on to a tinge of green. And you do have IT, realty, pharma, bank, finance, PSU bank, and even FMCG. Those are your top sectoral losers, exactly in that order. So that's something that you're looking at in terms of sectors. But quickly taking a look at the list of losers as well, it's Indigo that's down 5.5%. So a 5.5% knock coming in on the back of that deal as well, that block deal that we told you about, RBL Bank as well, eClerk Services, some of your other losers as well. And when you take a look at the losers from within the Nifty 50 pack as well, there's a Shriram Finance that makes it to that list, down about 3%, HCL Tech, Infosys. The IT sector is not doing too well, so losses between 1.5% to 2% coming in on both of those counters. Sun Pharma, Tata Motors, TCS, Power Grid, some of your other losers as well. Quickly taking a look at what's holding up resilient, that's Hero MotoCorp for you, Adani Enterprises, Asian Paints, and Titan Company are some of your other counters that are quite resilient at this point in time. But those are some of your pockets of resilience. Largely not a good day for markets. Down but not out is the kind of verdict that you have, at least as far as Nifty then is concerned. But tell you what, let's quickly take a look at some important updates coming in. US President Donald Trump's unilateral 50% tariff on Indian goods is the one that came into effect yesterday. However, you do have sources telling your channel that New Delhi is hopeful that the US would review the 25% punitive levy when it comes to India's oil purchases from Moscow, which they called unjustified. In fact, we have Rishabh joining in with all of those important details. Rishabh, over to you.
A bunch of interesting updates coming in from sources. What we're picking up is the fact that there is a certain amount of hope that there will be a review of these additional 25% tariffs that have come in exchange of India's purchases of Russian oil and defense equipment. What we're also seeing is the fact that India and the US, they both remain in contact. The fact is that the relationship between India and the US is broader than just trade. It's not limited to just trade. It is more about defense, energy, people-to-people partnerships, the kind of people exchange that the US and India have. With that sort of a level of engagement, there is a constant relationship that is being maintained, and that is not just at a trade level. What we're seeing also is the fact that India's red lines continue to remain on agriculture as well as dairy. There's no sort of change in offer in terms of what India has been offering. The offer remains the same, and India has not budged from those red lines. What we're also picking up is the fact that in an effort to support exporters as well, the Commerce Ministry is set to hold a bunch of meetings over the next couple of days or 3 days. This will be focused on the sectors that tend to get most affected due to these tariffs, including apparel, textiles, shrimp, carpets, furniture, chemicals. All of these continue to remain the most affected sectors. And what we're also picking up is the fact that there will be a dedicated outreach program with regards to these sectors, and with regards to about 40 countries of focus that will be the next leg of export growth. So India is focusing on domestic reforms as well, as you can see with the GST rate rationalization, some sort of a reform agenda also happening. Plus, there's an external push as well to make India less dependent purely on US as an export market, but to also focus on those 40 countries that include Germany, Italy, Spain, Poland, Canada, Belgium, Turkey. So all of that coming in from sources on India's trade scenario currently.
No, well, absolutely, Rishabh, and even the market is taking cues from there because you do have Nifty hovering around those 24,600 levels at this point in time, and you do have that tariff jitter that we've had as far as the market is also concerned. But tell you what, let's also get to the impact as far as the sectors are concerned, the stocks are concerned, as Trump's 50% tariffs on Indian goods come into focus today. Some analysts, in fact, believe that this move can lower India's GDP growth as well by 70 to 80 basis points. And let's quickly take a look at some of the sectors that are going to get impacted. In fact, Somit is standing by with that analysis.
Well, yes, if you look at India, US is one of the largest trading partner for India. Around in FY25, we exported goods worth around $86.5 billion to the US market, which is nearly 2.2% of the GDP. But we also need to remember that not entire of this export come under the 50% tariff. Just 67% of India's export to US come under this 50% tariff, which comes to around, the number comes to around $58 billion, which is around 1.5% of the GDP. The remaining of the goods come under Section 232, and some analysts believe that this 50% tariff could lower the GDP growth by around 70 to 80 basis points going forward. Some goods that not come under this category or are exempted from the 50% tariff or the additional 25% tariff are auto and auto parts, iron, aluminium, steel, copper and its products, pharma, and when it comes to electronics, the goods that are exempted from the additional tariff is chips, mobile, tablets and PCB. So let's now look at the sectors that could get impacted because of this. Firstly, auto and auto ancillary companies have a high exposure towards the US market. For Sona BLW, nearly 40% of the revenue came in from the US market in FY24, followed by RK Forging, Bharat Forge and Tata Motors, which had around 23 to 25% of the top line coming in. For Samvardhana Motherson, 18%, for Balkrishna Industries, 18%, for Sansera Engineering and Apollo Tyres, around 3 to 9% of the top line came in from the US market. But again, do remember that these companies have plants in other countries and other nations as well, and they could shift this supply which has been going from India to those countries, and the impact could be lower for the actual impact could be lower for these companies. For UPL, for chemical companies, it's UPL which has the highest exposure, around 25% comes in from the US market, SRF 20%, Jubilant and Grevia 9%, but these are the companies that have actually mentioned their US exposure. But apart from that, there are a host of companies that export to US market like Aarti Industries, PI Industries, Atul, Navin Fluorine, Deepak Fertilizer, Vinati Organics, Alkyl Amines and Gujarat Fluoro. All of these companies have some or the other way exposure to the US market. When it comes to the textile sector, that is a sector that could get impacted the most because US accounts for nearly 28% of India's textile exports. And the companies that have the highest exposure here, firstly, it's Welspun Living, nearly 63% of the top line comes in from the US market. Trident gets around 38%. KPR Mill gets around 19%. Apart from that, it's Himmat Singha, which gets around 83% of its revenue from the US market, while Alok Industries and Arvind getting close to 37 to 45% of the top line. Then there are seafood exporters, shrimp exporters and shrimp feed exporters. Avanti Feeds gets around 14% of its revenue from the US market. Apex Frozen Food and Waterbase get around 40 to 60% of the top line from the US market. When it comes to consumer goods, not many companies, some rice exporters have some exposure. LT Foods, 39% top line comes in from US. KRBL and Tata Consumer get around 10 to 12% of the revenue from the US market. When it comes to the energy space, no impact on energy producers, but some impact that we could see on the solar PV module manufacturers because Vari Energies here has nearly 57% of the order book coming in from the US market. Premier Energies, on the other hand, just has 1% of the order book coming in from the US market, but they had plans to go big or expand in the US market, so that could get impacted for the company. When it comes to the oil and gas space, no direct impact, but if India goes ahead and reduces their crude sourcing from Russia, that could increase the crude cost for the oil marketing companies and Reliance as well. Currently, they are getting a discount of $1.5 to $2 per barrel, so that could go away and increase the crude cost for Reliance Industries and OMC. And on the EBITDA front, if you see the impact for Reliance Industries could be around 3% and for oil marketing companies, the impact could be as high as 10%. But these are the companies that or sectors that get impacted. But on the flip side, there are multiple other companies or sectors that stand to not get impacted because of this Trump tariff. IT services, FMCG, telecom, real estate, all these three sectors have more than 90% of the revenue coming in from the domestic market. Apart from that, banks, insurance, power, steel and capital goods, most of these sectors have nearly 90 to 95% of the revenue coming in from the domestic market and are kind of Trump-proof sectors at this moment.
All right, and that's the entire list of Trump-proof sectors as well. Thank you so much, Samit, for helping us with that entire detailed analysis, and it's a detailed one at that. But let's move on. Let's get you the word coming in from the managements of RK Forgings as well as Pearl Global, who talked to us about how India Inc. is managing the impact of the 50% tariffs. Let's go across and listen in.
We don't see any uncertainty in terms of new order book or new order wins or new RFQ getting floated. Right now, the demand per se is on the lower side. And I think because of this uncertainty, the overall demand in the US economy is down in terms of passenger vehicles or trucks. The overall demand being down, that's the reason we are seeing less offtake. Otherwise, in terms of pulling out business or shifting business, we don't hear or see any incremental news coming out of US for us. Or I think I can say for entire automotive segment, I don't think there is an alternative to India in terms of the auto component sector.
Timing of the tariff has come in such a point of time that this new order booking is definitely under pressure. The retailers and the brands of US who buys from US, almost $6 billion of apparel is going out of India. So they cannot absorb this extra 25% of tariff. In fact, if you look at it from the competing countries like Bangladesh, Indonesia, Vietnam, and all the other countries who manufacture apparels, India is at 50. So that makes a gap of almost 30%. And the penalty that we're talking about out here on top of our existing 25 is another 25. So both ways, if you look at it, India is not competitive by approximately 25 to 30% additional tariff. Now, if this is the impact which the retailers and the brands cannot absorb, so they are putting two conditions on the apparel manufacturers of India. Either to absorb this tariff, that means like we reduce our selling price by almost about 16% to avoid this 25% tariff. If you do the maths, like whatever we are shipping out at a lower price by 16%, after tariff would be same if this 25% tariff was not there. So they want that kind of price reduction, or they are pushing us, like for example, Pearl Global, the company that I'm representing, is we have manufacturing across the globe. We have in Bangladesh, Vietnam, Indonesia, and Guatemala, as well as India. So for a company like us, they're pushing us to shift the US manufacturing to other countries. Or if we're doing it out of India, then we somehow absorb this tariff burden.
All right, then there you go. That's the take coming in as far as some of those auto, ancillary, as well as textile players then are concerned. But let's also zoom in on the gems and jewelry space, because that is where you have a very important impact of the 50% tariffs, because you do have gems and jewelry industry that is valued at around $10 billion, holds about 40% of share of the US market. So US continues to be the largest market. And that's very important to note here, because US in fact represents almost 1/3 of the sector's annual shipments. So you're talking about $28.5 billion in terms of the annual shipments. And in fact, to decode the impact of gems and jewelry, the tariffs on gems and jewelry, we do have Nitin Panwad, who's the Group CFO of Web Global, joining us on the show today. Thank you so much for taking time out. And a very good afternoon to you, sir. First things first, I've got to ask you about US continuing to be the largest market for gems and jewelry. What kind of impact then are you penciling in when it comes to the tariffs?
Yeah. Thanks for having me. I think tariff certainly added some pressure in the, I would say on a near time, where the duties increased to additional duty to 50%. So overall, it is slightly higher compared to what earlier years and earlier quarters we are seeing the duty. So definitely is some pressure. The category we operate, especially jewelry, we operate, and roughly 65% of our business comes through US. On around that, 35% is sourced through India. So there's a huge amount of import in our US business is impacted. But having said that we have 30 different countries of sourcing across the world in other Asian parts. And I think and we are also exploring the options to where we can get a better cost, not only in terms of pricing and operational efficiency, but also better in terms of the duty where we can source. But definitely it is more evolving kind of scenario. Not everybody is sure about it, that how it will shape out in future. But we are keep on or aggressively working on the solutions we have out there available, and try to source in a different countries. But the good thing is that we anticipated the fact already, and around 130 and 140 days of inventory already built up in US, so we can avoid such kind of short-term uncertainties what we are seeing right now.
Absolutely, point taken, sir. So quick thinking on your part as well in terms of that anticipation coming in when it comes to the impact of tariffs. But quickly, I also wanted to get a sense of whether or not you think this is going to be near term. So in terms of the impact that you're penciling in when it comes to tariffs, are you only looking at a near-term impact, or is there a longer-term impact, a ripple effect, if you will, that you estimate when it comes to the tariff situation?
It's very, very uncertain situation right now with how the other country faced with the US recent administration. But our business model is more not only dependent on a single country, and it's leading to explore different options. We have our sourcing and manufacturing in other Asian countries. And if price persists higher, then definitely we have to explore the different countries to get a better in terms of pricing competitiveness to the end consumers.
Point taken, sir. So you've talked about exploring other options. You're looking at that. You're looking at other buyers as well. Except this, how are you planning to tackle the impact? Is there anything else that you have incorporated in your game plan or aspire to in order to navigate the after effects when it comes to this?
So as I said, that it's more evolving. Kind of one other thing, if we're trying and suddenly the other thing coming that it is possible not. But I would say that we cannot say much about it right now, but it's more an evolving scenario. Maybe in some months we have some kind of clarity how the duty and export from India will shape up to get a better in terms of better pricing with a better landed cost.
Well, absolutely, sir. That makes the two of us, because it's everybody that's just sort of trying to navigate all of these uncertainties that are looming large. But quickly, I also wanted to get your take as far as your manufacturing and digital capabilities are concerned. Is there anything that you have in mind in terms of your expansion plans when it comes to your digital capabilities?
Yeah, so digital is one of the high growth sector. And we are seeing much higher growth from digital in last 5 years. Share increased to 23% to 43% right now, and expecting over 50% in next couple of years. So it's growing much faster. But in terms of the navigating the current tariff and the growth possibilities with the recent UK FTA and the ongoing maybe a European FTA, will get a much better avenues for us to explore more markets in European and UK scenario. But digital is one of the factor where we are driving higher growth, and we are seeing it will continue to grow further along with our European and UK expansion.
Other than that, some color as far as your expansion plans then are concerned. But before we let you go, sir, I quickly wanted to get a sense on what your revenue growth guidance looks like. And is there an impact that you're penciling in terms of that revenue growth guidance? Of course, there's a lot of uncertainty, and that we've talked about. But in terms of your revenue growth guidance, before we let you go, what is it? And is there any change that you're penciling in?
Sure, yeah. So considering the current uncertain environment, we modified our guidance in past quarter around 7 to 9%, which is more in a conservative kind of scenario, which how the consumer confidence will shape up after the actual US consumer will see the impact of higher tariffs. So it's more of uncertain scenario, but 7 to 9%, we are pretty confident about the guidance we have. As around 65% revenue comes from US, but so far we haven't seen a major impact. We're still growing in US market. Apart from the new expansions and acquisitions we have in our UK market, it's growing much better compared to the previous quarters. So pretty confident about the guidance that we have, 7 to 9% for this year, and for the next year onwards, we are very much confident for the mid-teen kind of revenue growth onwards.
All right, and thank you so much for taking time out and joining us this afternoon to help us understand what that really looks like. A little bit of a paucity of time, but thank you so much for taking time out and giving us a sense as far as your growth roadmap then is concerned. But tell you what, 50% US tariffs on India goods come into effect, and over the next few months, this will of course have a cascading effect on the gems and jewelry industry that we just talked about, which is now in danger of losing some of its sheen. In fact, we do have Harsha from NDTV, who was at the Jaipur Gems and Jewelry Hub and takes us through the issues at Ground Zero. Take a look.
Gems and jewelry is the highest revenue earner for Rajasthan in terms of foreign exchange, much more than tourism. In fact, 18,000 crores are the estimates that the gems and jewelry business earns in Jaipur. And of that, about 3,200 crores is the US market, which is about 20% of the total export. I have with me Alok ji, who is the president of the Jaipur Jewelers Association. Alok ji, क्या लगता है आपको, what is going to be the fallout? अगर इस तरह से, if the tariffs have already come in, they've already kicked in, so now how is it going to impact the business? I mean, it's the biggest foreign exchange earner for Rajasthan.
It's a major disruption that we are going to see now, and the effect is, as we see today, if things are not sorted out in the near future, there'll be a lot of pain, and that includes the businessmen, small, medium, large, doesn't matter, even, and the artisans. Once this cascading effect goes down and people start leaving this industry, then it will be very difficult to just gather them back together.
Alok ji, आपका जो business है, how much of it is driven by America actually? कितना percentage? और किस type का जाता है? आपने बताया कि finished jewelry भी जाती है, and there's some loose gemstones.
Yes. So we are majorly into jewelry exports, studded jewelry exports, and about, thankfully, we are not so much into American market, but still about 10 to 15% of our exports are to America. So that is what we are seeing. The season is coming, but what we are seeing is this will be zero this year.
Also, this segment employs at least 2 to 3 lakh labor in Jaipur alone, and they're going to be severely impacted. In fact, a lot of the labor who work here are from outside Rajasthan. आपका नाम क्या है? हाँ,
सेतवान.
हाँ, कहाँ से हैं आप?
यूपी.
हाँ, तो जो जैसे ये बात हो रही है कि भाई अमेरिका ऑर्डर देना कम कर देगा, तो फिर डायरेक्टली प्रोडक्शन हाउस में ऑर्डर कम होएगा, तो फिर तो कारीगर पे तो इम्पैक्ट आएगा ही ना?
आएगा.
हाँ हाँ. क्या चिंता है?
चिंता है घर परिवार अपना हम कैसे चलाएंगे. इसी से कमाते हैं तो अपना खर्चा चलता है.
I have with me Sudhir Kasliwal. The Gem Palace is one of the oldest shops in Jaipur. But Sudhir ji, with the kind of tariffs that we are seeing, the new administration, Trump administration, you also had made inroads into the export market. You were also sending jewelry abroad. You were not just doing traditional jewelry. How badly has that been hit?
You see, almost 60 to 70% of our export orders have been kept on hold lately after the Trump tariff announcement.
What are your customers saying about that? I mean, they must be with you on email. What is the concern?
The concern is increase in cost because they are wholesalers and they are also going to sell it to their customers, and they must have quoted a price. We have also quoted a price. So the price hike definitely will affect their sales also, and our sales are being affected for sure.
So 60 to 70% of export orders is a huge hit for any business to take. Also, you know, Jaipur is also a thriving tourist industry. And a lot of tourists who come here also come shopping. They come to buy gems and jewelry. In fact, it's always on the shopping list of every tourist who comes in, especially the upmarket tourist. So will they also be affected? Do you think domestic sales to tourists, foreign tourists will also be affected?
See, our sales are mainly to foreign tourists, and out of all the domestic, the foreign travelers coming to Jaipur, our sales are almost 70 to 80% to American tourists. They are our big buyers. Now that is also going to be affected because that we'll see in the coming season, because now it's not a tourist season, but it's definitely going to affect our business.
So that's how the cascading effect of the Trump tariffs will slowly be visible in the Indian market. But for now, the Trump tariffs have sent tremors down Jaipur's jewelry business, and it's threatening to take the sheen out of what was once a glittering business for both import and export.
So there you go, gems and jewelry, once a sparkling business, losing some of that sparkle on account of tariffs. But that's all the time that we have on the show. Thank you so much for tuning in.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tech has changed. So should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or all of these other things?
No, as a child, I enjoyed playing tennis. So I always thought that, okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
The biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy business?
I think the biggest advantage is long-term thinking. A negative, sometimes the perception of family businesses from the outside can be one where it lacks professionalism.
The next generation in a family business is the most important generation for the future of that business.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or all of these other things?
Hi, welcome. Thanks so much for joining in. You're watching Profit Buzzers on NDTV Profit, and my name is Alex Matthew. It's a bit of a tepid day for the Indian equity markets, and this is really par for the course. We were anticipating that this would happen amidst this entire tariff conversation between the US and India. Of course, you know by now that those higher tariffs, 25%, have come into force as of 9:30 a.m. yesterday. And this is having a bit of a bearing on a few sectors, export-oriented sectors, but more than anything else, it seems to have impacted sentiment just a tad bit because, of course, if these tariffs continue, there's anticipated to be a bit of an impact on the Indian economy. A lot of market participants anticipating that this will roll back over the course of the next 1 to 2 months. We'll have to see how that plays out. But of course, at the same time, the government is focusing on the domestic and it's focusing on bolstering economic growth. If you're talking about the GST, if you're talking about monetary policy, and if you're talking about the aid that is likely going to go to some of these affected sectors, all of that is playing out simultaneously. But we are at the start today focusing on those tariffs. Let's take a look at where the markets are. And I'll delve into a little bit of this before we go to our guest for the day. You have declines of about 0.5%, but there's quite a bit of chop and churn. It has moved from the low point of the day for the benchmark and indeed for the broader markets as well. So pull up the mid-cap index and the small-cap index. Those have moved off the low point of the day, 0.6% lower for the mid-cap index. And if anything, better for the small-cap index. The recovery has been pretty sharp if you can look at that from the charts. In fact, close to 1% or so, 0.9% for the small-cap index off the low point of the day. And if we pull up the market breadth, you will see that the gap has narrowed between the advances and declines through the session because it's widening just a tad bit heading into the last hours of trade. Individually, in a couple of sectors, you can make the argument that foreign institutional selling seems to be visible in trade today because the sectors that are seeing quite a bit of selling, Nifty IT, the worst performer in trade today, 1.3% or thereabouts. And you have banking as a pack that is off the low point of the day, but it's still trading with cuts of about 0.6%. I'm talking about the Nifty bank here, but financials as a whole have been a little bit weak. Now, let's talk about these tariffs just a bit because on the one hand, you have those higher tariffs coming through, but government sources are telling NDTV Profit that New Delhi is hopeful that the US will review the 25% punitive levy for India's oil purchases from Russia, which is being called unjustified, not just by the Indian government, but by several sources, particularly because the US continues to buy heavy metals from Russia. Europe continues to purchase goods from Russia. My colleague Shrimi, who picked up those source-based information, is joining me on the phone line. Shrimi, hi. Thanks so much for joining us this afternoon. What can you tell us about what you're picking up?
Hi. So, this rising concern over this tariff imposed by US on a range of Indian goods starting August 27th, of course. What sources have confirmed us that communication lines between India and US remains open in an effort to resolve the ongoing trade discord. And in fact, they are describing the current phase as part of very complicated relationship, maintaining that this is a kind of temporary situation in a broader context of a long-standing and strategic partnership between the two nations, that is India and the US. And channels of communications are open. This is, they are saying that it's a part of the long-term relationship. And in fact, they are urging exporter at this point to not panic over the ongoing developments and reassuring that while the new tariffs are significant, the impact is unlikely to be as severe as projected. And this is also given the fact that we have diversified nature of Indian export and only a few sectors have been directly affected. And efforts are underway to safeguard their interests. And the sources in the government in the policy corridor emphasizing the fact that India continues to evaluate the situation closely and is exploring all sort of channels, including the diplomatic channel and trade avenues to ease tension. And on the broader trade agenda as well, sources do underline at this point that India is in progress on the, several bilateral trade agreements with other countries as well. And as far as India and US are concerned, that will be shaped by how both sides handle each other's sensitivities and the red lines in the coming weeks. So far, in a nutshell, Indian government remains confident that a balanced and constructive dialogue will help both nations navigate this current tariff challenge without, derailing the long-term trajectory of their economic relationship.
Well put. Thanks so much, Rimi, for getting us that update. And so therefore, that's the long and short of it. But there are stocks that we should focus on, and that's what we will effectively do on Profit Buzzers. We'll talk about the stocks that are buzzing in trade, either on the upside or on the downside, and we'll get you a fundamental view and a technical view later on in the show as well. But let me introduce Nirav Asher to you. He's joining us at this moment. He's head of equity research at Latin Manhalal Securities. Nirav, it's always a pleasure speaking with you. So what we're seeing today, of course, is a bit of a down day, but we're off the low point of the day, which indicates that there is buying at lower levels. If you were to look at the market texture today, are you finding any opportunities that you would nibble in, that you would buy in?
Good afternoon, Alex, and thank you for the invite. I think at the beginning of the day, there was the market reaction was a bit jittery, and we saw initial reaction, very nervous kind of a reaction. But I think markets have been quick to bounce back, and I think the focus of the market is fair and square on selective stocks, selective sectors, selective stocks. And those stocks which are likely to do well or likely to get affected in the medium term. If one were to look at those sectors or stocks which are likely to do well, we have hope which is coming from the GST rationalization. There are a lot of expectations which are there from the GST rationalization process which is there in the works. And there I think we have prominently the auto sector, the FMCG sector, the consumer durables, the overall consumption theme, QSR, etc. Stocks which have done quite well. On and off we tend to see sector rotation happening in these sectors, and these sectors performing well, stocks performing well over there. On the flip side, I think we've seen sectors like textiles or apparels, gems and jewelry, chemicals, pharma to a certain extent likely to be impacted in an adverse way by the Trump tariffs. And I think that too has been negated to some extent because the government has, in the case of textiles, it has extended the import duty exemption on cotton for another 3 months till December 31st. So we've seen stocks like Vardhaman Textiles do well over there. The third category, I think, is the safety corridor, which are the best places to hide at this point of time. So I think we have hospital-related stocks or insurance-related stocks, which could be absolutely immune from the developments which are taking place on the global front. And I think the fourth category is the new age businesses, which have started giving some good results. So we've seen in the last quarter, Ola Electric or Ather Energy or Honasa, which have been doing quite well. So there are pockets of strength in the market.
Yes, we'll focus on some of these. They are, in fact, buzzing in trade, not least of which Ola Electric, close to the high point of the day, up over 8%. But let's focus in on what a few big brokerages are also saying about these tariffs. And JP Morgan has weighed in. They've released a note and they've talked about the impact of those tariffs. Puneet is here to tell you more about that. Puneet?
I think the first key aspect is that the 2.4% tariffs were impacting India before the Trump administration took in, but that has substantially increased now to 52.4 with the additional 25% tariffs that we've been speaking about. JP Morgan is highlighting that there are some key sectors that is key to India as well as its exports. These do include pharmaceuticals, fuels, as well as something like critical minerals, which are currently exempt. Now, this additional 25% will get impacted now. We are seeing that the 25% tariffs on auto as well as auto ancillary parts was something that were impacted in the first round of 25% tariffs. This also had 50% tariffs on steel as well as aluminum imports into the US from countries such as India. With this, as well as the additional and the different tariff amongst sectors, JP Morgan's estimate is that the new tariffs across the board would be roughly around 34% for India, and that is going to be the level of conversation that we have now across the full impact of India, but with sectors having a differential impact. That's what JP Morgan is saying currently.
All right, thanks so much, Puneet, for that. It's important to note that that's as things stand. Of course, if this 25% is rolled back, the picture would change dramatically. But we also spoke with other people over the course of the day. In fact, we spoke with Amish Shah of BofA Securities and with Anup Wadhawan, who is the former Commerce and Trade Secretary, and here's what they had to say about the tariffs.
Absolutely, tariffs is one of the factors that can drive sensitivity for markets, both in terms of earnings and valuations. So I would argue that, look, markets are currently trading at around +1 standard deviation, around 21.5 times. 50% tariff, currently nobody expects to continue. Most of the market participants believe that this is a matter of time. We would probably over time revert to 20 to 25% tariffs, and that's what markets are pricing in. But clearly, if 50% stays for longer, then we could have the 11% downside case that we are arguing for right now. So basis the conversations with investors, I think everyone's expecting this issue to get resolved within a month or two. But anything beyond that, I think markets will start to price it in negatively.
As far as India's options are concerned, we have to take pointed measures, firstly, to protect the sectors that are most affected. The overall impact, is not going to be too much. Our exports to the US are about $90 billion. Roughly 45 to 50% are free from tariffs. And the balance also, there'll be varied sort of situations across sectors as to what is the impact, what is the capacity to bear those tariffs. So pointedly, I think government will have to identify the pain and the injury caused to specific segments of our export community and, address their sort of hardship. And I think measures are being discussed, measures like easing export credit, measures like maybe rescheduling some of their loans, and perhaps even, measures like the MEIS, which we had earlier, which was a subsidy of sorts, an incentive for exports. Something of that sort can also be on the card. So that has to be our immediate effort. And in the medium to long term, some other adjustments will happen. The US is a huge importer, and our exports to the US in those sectors are fairly huge. It won't be easy for them to replace that supply.
All right. Well, so that's the long and short of it. But let's talk about the individual stocks and sectors that are in focus. Some analysts believe that this move can lower India's GDP growth as well. Of course, some part of that is being mitigated by all of the efforts on the domestic front, not least of which through the reforms in the GST as what is planned over the course of the next couple of months, and hopefully something that can be implemented before the start of the festive season. Somit joining in with some of those details. Somit?
Well, yes, if you look at India, US is one of the largest trading partner for India. Around in FY25, we exported goods worth around $86.5 billion to the US market, which is nearly 2.2% of the GDP. But we also need to remember that not entire of this export come under the 50% tariff. Just 67% of India's export to US come under this 50% tariff, which comes to around $58 billion, which is around 1.5% of the GDP. The remaining of the goods come under Section 232, and some analysts believe that this 50% tariff could lower the GDP growth by around 70 to 80 basis points going forward. Some goods that not come under this category or are exempted from the 50% tariff or the additional 25% tariff are auto and auto parts, iron, aluminium, steel, copper and its products, pharma, and when it comes to electronics, the goods that are exempted from the additional tariff is chips, mobile, tablets and PCB. So let's now look at the sectors that could get impacted because of this. Firstly, auto and auto ancillary companies have a high exposure towards the US market. For Sona BLW, nearly 40% of the revenue came in from the US market in FY24, followed by RK Forging, Bharat Forge and Tata Motors, which had around 23 to 25% of the top line coming in. For Samvardhana Motherson, 18%, for Balkrishna Industries, 18%, for Sansera Engineering and Apollo Tyres, around 3 to 9% of the top line came in from the US market. But again, do remember that these companies have plants in other countries and other nations as well, and they could shift this supply which has been going from India to those countries, and the impact could be lower for the actual impact could be lower for these companies. For UPL, for chemical companies, it's UPL which has the highest exposure, around 22% 25% comes in from the US market, SRF 20%, Jubilant Ingrevia 9%. But these are the companies that have actually mentioned their US exposure. But apart from that, there are a host of companies that export to US market like Aarti Industries, PI Industries, Atul, Navin Florin, Deepak Fertilizer, Vinati Organics, Alkyl Amines and Gujarat Fluoro. All of these companies have some or the other way exposure to the US market. When it comes to the textile sector, that is the sector that could get impacted the most because US accounts for nearly 28% of India's textile exports. And the companies that have the highest exposure here, firstly, it's Welspun Living, nearly 63% of the top line comes in from the US market. Trident gets around 38%. KPR Mill gets around 19%. Apart from that, it's Himmat Singha, which gets around 83% of its revenue from the US market, while Alok Industries and Arvind getting close to 37 to 45% of the top line. Then there are seafood exporters, shrimp exporters and shrimp feed exporters. Avanti Feeds gets around 14% of its revenue from the US market. Apex Frozen Food and Waterbase get around 40 to 60% of the top line from the US market. When it comes to consumer goods, not many companies, some rice exporters have some exposure. LT Foods, 39% top line comes in from US. KRBL and Tata Consumer get around 10 to 12% of the revenue from the US market. When it comes to the energy space, no impact on energy producers, but some impact that we could see on the solar PV module manufacturers because Vari Energies here has nearly 57% of the order book coming in from the US market. Premier Energies, on the other hand, just has 1% of the order book coming in from the US market, but they had plans to go big or expand in the US market, so that could get impacted for the company. When it comes to the oil and gas space, no direct impact, but if India goes ahead and reduces their crude sourcing from Russia, that could increase the crude cost for the oil marketing companies and Reliance as well. Currently, they are getting a discount of $1.5 to $2 per barrel, so that could go away and increase the crude cost for Reliance Industries and OMC. And on the EBITDA front, if you see the impact for Reliance Industries could be around 3% and for oil marketing companies, the impact could be as high as 10%. But these are the companies that or sectors that get impacted. But on the flip side, there are multiple other companies or sectors that stand to not get impacted because of this Trump tariff. IT services, FMCG, telecom, real estate, all these three sectors have more than 90% of the revenue coming in from the domestic market. Apart from that, banks, insurance, power, steel and capital goods, most of these sectors have nearly 90 to 95% of the revenue coming in from the domestic market and are kind of Trump-proof sectors at this moment.
Trump-proof sectors. Trump-proof sectors is what Somit is talking about. Sam, thanks so much, Somit, for getting us those details. Now, Nirav, you did mention some of this when you spoke about the area of safety, right? And you mentioned a few of these sectors as well. But I'm curious about one particular stock that Somit was talking about, and that's Reliance Industries. You saw it bounce off the low point of the day today. And that is lending a little bit of support to the benchmark Nifty 50. But it's also in the news because it's got its AGM tomorrow. What's the view on the stock specifically? Because it's had fits and starts through the year. It's yet to make a dramatic move up. And one can even make the argument that it's languishing a bit.
Well, I think Reliance Industries has been under pressure in the recent past. That is on account of the fact that there has been talk that Reliance Industries has benefited out of these discounts which have been given by the Russian oil majors, and of course they did pocket about half of the gains from this windfall. So I think this can be argued as a business case also. So this is one of the factors. Secondly, I think now there is always a buzz in the market that there is going to be some big bang announcement ahead of the AGM, and generally this does not turn out to be true. But the market is expecting that there will be some mention about the Jio platform's proposed listing. We've seen the base case tariff being revised by Reliance Industries Jio. And I think this is likely to boost the performance of Jio platforms further. And I think the consumer-facing businesses continue to do quite well as far as Reliance Industries is concerned. Both telecom and the retail side of the businesses continue to do well. It's the O2C, that is oil to chemicals business, which has been under pressure because the atmosphere has been quite volatile at this point of time. But nonetheless, as far as oil exploration is concerned, that is oil production and E&P, what we call, Reliance has booked some rigs in the near future, with a medium-term horizon. So I think it is going to increase its intensity as far as exploration and production is concerned. So I think can expect some developments in the oil and gas space as far as Reliance Industries is concerned in the near future. As far as the residue businesses are concerned, I think the cash flow continues to be pretty strong from quarter to quarter. And I think that's the way it should be going forward.
Yeah. So, but then ultimately, is it a buy at these levels in your opinion?
Yes, it's a buy.
Okay, it's a buy at these levels. All right, let's talk about a pack that is in focus. And Nirav did mention that he's looking at the automotive pack closely. And indeed, some of these two-wheeler names are doing particularly well. Hero MotoCorp, for one, is the top gainer, or one of the top gainers on the benchmark Nifty 50. You have TVS. Let's pull up the entire list, actually. TVS is at, okay, actually, it's come off the high point of the day. It's trading just about flat. Let's see what Bajaj is. Okay, there you go. So Hero MotoCorp, Eicher doing reasonably well, Bajaj Auto about 0.33%. So the entire pack of two-wheelers was actually buzzing, and let's find out why that is. Hero also buzzing on account of a Jeffries upgrade. Puneet is joining in to tell you more about that. Puneet?
Well, it's a long-term revival essentially of the two-wheeler space, and that seems to be in the lower end, in the entry-level motorcycles, especially because of this GST rate reduction. Now from 28 to 18 is where it will go. And just looking at some numbers, prices between currently hover between 85 to 95,000 per vehicle. Because of this GST rate reduction, we could see a 7 to 8% price reduction according to Nomura on all of these models. And one of the biggest beneficiaries will be Hero MotoCorp, because 80% of all their motorcycles are under the 100cc or at 100cc space. So that is going to be a big fillip for this stock, and hence we've seen that huge recovery essentially from hovering around 3,600 rupees per share. It has seen a huge jump up over the last month and a half. So that's one of the key positives. The other one, Jeffries, they've come out with a note today hiking target price across the board for all the 4 two-wheeler companies, and Hero being the biggest. They've upgraded to a hold from an underperform. Target price has now gone up to essentially 5,200 from 3,800 rupees per share, and that is essentially from this GST rate reduction is what they're mentioning. Someone like TVS is also you've seen a hike to 4,200 from 3,500, and Bajaj Auto as well from 8,000 to 9,000 as well. So that's one of the key positives, this GST rate reduction, and the valuation differential as well. Before this whole GST rate reduction, Hero was trading at 50% discount or 50% lesser than TVS Motors in terms of valuation, and that seems to be catching up now. So all these positive factors contributing to the move of all these two-wheeler makers.
Right, thanks so much, Puneet, for that. So therefore, Nirav, the question is, ahead of this, the reform in the GST space, the expectation, as Puneet just pointed out, is that the lower end of the spectrum will benefit. The lower CC motorcycles, that's where the price impact will be the most felt. And so would you shift your perspective on the two-wheeler space with that lens? And what would you buy?
Well, we would like to look at both Hero MotoCorp and Eicher Motors. I think Hero MotoCorp has had a great start to this financial year. They did mention that they were very bullish as far as the festival season is concerned and the wedding season demand. That was one point. The second point is they have a good exposure to the overseas markets also. So the Latin American markets have been doing quite well as far as the Indian two-wheeler makers are concerned. The third important point is that the rural economy has been recovering very fast, and that tends to aid Hero MotoCorp. There are green shoots of recovery as far as the urban markets are concerned. Hero MotoCorp is also looking at premium end of the segment, and they seem to be doing pretty well over there also. There is the launch of the electric vehicle also. So I think they are getting positive signals as far as all the segments are concerned. So on the top of this, I think as far as Hero MotoCorp is concerned, we also have valuation comfort. So I think Hero MotoCorp remains a prime pick. At the same time, we have TVS, which is looking quite expensive, despite the fact that it continues to grow at very, very impressive levels. We have Bajaj Auto, which has been struggling despite the fact that it's a very cash-rich company and it's been doing generally well. But I think the stock has been under pressure. It has a lot of exposure to the export markets. And the fourth is, of course, Eicher Motors, which we like very much because of the premiumization element and its strong performance in the overseas markets.
All right, so that's the two-wheeler pack for you, and that's what Nirav likes, and what he's perhaps saying that you can go out and buy. But Interglobe Aviation, it's a stock that is in focus on account of block deals. Of course, the promoter family selling stake. This is the Gangwal Group, another tranche of shares that have been offloaded, and the stock is down about 5%, close to the low point of the day. Somit joining in to tell you about the key details of that deal. Somit?
Well, yes, Indigo as a stock is under pressure, and this is because of the block deal that has happened in trade, where the Gangwal Group has sold some of its stake. Now, as per the term sheet, they were supposed to sell close to 3.1% of the equity, that is close to 12.1 million shares. The offer size was close to 7,028 odd crore rupees, and the shares were offered at a price of around 5,800 rupees per share, which was at a discount of 4% compared to Tuesday's closing price. Now, post this, the Gangwal Group will be left with around 4.8% stake, and there's a lock-in period of around 150 days to sell this additional remaining shares that the Gangwal Group has. Now, why Gangwal Group has been selling their shares? Because of the fallout that had happened between the co-founders of both the company, that is Rakesh Bhatia and Rahul Bhatia and Rakesh Gangwal, and this was owing to disagreements related to related party transactions and corporate governance. And the dispute began back in 2019, and Gangwal had exited from the board of Indigo back in 2022, and back then he had clearly stated his intention to completely exit from Indigo over the next 5 years, and he started selling his stake from September 8, 2022. The first stake sale happened of around 2.8% equity, and that derived a value of close to 2,000 crore rupees for Mr. Gangwal, and currently he's looking to sell around close to 3% at a valuation of close to 7,000 odd crore rupees. Over the years, he has mopped up close to 45,000 crore rupees from various block deals that he has done in open market in Indigo, and the residual value of its stake, that is around 4.78% stake that remains with Ms. Gangwal Group, is valued at close to 11,200 odd crore.
Okay, thanks so much, Somit, for that. Now, this is another space and theme that has been spoken about a lot in the recent past. Part of that entire hospitality, travel and tourism space, right? But if you are going to a different destination, really most of the time the only option available is for you to fly. And if you are considering flying, there's one company that controls 2/3 of the domestic market. So therefore, the question, Nirav, is would you go out and buy Interglobe Aviation at the level that it is at right now, particularly because it is declining, not because of business fundamentals, but because of supply of stock into the market?
Well, I think both these factors are very important. That is the business performance and the promoters' interest in a particular company. Now, with the market knowing clearly well that all this stake is going to come in the market, definitely the market wants to wait and watch, and it wants to see what is the quarterly performance going forward. We are expecting a soft quarter, and before the demand picks up again in Q3 and Q4 possibly. So I think the market would want a better deal. Markets would want a better deal at this point of time. So hopefully, I think markets would look at it at reasonably lower valuations.
Okay, so you would not be going out and buying Interglobe at this point? No. Okay. All right. Nirav, we have to slip into a very quick break. We'll be back on the other side to talk more about the stocks in focus. And do stay tuned. This is NDTV Profit.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज़ हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की ज़रूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
That's huge. That is a biggie. It's out of
गोल्ड क्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
Tech has changed. So should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or all of these other things?
No, as a child, I enjoyed playing tennis. So I always thought that, okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
Biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy business?
I think the biggest advantage is long-term thinking. A negative, sometimes the perception of family businesses from the outside can be one where it lacks professionalism.
The next generation in a family business is the most important generation for the future of that business.
Welcome back. You're watching NDTV Profit, and that's Profit Buzzers. I'm Hirol Dadia. Let's quickly take a look at what markets are doing at this hour. Clearly, if you see in terms of Nifty 50 as well, the pressure has continued, though from the day's highest levels as well, we've started to recede downwards yet again, 0.6% lower. In terms of Nifty 50, we are below that 24,600 mark as well, which is absolutely a crucial point to note. Let's quickly pull up Bank Nifty and then we'll look at the sectoral indices and the broader markets. Bank Nifty also seeing cuts of around 0.7%, so pretty much in line with what the benchmark is doing in trade. Overall, if you see, the market seems to be in a slightly range-bound territory as well, in spite of the cuts being deeper. 150 points is what you're seeing here. IT and real estate are the ones which are actually dragging the markets, but I think it's the GST boost which is keeping the consumer sector pretty much on an upbeat mood. Though it's pretty much on the borderline, you're seeing what gains of 0.1 to 0.2% in terms of the consumer durable index, but you have auto also, which has now slipped into the negative, which actually started off the day on a positive note. FMCG was another sector which started off on a positive note, but that has gone down as well. Let's quickly look at the mid-cap and the small-cap index as we speak right now. If you see in terms of the mid-cap and the small-cap indices as well, cuts of around 0.8% coming in. The cuts are slightly more deeper as compared to your benchmark indices. In terms of individual stocks, if you have to look at where broader markets are concerned, few of the names I would want to highlight is Ola Electric over here. Ola Electric is seeing a good day of trade. Strong moves coming in there. You have, Vardhman Textiles also seeing a good run today, gains of around 8.5%. Advanced Enzymes trading in the positive. JP Power as well as Edelweiss, these are the gainers in today's session. Overall, if you see from a losing perspective as well, Indigo 5% is the kind of cut on the back of the stake sale that has happened. CSB Bank trading under pressure, Rallis India trading under pressure, 361 trading under pressure, and eClerx is another one which is seeing some bit of profit booking in today's session. But moving on, Dr. Agarwal Eye Hospital, let's pull up that one, and Agarwal Healthcare. Both of these counters are seeing some major cuts today, 5.5 to 6% on Agarwal Healthcare. And if you see Dr. Agarwal's Eye Hospital, that stock also is taking a beating in today's session. Both these companies will be merged. What's the reason behind the merger and why this pressure? Varsha joins us with all the details. Varsha, interesting to know, why is the merger announcement actually causing pressure on both these stocks?
You know, the merger is happening now. This is because they want to simplify the corporate structure, and the merger will be completed in Q2 FY26. Now, the Morgan Stanley, if you see, have given an overweight to this Dr. Agrawal Healthcare now, because they see that this merger will simplify the structure, and you know this could be a re-rating for the stock according to Morgan Stanley. They say that the EPS will be the merger will be EPS accretive by FY27, and the share swap ratio that Dr. Agrawal Healthcare has been which is given is at 15% premium to Dr. Agrawal Eye Hospital's weighted average volume in the last few days. Now the acquisition is at EV/EBITDA multiple of 22x, which is at a 14% discount to overall hospital sector multiple, which is trading at around 25x. Now merger is expected to be completed by Q2 FY27, and this could be a re-rating for Dr. Agrawal's Eye Healthcare, which is why Morgan Stanley has given an overweight to this stock.
Okay, so that's some overweight weighting, interestingly coming in from Morgan Stanley as well. In fact, let me also get in Osho Krishnan, Chief Managing Technical and Derivative Research at Angel One, and we have Neerav Asher, who's with us as well. Osho, both these counters, welcome to the show, gentlemen. Firstly, Osho, both these counters have been trading under pressure on the back of the
correction in Dr. Agrawal Eye stock specifically, because there has been down. So till now there is no caution sign resistance or immediate caution sign resistance or immediate target for the short-term traders. While Agrawal the counter to have some further correction towards 410, and then look for
buy. Would it be a
10 and then look for
buy? Would it be a eye hospital, or would it be the healthcare eye hospital, or would it be the healthcare?
This is the eye as a single unit. Having said that,
to tell us more, we have Jasmeet who's standing by.
The last trading, that's on Tuesday, we saw the stock move up until 12% on the intraday basis, and then it closed around 8% high. Even today, the stock is buzzing. It's nearly up 2% in trade today. While this is on the back of the order win, company has won an order worth 1100 odd crores. The order is from the Unique Identification Development of India, while that's the Aadhaar Seva Kendra. Company to set up Aadhaar Seva Kendras across 188 districts in India and provide them with services such as enrollment and entitlement of the Aadhaar card services. Well, the management came up with a con call about the business update, and here's what the management says about this particular business update. They say that this revenue is expected to start adding up on evenly basis across all 6 years. The timeline for the order is 6 years. So we can expect the 1200 crore order to be split across 6 years and add to the top line directly. Well, they also expect a healthy transaction volume from this particular order. They see the contract to scale up in next 3 to 12 months, and post that we would be able to see the impact on the top line. Well, they also say that they will be able to print and provide the Aadhaar for this particular service. While they say there will be a critical spending required in terms of real estate that's building on the Aadhaar Kendras, as well as in terms of hiring professionals to do the service. So that's one cost that management will see, which will impact the top line for sure. Well, going ahead, they also see there is a provision in this particular order of minimum rate that they'll get from the government, which they haven't disclosed yet. Now, well, we have a brokerage that came up with a particular note on this particular order, that's Quess on protein. While they have changed their rating and they have increased it from reduce up until add, and they have hiked the target price to 960, which was previously a 760. That's a hike of nearly 200 rupees in the target price. While what they say is, they say this order to boost the top line, but the margin could be in trade-off. Given that it's a government order and margins are sometimes under pressure, that's something to watch out for. That's what they are saying. Well, they also forecast the FY26 and 27 revenue to hit up roughly 1.4 and 1.6 billion on the top line. So that's something again to watch out for. To give you the users a bit brief about what happened previously, they lost a PAN 2.0 order, that's the protein governance, where the share plunged from 1400 odd rupees up until 800. So that was a negative, but this order adds up to that and it's a positive thing. So this is why the stock is buzzing in trade today and to focus on.
Thank you so much for that, Jasmeet. A quick one, Neerav, with you. How are you looking at the protein? I know it's a small company, but are you seeing any opportunity?
Well, it's a small company, but I think it suffered a major setback when they did not get the PAN 2.0 order. They did not qualify for that. And I think we saw the damage in the stock price. And at this point of time, I think this could be as a this order of the Aadhaar could come as a relief for the stock, a much needed relief, 1100 crores. It could guarantee some revenue visibility, but not very sure about the quality of the margins. But definitely expect a modest upside from the current levels.
Modest upside from current levels. But moving on, you have the Adani Group that has posted a landmark performance in the first quarter of FY26, with group EBITDA exceeding that 90,000 crore mark for the first time. Now, this record is powered by strong growth across the incubating businesses such as airports, robust performances from green energy, energy solutions, and the ports business. Let's get in Somit Sarkar to get us more details. Somit, over to you.
Well, it's a record performance coming in from the entire Adani Group of companies. If you look at the combined EBITDA reported by the Adani Group of companies, it has crossed the 90,000 crore mark for the first time. And this performance was aided by specifically the airport business, which comes under Adani Enterprises, the incubating business, that is the airport business, which comes under Adani Enterprises. Apart from that, other businesses which have reported a strong performance include Adani Green Energy, Adani Energy Solution, and Adani Ports as well. Apart from that, companies like Adani Green, Adani Energy, Adani Ports, Ambuja have continued to report double-digit EBITDA growth in Q1 FY26, and the planned capital expenditure, if you look at for the remaining part of for FY26, that also stands at around 1.5 to 1.6 lakh crore. Now, if you look at the EBITDA breakup, last 12-month EBITDA of Adani Enterprises stood at close to 16,536 crore, which is a 19% growth. This number here, Adani Enterprises is for 16,500. Adani Green is 11,020, 12% growth. Apart from that, if you look at the cost of debt, that has also been declining for the Adani Group of companies in FY25. The number stood at close to 7.9% as against 9% in FY24 and 10.3% that we had seen in FY19. Along with that, if you look at the group leverage, that has also come down. The net debt to EBITDA ratio now stands at just 2.6 times, while the liquidity ratio in the company stands at a higher number of close to 53,840 crore. That is the amount of cash that the Adani Group companies currently have with them. Now, if you look at the credit rating, it has continuously been upgraded. In April 2019, around 25,389 crore rupees of debt, that is the 48% of debt, was rated AA minus, but right now around 95,717 crore, that is 89% of the debt, has been rated AA minus and above. If you look at the return on asset, that is one of the highest that group companies have among compared to other infra companies. FY25 ROA stood at close to 16.5%, and the gross asset number that stood at close to 6.1 lakh crore rupees, aided by higher cash flows that the company has been seeing so far throughout the year. Now, if you look at the company-wise performance here, Adani Enterprises, that company incubated a business of high growth part, successfully commissioned India's first off-grid 5 megawatt green hydrogen pilot plant, and 7 out of the 8 construction projects are more than 70% complete for Adani Enterprises. For Adani Green, if you look at in FY26 and Q1 FY26, the operation capacity increased by nearly 45% to close to 15,816 megawatt. The company added around 3,763 megawatt of solar, 585 megawatt of wind power plants, and 534 megawatt of hybrid power plants. For Adani Energy Solution, it has secured one new transmission project, the Talegaon line, and it has an under construction order book of close to 59,300 crore rupees. When it comes to Adani Ports, they saw a volume growth of around 11% on a YOY basis to close to 121 million metric tons. For Adani Cements, that is the Ambuja and ACC Group, the present cement capacity stands at close to 105 million ton per annum, while they have in March 2026 target of increasing this capacity to close to 110 MTPA.
Right. Thank you so much for that. And that is strong performance coming in there. And it's all your incubating businesses that are firing up. And just a disclaimer that NDTV Profit is an AMG company which is owned by Adani Group as well. So that's a quick disclaimer that we need to put out. Very quickly, moving on. consumption is set for a GST cut boost, and that's across geographies. In fact, the consumer sentiment has actually turned net positive after 3 years, and this is according to updates from Datum. Shesha joins us with all the details. Shesha, what are you picking up?
Right. So after 3 years of cautiousness, what we are getting to see is that urban India's consumer sentiment has turned net positive, signaling a strong consumption rebound. Notably, rural households are also increasing their spending, especially on non-essential items, reflecting a robust recovery across the board. Expectations for the festive season is further high, with rural consumers optimistic about further spending growth. Now, as we have seen every year before the flagship sales of e-commerce companies begin, several marketplaces, several market intelligence platforms put out projections. And this festive season, Datum says that e-commerce is set to see a significant boost, with spending expected to rise 27% year-on-year to 1.2 lakh crore. Interestingly, 7 out of 10 online shoppers plan to spend more than they did last year, with over half willing to shell out more than rupees 10,000, some even exceeding 20,000 rupees. Now, the quick commerce segment is also on the rise, projected to account for 12% of online sales this year, up from 8% last year. Additionally, the proposed GST cuts could further fuel festive sales, especially in groceries, appliances, and personal care categories, while mobile phones and lifestyle products could see a more relatively subdued growth. Now, that's the latest on India's consumer sentiment, a promising sign for the festive season ahead.
A promising sign for the festive season. Nirav, coming to you, you're talking about GST that could be coming in terms of a benefit. How are you looking at this entire scenario? Because the data is indicating an uptake. Would you be a buyer of consumption in FMCG companies? And if so, what would your top picks be?
I think there are a lot of expectations as far as this festival season is concerned. And I think there seems to be a combination of different factors. One is the income tax benefits, which are there, which will increase the disposable income in the hands of the people. At the same time, the GST cut, the festival offers, and plus the aspiration, the increase in the aspirations. If we read the con calls of different companies, we have inferred that the demand is picking up in a big way as far as tier 2, tier 3, tier 4 cities are concerned, cities and towns. And I think this augurs definitely well for the retail majors, as well as for the consumption oriented stocks, as well as the FMCG companies.
Okay, so that's with regards to FMCG and consumption space. Very quickly, Osho, any topics where you could see a breakout?
Yes, from consumption basket, there are various counters which are looking very promising on technical charts. The first one is Blue Star. Blue Star is having a very strong technical setup. It has witnessed a cup and handle kind of a pattern in the last few trading weeks, but recently there has been some kind of consolidation. Overall, the technical setup remains robust. So I expect that with the kind of theme that we can see in consumption, Blue Star is likely to have an outperformance in the near period. I expect that in a shorter term period, one can expect a target of nearly 2050 to 2100 in a very short term perspective, but with a higher targets is expected from a medium term time frame of 2250 to 2300. While on the lower end, the support is now shifted towards 1800. That should be kept as a stop loss for short term traders in Blue Star.
Got it. So that's with regards to Blue Star. Good breakout coming in there, and that's the word coming in. But let's get in, Vansh, with all the buzzing stocks today. Vansh, what is buzzing and why?
So let me start off with Jaiprakash Power. Now the company is exploring a 300 crore investment for a 40 megawatt solar project. Now the investment is in the existing thermal power plant, which is situated in Madhya Pradesh, and the capacity of the existing power plant is 500 megawatts. Second on my list is VIP Industries. Now again, the promoter of the company has agreed to sell 4.54 crore shares in the company. Now this will further result in an open offer, and this will result in a change in the company's control as well. Third on my list is Thirumalai Chemicals. Now the company has raised over 450 odd crores at a price of rupees 277 rupees per share. And the funds has been raised by issuing new equity shares by way of preferential issue, and the shares have been issued to key investors like Motilal Oswal and Bandhan Mutual Fund, including Motilal Small Cap and Bandhan Small Cap. So these are some of the stocks that are buzzing in trade today.
Thank you so much for that. Osho, anyone that you would pick from the list that Vansh has given where you see some bit of movement in terms of charts as well? Osho, you're on mute.
There is other counter which is into my radar and which is looking very positive, and it is also buzzing in today's trading session. That is Ola Electric. So this counter is also again around 9% higher, and I expect that in the coming period, with the kind of gains that this counter have seen, there is a high possibility for the counter to test the zone of 60 to 62 in the very short-term perspective. While coming to JP Power, I expect that Jayaprakash Power is still on the verge of giving a breakout. So any breakout above the zone of 19.5 to 20, that can be providing a very strong technical boost. So I will be waiting for another 1.5 rupees of movement in the counter. If it happens, then one can look for even buying opportunity in JP Power also.
So JP Power, you could see a buying opportunity. Ola is looking interesting. Nirav, let me come to you with both these stocks. You know, Vansh has spoken about JP Power, a 300 crore investment for a 50 megawatt solar project. How are you looking at this one? And secondly, if you have to look at Ola as well, which has been on the radar over the last couple of trading sessions, there have been days when it has been a downer where you've seen profit booking, but the rally has started yet again. What would your view be?
Well, I would like to look at Ola Electric. We have been recommending this stock since 45, 46 levels. And I think expect the performance to improve going forward. The news flow has been improving. They have got the PLI certifications for the Generation 3 scooters also. So I think a lot of negative publicity is likely to get addressed going forward. The service-related issues, the maintenance-related issues are likely to get addressed. And we have the monthly auto sales numbers also coming out. So I think that can potentially be a good trigger for the stock going forward.
So a potential trigger in terms of where Ola Electric goes. But thank you, Osho. Thank you, Nirav, so much for joining us on the show and sharing your views with all the stocks that we have been able to discuss so far. But moving on, torrential rains have actually created havoc in Jammu, claiming 41 lives, with 34 pilgrims killed in a massive landslide on the Vaishnav Devi Yatra route. In fact, the pilgrimage has been suspended as rescue operations continue amidst record-breaking 380 millimeters of rainfall in the last 24 hours. Gurpreet Singh Cheena from NDTV joins with the ground report. Gurpreet, I know you're there. It's a devastating sight as well. What are you picking up?
Right now we are reporting from Jammu city, showing all the pictures from ground, how the life is going on. Life seems to be normal because what we have learned, there was no rain from yesterday onwards, and that had given a major relief to Jammu residents. After having a record-breaking rainfall in this Jammu region, what we have learned from the weather department, 380 mm rainfall has been reported in this Jammu region, and that had become one of the major reasons for the destruction and the damage which has been taken place not only in Jammu city but in the outskirts of this area. What we have learned on the national highway, there was some traffic disruption which has been reported because of multiple landslide which has been taken place. But if we can talk about Jammu city, we have seen life has come back to normal because from yesterday onward, there was no rain has been reported in this region as of now.
So life has come to normal, it seems, right now, because no rain has been reported so far. So there is good news, but the rescue operations is something which we will keep a close eye on from here on. But completely out of time. But that, it's a wrap on this edition of Profit Buzzers. Lots more lined up on the other side. Please stay tuned to NDTV Profit for Soumit Sarkar, who will get you all the small cap buzzers in trade.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में। फिर 3-3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tech has changed. So should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or all of these other things?
As a child, I enjoyed playing tennis, so I always thought that okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
Biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy business?
I think the biggest advantage is long-term thinking. A negative, sometimes the perception of family businesses from the outside can be one where it lacks professionalism.
The next generation in a family business is the most important generation for the future of that business.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in?
Hello and welcome. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Puneet. Well, Puneet, if you look at the markets, the benchmark has been declining for the second straight session, and we have even fallen below the 24,600 levels today.
Well, definitely, and it's been right from the start. We've seen that pressure continue on this particular index, and that seems to be largely been across the board. It's not been a few stocks because we have seen some positive gains in the auto space, to say the least, the likes of Hero amongst others, which are having a positive move. But continuing from Tuesday's pressure, we seem to be under pressure consistently and with no signs of a revival essentially. So while we have seen some gains, off the day's high, of course, for the Nifty Auto, these individual movers like Hero amongst others have also come off from the day's high as well. Let's quickly look at the mid cap as well as the small cap index as well, because that's the other one where we have seen on Tuesday, it was under pressure much broader than the benchmark indices today as well. The mid cap 150 is down almost 0.8%, while the small cap is also down roughly about 0.7%. In terms of some key stocks as well, let's pull those up. Let's also look at actually the Nifty 500, because before we move forward as well, we've seen some key gainers like Vardhaman Textile amongst others a day, where the tariff impact has actually been higher. Something like a Sundaram Fasteners is also up 4.7%, while Webber Global is also up 2.9%. On the losing side, we did see that block deal impacting Interglobe Aviation, stocks down almost 4.6%. Rallis India is the other one, as well as something like a CSB Bank. I also just want to pull up something like an Ola Electric. Another day where the stock's been up over 8 to 9%, and it's been consistent because we have seen that the lower GST rate essentially from the month of September will impact the sales of the current ICE scooters. But for EVs, the GST rate is just 5%, so we shouldn't see that impact. So probably seeing some of those gains early on. Something like a Ratan India Enterprises also gaining on this aspect, essentially up 6.7% amongst others. On the loser side, Sundaram Financial is something that we're seeing. The stock is under pressure. Sai Life is the other one. We saw a block deal earlier this week, is also down about 4.4%, and eClerks is the other one. Post quarter one earnings, it did see that huge fillip, but we've seen that level of 4,200 to 4,300 being largely maintained on the stock. Something like an Ola Electric as well as Brainbees is also under pressure today, but that seems to be largely what's happening in the market as well. Let's also actually quickly pull up the Nifty Auto as well before we move forward. We mentioned that it had some gains, some cool off from that aspect. Let's look at the contributors very quickly. I mentioned about Hero MotoCorp amongst others that could be impacting that stock as well. And Hero is up 4%. We've seen actually Tube Investments almost down 2.3%. Something like Ashok Leyland is down 1%, and that seems to be of the day's high, at least for the Nifty Auto at this point of time.
Well, let's now go across to Lancelot Dicona, CIO ValueX Wealth Connect. Lancelot, coming to you firstly on the market view. Well, second straight day of big declines that we are seeing for the benchmark when the Nifty Bank Index is down close to 450, 500 points. How are you looking at markets overall? Currently in the oversold territory now?
I don't know whether oversold or not, but I think valuations have really become reasonable now, given the fact that, you have to look at it in the backdrop that while, yes, you do have a tariff impact on certain sectors, certain industries, and maybe to a certain extent, it will impact the economy on an overall basis. But the impact is going to be a lot less than what we anticipate in terms of the negative side, especially given that, we are moving into an area where there is a reduction in GST, which could be a big driver for consumption. Interest rates have started to come off. Liquidity in the markets have improved. So there are a lot of positives that we can see from an economy perspective going forward. And even when you look at individual companies, many of the companies are trading at valuations that are reasonable. And so this is probably a time, if you have a 2 to 3 year outlook, then one can invest in good companies at these levels as well.
Right. Well, with that, let's also welcome in our guest for management for the show today, Vishal Pundir, Vice President, Operation and Strategy with Electronic Marts India. So basically, the reason why we're having this conversation is because there's a possibility that the GST rate cuts might happen specifically for consumer durables, more specifically for air conditioners. So firstly, how are you looking at this news that is expected to come in going forward? Do you expect a big uptick in sales that could happen as and when this is announced?
Well, yes. So the quarter one of FY26, we saw the decline in air conditioners. With this announcement of the new GST reforms, we will surely see an uptick in the demand, and the prices will be reducing by, say, 6 to 10%, which is a very good sign for the industry.
Right, sir. But firstly, to understand here, I do understand that the first quarter sales were not that good when it comes to air conditioners specifically. But that would have also led to higher inventories for companies like Electronic Marts of India and other retailers as well. So how are you planning to deal with this? Because at this moment, I believe even consumers might have delayed their buying decision, given the fact that they're also expecting a GST rate cut to happen here.
Yes, taken into consideration. So all the inventory, I'll say for my company that the inventory levels are in check, and retailers are cautious and keeping everything like they're taking a calculated risk over their inventory. So I think going forward also, it will not be a huge impact, and it'll be all in all good.
Right, but the goods that you have already purchased from the companies that you have purchased with a GST rate of 28%, but then again, if you go ahead and sell, right?
Yeah, so we're waiting for clarification, and once the notification is out there, and then we'll take the necessary measures.
Then what would be that necessary measure? Actually, I wanted to understand that.
So I think it will be passed on to the basically the consumers, the end consumers. All the benefits will be passed on. So that will be
right, sir. I understand the benefits will be passed on as and when the rate cut is announced. But the products that you already have in inventory, for that you might have paid a higher GST to the company, right? So what happens to that extra amount that you have paid?
So the industry leaders are already in talks with the government for inventory which is already purchased, and we are waiting for the clarification on that.
Okay.
Yeah.
Hello, sir. Very good afternoon to you. It's Puneet this side. Essentially, what's currently happening on the ground? Because we've seen that over the last couple of weeks is what is happening with GST. But how would you describe what happened in July, essentially, as well as early August, before 15th August, essentially? Because we did see that most appliance, companies had mentioned that they are still expecting a better performance in FY26, and that'll be led by Q2 as well as Q3 amongst other quarters. So specifically, if you can give us some perspective on the first half of Q2, essentially, did you see some form of demand coming back after the early onset of monsoon? Did you see that at the end of July, something in August?
Yes, definitely. So in Q2, we have seen uptick in sales, both in July and August. We are seeing good numbers. We are seeing high upper double digits kind of growth in all the categories, like across the appliances. And also we expect new launches for especially for mobile phones coming forward and for laptops. So there'll be huge uptick for the industry. So we are expecting all these to play out in the Q2, and especially the festive season will also be great this time. We expect huge numbers in the festive season.
And Vishal, essentially in terms of working capital, do you think a lot is right now locked in, or do you expect that it'll be largely some increase in Q2 as well as an eventual decrease in Q3 that you will see?
Well, as you rightly said, so we are seeing the similar kind of trend. So working capital has to be kept in check, and we'll see slightly higher higher number in Q3 going forward. But that's the industry feeler which is going on right now.
Right, sir. And if you could also take us through your growth outlook or growth plans when it comes to the Delhi NCR region.
Yeah. So our guideline is same. So we are going to open 25 to 30 stores. In Delhi, we have already opened 3 stores, and this year we'll be opening 4 more stores in Delhi NCR region. So right now the store count is at 30. We'll increase it by 37 by the end of this financial year. So that's the plan.
And what is your overall store expansion plans for FY26?
So in AP and Telangana, 10 stores each. So total 30 stores in FY26. And in Delhi NCR, there will be 55 stores in the next 2 financial years.
Right. I believe for FY26, you had a sales growth guidance of 15%. But given the fact that now this GST rate cut is expected and this will propel growth in the second half, is there a scope for any expansion or any upgrade, any revision in the guidance that you had given?
Well, definitely. So the guideline was similar. So it was 15%. But now, since new changes have come forward, we expect this number to be higher, slightly higher.
And Vishal, in terms of, specifically on the large appliances, continuing with that question, have you currently seen in terms of, the inventory for you specifically, is it roughly 50% higher compared to what you would generally have in Q2 of the same time last year? And of course, okay, got that. And specifically in terms of newer model launches, because we do see a lot of RFQs coming in Q2 for all these brands specifically. So do you feel that there could be some slight increase in discounting in Q3 because of that, but that'll largely also catapult with the festive season discounting which you might give at your stores?
So brands are also playing that out smartly. So they have also upheld with quite a few launches this year. So you will see very calculated launches going forward. And most of the launches which will happen will be in the mobile section and the laptop category. In the RFQ category, you will see calculated launches going forward this year, because everyone is waiting for the notification what to do with the previous inventory. So all these things will be taken into consideration, and you'll see going forward the launches will be there.
Right. Also, if you could help us with the breakup on EBITDA margin for the North and the South cluster that you're seeing in FY26, and what is the number that you're expecting for FY27 for both the clusters?
So our EBITDA guideline is same. It will be 6.5% on the overall basis. It'll be it'll be lower in the Delhi region because we are still in the nascent state, like only 2 years have passed. But in Telangana and South going forward, we'll see slight improvement in the EBITDA margins.
And specifically, Vishal, could you talk to us a little bit about the growth plans essentially in the medium term for your large appliances business? Because we are seeing that roughly about 12% revenue contribution comes from small, 40% from mobiles. But I'm guessing because of the ticket size, amongst others, we will see a lot of demand for the large appliances segment as well. Could you give us some medium-term plan as to what is the company's plan essentially for entering either new products in the large appliances space, amongst others?
So what has happened is people have, due to discounting going forward in the festive season nearby, people have somewhat I won't say the demand is muted, but it is stable. So going forward also, we'll see this demand going slightly up because of the discounts which are getting rolled out soon. So we'll see the uptick in the large appliances number going forward.
And just one final question, Vishal. Essentially, in terms of average selling prices, could you give us some range or perspective for large appliances as well as mobiles?
So for us, the average selling price of mobile is around 35,000, which is the highest in the industry. If you compare it with other retailers, for average selling price for large appliances is around 30,000 rupees, which is also higher than the other retailers.
Vishal, we leave it there. Thanks so much for joining in, giving us perspective on GST amongst other issues that you might be facing. But we look forward to our next conversation, and thanks so much for joining us today.
Thank you so much. Nice talking to you.
Well, Lancelot, let me come to you on Electronic Smart. We've seen essentially some impact of GST, across the industries, so as to say. Any specific view that you have on Electronic Smart or anyone in the segment that it operates in?
Well, I think the segment will get some benefit in terms of both, if the GST is lowered, the segment will benefit in that space. And also you might see an increase in consumption because of lower prices. However, we still have to see the exact provisions and what is actually getting reduced, whether the input credit issues are getting resolved, because in some of these products, the input GST is even higher than the output GST. So it really doesn't help them. They won't reduce significantly. So we need to see what the exact provisions are before being able to judge as to how this gets impacted. And even if you consider that, yes, there is going to be an impact, I think Electronic Mart is trading at, relatively high multiple. And the multiples are really high. So, and, margins are fairly thin. So given that, growth might be, even though the revenue growth may be higher, the margins being low, there's not enough addition to the bottom line to justify a high valuation that we see at the moment.
Right, sir. Another stock that remains in focus is Dr. Agarwal Eye Hospital. Now, this company will now be merged with its healthcare hospital business, and the street seems to be quite disappointed with this board meet outcome that has come in. What's the reason behind that? Let's get in Varsha with more details on this merger.
The merger is happening now. This is because they want to simplify the corporate structure, and the merger will be completed in Q2 FY26. Now, the Morgan Stanley, if you see, have given an overweight to this Dr. Agarwal Healthcare now, because they see that this merger will simplify the structure, and this could be a re-rating for the stock according to Morgan Stanley. They say that the EPS will be the merger will be EPS accretive by FY27, and the share swap ratio that Dr. Agarwal Healthcare has been which is given is at 15% premium to Dr. Agarwal Eye Hospital's weighted average volume in the last few days. Now the acquisition is at EV EBITDA multiple of 22x, which is at a 14% discount to overall hospital sector multiple, which is trading at around 25x. Now merger is expected to be completed by Q2 FY27, and this could be a re-rating for Dr. Agarwal's Eye Healthcare, which is why Morgan Stanley has given an overweight to this stock.
Lancelot, coming to you on this counter, the merger that Dr. Agarwal Eye has announced with the hospital business, how are you looking at this? The street seems to be quite disappointed here.
Yeah, I think, what happens typically is because the Dr. Agarwal's healthcare is holding almost 71% of of shares of Dr. Agarwal's eye hospitals. the benefit to the minority shareholders is very limited because most of the benefit seems to be going to the majority shareholder in terms of even there is a premium to the market price at which it is going, the shares are being swapped out. So given that background, it is rather, maybe there should have been probably a little better ratio that would have been helpful in terms of justifying these valuations, because valuations are relatively on the higher side even when you consider this Dr. Agarwal's healthcare as well as eye hospital on a separate basis, and combined the valuation still will not justify the total market cap of both the companies, which means that post the merger you're likely to see a derating in terms of market cap actually coming down of the combined venture. And maybe after the benefits start to kick in by 27, 28, you may start to see some profit, but it's still a long way off. So that's the reason why it looks negative at this point in time.
View, Lancelot, but the other one stock that's in focus is Protean eGov. Now, it's been on focus on the back of an order win from UIDAI, and that's to learn more about this, because the stock has been on its own journey, essentially from a lost order in PAN 2.0 to now an order win, and the stock also reacting over the last 1 week as well very positively. Let's get in my colleague Jasmeet to give us more perspective on this.
Well, right, yes, thank you for that. Yes, the stock is buzzing on the back of order win. If you see on the last trading day, that's on Tuesday, the stock hit a 12% high on intraday. And even today, the stock is up 2% in trade today. While the company won an order from UIDAI, the order worth 1100 odd crores, which is spread across 6 years. So while the management came up with a con call and they said that this revenue would be distributed among the 6 years equally, so we can expect a top line hit of 200 crore rupees a year on basis. Now, when you look at the order is spread across 188 districts in India, and the order is to supply with other Aadhaar details like updation of Aadhaar and enrollment of Aadhaar. With this, the company will also be able to provide the physical Aadhaar card to the individuals. Now, management had a con call based on this business update, and what they say on the con call is that revenue is expected to be distributed equally, as I already mentioned. Well, they also see they expect a healthy amount of transactional volume with this particular order. They say that the ramp up of this particular order will take roughly 3 to 12 months going ahead. While they also see that the printing and the critical spends for this particular project would be in terms of the acquisition of real estate, given that they have to form centers across 188 districts. That would one cost. The second cost would be in terms of hiring individuals to maintain and run those centers. While they also see there is a minimum value, the provisional value that the government will give the management, which they haven't mentioned. While after this, we have a brokerage note, that's Equirus, which has come up, have increased and hiked the target price for this particular company. While they have changed the rating from earlier reduced, now they have assigned an add rating and they have hiked the target price by 200 rupees with the current target price of rupees 960. What they say is the new order win will boost the top line of the company, but the margins are something to watch out for. While they also see that they forecast a roughly 140 and 160 odd crores around the top line for given FY26 estimates and FY27 estimates. While that's something to watch out for. And given the history of this particular company, as you rightly mentioned, company had recently lost PAN 2.0 order, though they are a contender of PAN 1.0. By that particular lost, client had lost, the share price had fallen down from 400 odd rupees and up until 800. While this particular order is a positive of the company, and this is the reason the stock is buzzing in trade today.
Thanks for that, Jasmeet. Lancelot, any particular view that you have on Protean, because the valuation, was rich to say the least when it did lose that order win. How do you see this particular order win as well as any particular view on the stock?
So, I think when one analyzes the business, they have a single client, major client is the government of India, and the margins on this business are very, very low. So while you have secure business in terms of the government always wanting to do something or the other on the space, because of the low margin, not really able to see that kind of volume growth that is expected. And they will continuously depend on government issuing more and more orders. And when you put that, the current valuation in the backdrop of the business, I think that it looks expensive and, maybe something that one should stay away from from this stock for a while, because it is expensive. Unless it corrects significantly from these levels, you can't justify really your investing at that high multiples, because the risks are far higher than the prospective returns that one may get.
Right. Another stock that remains in focus in the small cap segment is E2E. Now, the company has bagged an order for India AI GPU worth around 88 odd crore rupees. Let's get in Jasmeet with more details on the same.
Well, right. Yes, thank you for that. A bit history about this particular stock. The stock has remained flat over last 1 year. But when you look at the performance over last 6 months and last 1 year, the stock is up nearly 30 and 70 odd percentage. While a bit history about what the company does, the company basically performs in AI-based cloud platforms. They also develop and provide developmental service for AL and ML application. As they recently received an order from Ministry of IT, the order is for rupees 88 odd crores, and the order is to provide them with the cloud GPU. So that's one part about the order. Well, secondly, when you look at the other aspect, why will this order be used? This will be used for one of the AI-based startup of the government. That's nothing but GAN.ai. Where now to understand about a bit fundraise about the company had done a fundraise of 400 odd crores in the last year, where the company utilized roughly 200 crores in FY25, while rest was used in the Q1, that's nearly 800 odd crores, while the company is continuously doing the capex in terms of development. Well, that's something to watch out for, while the balance of 380 odd crores will be used in the year going ahead. Now, when we look at the key takeaways from the Q1 highlights of the management, it has seen a huge incline uptick in terms of cost. The employee cost has gone up, while the purchase material cost was also seen an uptick of 70%, which is impacting the profit. When you look at the key numbers of this management, the revenue is up at 8% on YOY on QOQ basis as an IT company, but there's a EBIT loss. The loss stands at rupees 16 odd crore versus that of profit loss in the previous year, while the net loss is of 2.8 crore versus the profit of nearly 13 crore in the previous year. So while as we see that there's a pressure on the PAT on the back of increased cost, well, that's something to watch out for. We also have a note on this particular company where they have maintained their ad rating with a target price of rupees 3,245 rupees. While what they see is this new order win will create a more of growth visibility for the company going ahead. They also see that this would utilization would uplift the company's EBIT, and this could break even the EBIT going ahead in September 25. So this is the reason why the stock is buzzing in trade today.
Right, thank you, Jasmeet, for that detailed explanation. Lancelot, coming to you, have you tracked this counter E2E network?
Well, I have looked at it, briefly, but what I feel is that it is an expensive, proposition. Trades are almost 90 times. And yes, it is operating in a space that is going to be the future, but, from a perspective of the sources of income that they have and where the funds or where the revenues and profits will come from, since it is mainly, to do with the government, I think the profitability is going to be in question, and then paying such a high multiple for profits that may come in, maybe 4 or 5 years down the road, I think is a little bit difficult to accept. So one can see that, any negative, news can actually result in significant re-rating. At the moment, the AI is the flavor of most companies, and anything to do with AI gets higher multiple in terms of rating. But I think for this company, it's difficult till it starts to generate that kind of revenue growth and profitability.
Got that, Lancelot. But Virtuso is the other counter that's in focus. Stock is up in trade today. Let's get in my colleague Vansh to tell us why.
Well, yes, let me start off with some recent development in regards to this particular counter. Now, the company has approved preferential allotment of about 30 lakh warrants to about 140 odd crores. Now, the allotment is made to the Malabar India Fund at a price of 455 rupees per share. So, if I talk about the details of the company is a leading diversified EMS player in India. Now, the company offers original design manufacture and OEM solutions for electronic goods. Now, if I talk about the key segments and revenue of the revenue split for the company operates in 4 segments. Basically, it's the first is the lighting segment, where the anchor client includes Panasonic. Second on the list is air conditioners, where the anchor client includes Voltas. In fact, Voltas accounts for 75% of the company's revenue in terms of FY25. Thirdly, they are into commercial refrigerators. Fourthly, they are in the washing machine, in which the commercial production is expected to start in Q3 FY26. And lately, they have been entering into the compressors. Now, if I talk about the new segment, that is compressors, the company is starting to manufacture the compressors for fridge, and the trial runs are in the process. And if it's successful, the company is expecting a potential revenue of about 400 to 450 odd crores, and which is expected to double to 800 odd crores in the later years. How the margins for this are expected to be lower at about 7%. And if I talk about the operational dynamics in terms of the AC business, the company is set to benefit from the PLI incentives, as well as the margins have been slightly lower in the AC segment. Now, this is on the back of the higher proportion of outdoor units that the company is engaged in manufacturing in. Now this is on the back of the lower margins on the audios that are likely to due. So company expects AC margins to be around 7%. So these are some of the key details in regards to this particular counter.
Got that. Thanks so much once for joining in. But Lancelot, we'll leave it at that. Thanks so much for joining in, giving us perspective across a bunch of stocks, and we wish you the best for the rest of the day. But with that, viewers, that's all the time we have on this edition of Small Cap Buzzers. Stay tuned to NDTV Profit for more.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज़ हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की ज़रूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशिता ही ऐसे बॉय मिलते मुंबई में, चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tech has changed. So should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or all of these other things?
As a child, I enjoyed playing tennis. So I always thought that, okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
Biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy business?
I think the biggest advantage is long-term thinking. A negative, sometimes the perception of family businesses from the outside can be one where it lacks professionalism.
The next generation in a family business is the most important generation for the future of that business.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or all of these other things?
As a child, I enjoyed playing tennis. So I always thought that, okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
Biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy business?
I think the biggest advantage is long-term thinking. A negative, sometimes the perception of family businesses from the outside can be one where it lacks professionalism.
The next generation in a family business is the most important generation for the future of that business.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Thanks for tuning in to India Market Close right here on NDTV Profit. I'm Neeraj Shah, and the markets are under pressure. Nothing which is a calamity, of course, to be very honest. We kind of about 0.2% in the red, and we've kind of stayed in this range for a better part of the day. We started off maybe better, but immediately in the first 10 minutes, I think we were at a level which was similar to this. So no surprises there. IT's actually cracked a lot more. And the broader markets will show you that the advanced decline ratio as well is not looking very hunky-dory, by the way. So the market breadth too has been sluggish, if you will. And look at that advanced decline ratio, right? Maybe a bit of a convergence, or not a convergence really, but a narrowing happened. But since then, the alligator's mouth has widened again. So 1:2, or worse than 1:2 in favor of the decliners. Like I said, the broader markets are not doing well. Let's get the heat map up on the screen, and then the points contributor, and then get in Hiral to talk about what's happening at the broader end of the spectrum. So what's corrected? IT, large loser. HCL Tech, Infosys, TCS. You also have HDFC Bank. ICICI Bank has maybe recouped some of the losses, but still down about 1%. And I wonder if Reliance also features in that list of the top point contributors, even though it's down only 0.5%. But a lot of other heavyweights are cracking in trade today. HUL and Eternal from the consumption basket are down, and Eternal has actually given up all the gains from the morning. What's doing well? Hero MotoCorp, to an extent SBI Life and Titan, but few and far in between. Adani Enterprises, Asian Paints and Bajaj Finance are amongst the others. Just the points contributors before Hiral comes in and talks about what's happening. And Hiral, it's very interesting that the losers are actually weighing down very, very heavily, and almost all heavyweights are having some large gashes, save for Reliance, which is down 0.6% ahead of the big day tomorrow for itself, but down for sure.
Absolutely. And I think one more stock we should highlight over here is the Shriram Finance. You know, I mean, the pressure has continued, and what's interesting is all the auto stocks which are doing well today, and the financer to these companies is under pressure. So it's a very divergent play that you're looking at. Shriram Finance, 3.5%. The biggest loser also in terms of Nifty 50. Broader markets, again, seeing good cuts in today's session. In fact, there is underperformance that's coming in on that spectrum as well. Near, we wouldn't say at the day's lowest levels, but cuts of around 0.9% is what you're seeing in terms of where mid-cap 150 goes. If you can pull up small cap 250 as well, the kind of cuts that are coming in on that front, 0.8% lower in terms of the small cap 250 index as well. If we can just have the sectoral heat map to see which are the sectors which are actually just holding up. It's only the consumer durable sector which is seeing gains of around 0.7%. Auto, which was one of the top gainers, has actually gone into the negative. What's losing out is real estate. That's the biggest loser today with cuts of 1.7. IT is under pressure. Defense continues to see that kind of profit booking. Between the banking pack as well, you have the private banking index, which is seeing higher cuts as compared to the PSU bank index. So that's with regards to what the sectoral picture is looking like. Let's look at the BSE 500 or even NSE 500, whichever we can pull that up. There you go. Vardhman Textiles. Now, this company becomes one of the biggest beneficiaries when it comes to, relaxation in cotton imports are concerned. And that's the reason why you're seeing that stock react with gains of 11% coming in there. Sundaram Fasteners, AstraZeneca, Kalyan Jewelers, VIP is another one, and this is on the back of the promoter sale and open offer that we're talking about. Good move there. CEAT is also seeing some good moves. Rallis under pressure. Interglobe Aviation on the back of the promoter sale is under pressure. Adani Total, CSB Bank, E-Clerks, 361. These are a few of the losers in trade. So again, Neeraj, if you see in terms of broader markets as well, no major trend that is emerging from a sector-specific move, but few movers. And what's interesting is a Vardhman Textile, a 10.5% up move when we're talking about tariffs that are coming in. And it seems that the government notification with regards to imports has come to the rescue.
Yeah, well, fair points, right? And just, I think what some of these individual pockets of weakness today have shown,
that there is pressure on individual names because of either the tariff piece or just the kind of demand, right? As is the case in case of Interglobe. So not looking good at all out there. Now, just very quickly, a couple of things that I do want to mark, and one of them is what some of the market opinion has said. So, for example, BOFA's Amish Shah spoke to us earlier, and his view was that most market participants expect the exceptional tariffs to be short-lived and some resolution expected in the next 30 to 60 days. Their earnings estimates are 7% for FY26 and 11% for FY27. If tariffs continue, the earnings estimates would get revised lower. Legislative reforms, ease of doing business could all help valuations going ahead. And in terms of sectors, they're optimistic on hospitals, telecom, power utilities and gas utilities. Underweight on globally exposed sectors, but have recently upgraded IT to a tactical buy. So this is the big market view that we had in the day. And of course, in other news, multiple managements that we spoke to, one of them, which sounded off a positive news flow or a positive voice, was RK Forging, saying that the overall demand in the US is down and hence demand is low. But they have not heard of any mentions of low RFQs for them as well as for the industry. Okay, so this is very important because they're saying that there is no lowering down of the requisitions of queries, etc. From any of the clients, which is actually a very big deal. Okay, let's get in Kush Bora in the conversation. He joins in right now, founder of kushbora.com. Kush, it has been down with a negative bias, if you will, but if people were hoping that some bit of DI buying could help the index close off the lows of the day, maybe it was evident midday. Somehow right now, it's not looking, I mean, it may not look bad, it may not look terrible, but it's not looking good either.
Spot on, even spot on. First, a very good afternoon to you and to all the viewers. You know how they say markets can stay irrational longer than you can stay solvent. I think if we can tweak that to the current context, it'll be markets can remain oversold longer than your M2M runs out or your patience for that matter. And that's what is happening. I think what's happening now is patience starting to wear thin for a lot of traders, a lot of investors. There was a rebound rally that was expected. I spoke of that about that on the Tuesday show, and it did come about during the day, but that's also being sold into. So the bigger worry is not the kind of levels that we are at currently. If a rebound does come in on the back of either some sort of good news or just a tactical rebound, a couple of 100 points of rebound will not surprise anyone at these levels. What's actually more concerning is the weakening structure on the Nifty, on the Bank Nifty, where previously 25,600 was the high. We could not take that out in the current up move. Now 25,150, 200 remains a hurdle from a medium-term perspective. So this lower low kind of a formation is what is a bit of a worry. From a very near-term perspective, I will still maintain that view that don't look for short trades despite the kind of 2 back-to-back lower days that the markets have had. Intermittent rebound rallies or perhaps a couple of days of sustained rebound rallies are something that you should play for, not preemptive, but when the markets give you that hint, like we did today on Bank Nifty, for instance. So yes, the structure is weak. Don't go short. Look for rebound rallies. I think Nifty could test the recent low of 24,350. Before we see any kind of meaningful rebound, perhaps on the Bank Nifty as well. You could see 53,500, which was the recent low. Before seeing a meaningful rebound. Just a quick one more, which is the PCR on Bank Nifty was 0.5 for the last 2 days, including this morning. Because of the expiry and because of the rebound that we saw, that's been reset to 0.075 right now. So while still close to oversold territories, not a meaningful reset, and I think the downward bias still continues. So I would suggest stay out, wait out, look for rebound rallies, be it intraday or positional, but don't preempt them. Let the markets tell you that they are giving you that price action and then trade.
I think so. Wait and watch is the strategy that Kush is recommending. Kush, what is the IT index telling you? Because last few sessions, the anticipation was that probably IT is making a comeback. In today's session, the pressure has started to build yet again. What are charts indicating, and would you recommend any buying at current levels in terms of stocks?
Hi, Hedel. So I wasn't very constructive on IT, but levels were starting to appear where you could take a positional bet on IT, not a momentum play definitely, but a positional trade. Now, I don't know if I can call it a contra view. my view is that whatever you're seeing on IT today it's not really as disturbing in terms of the revival or the recovery trend that we were seeing for the last 4 or 5 sessions. If on any other day, this might have actually seemed like a profit booking session after 4 or 5 days of good run. Even on the IT index, if you see, it's still consolidating within the 35,300 to 36,300 range. And the significance of these levels is these are 50 and 38% retracement levels. So it's still consolidating. Even if you look at, let's say, the likes of Infosys or TCS, that the cuts are not as worrying. We've had a good run, for the past 5-7 sessions on some of the names on IT. This, this dip that you're seeing today still does not change my view that IT is in a recovery mode, and you could consider a long trade on IT names. But the view still remains, which is it's more of a positional bet rather than a momentum play.
Positional bet versus a momentum play in terms of IT. Kush, in this market, what would your top picks then be?
Well, incidentally, both of them are on the long side. The reason being that we are starting to see some sort of positive divergences even on the short trades, which means perhaps there could be a rebound around the corner. So pockets where there are strength and accumulation, going for long on those. The two stocks on my radar, one of them is BF Utilities. It's had a good run in the last 5 sessions on the back of very good volumes. The last 3 sessions also have seen an interesting volume bump up, and the consolidation that you're seeing today with a mild negative bias is on the back of very low volumes. So there is definitely traction on BF Utilities. 858 and 885 are your targets. 810 is where you place that stop loss. The second one is Protein Eager. We know the kind of fall that it had, and the recovery now seems a little more sustainable, mainly due to the volume action and the stock holding ground today as well. I think there's news flow as well. I just saw on the show previous to this one. There's news flow as well on this. So with the kind of news flow and the price and volume action, remain constructive on Protein Eager from these levels. 930, 980 are your targets. 870 is where you keep that stop loss.
Okay. Well, thanks for that, Kush. Let's get in a special market voice on the conversation. It's a big day. Abhay Agarwal, MD of Piper Serica Advisors, joins us. Abhay, it's been a really long time, but good talking to you. Looking forward to the conversation. Thank you for taking the time out.
No, thank you. Always a pleasure to talk to you, Neeraj, and to be on the show.
Thank you. Abhay, this morning when we were talking to one sell-side analyst, the belief was that for now, the markets aren't quite pricing in any kind of earnings cuts because of the tariffs, because in most people's views, this will get resolved in a month or two. And if it were to stay for longer, then from the meager expectation that they have, which is Bank of America Securities, of 7% and 11% for FY26 and 27, there could be further cuts. I would love to understand how are you approaching the markets currently with your investment thesis, or are you also a bit more cautious because of the tariffs and other uncertainties?
Yeah, Neeraj, I think from whatever we are seeing, and we are seeing some, early pickup in channel orders for the festive seasons, riding on the back of expected GST cuts. So I don't think fundamentally domestic consumption picture has changed. And that gives me the confidence to say that, look, this correction that we are going through, and it will probably continue for a while till investors get their confidence back. But it is again a good opportunity. And it is a moot point to say when and how will the tariff issue get resolved. But let's assume that it continues to stay beyond the next month and month before that, a month after that. There are two things, Neeraj, that make me confident that actually it may be, there are silver linings in that cloud. And the silver lining is the government's focus on driving domestic manufacturing and domestic consumption. And secondly, building alliances with large countries with which we had a difficult relationship. So I think the ultimate outcome, looking beyond next 6 months, next 12 months of these tariffs, is that the Indian economy, Indian manufacturing, Indian consumption will be in a much stronger position than what it is currently now, because the government has no option but to focus on that and boost that. So, definitely there will be earnings cuts, but I think investors, long-term investors, have to look beyond just next 6 months, 12 months. And on the other side, flip side, if the tariff issue is resolved and the momentum to push domestic manufacturing and consumption continues, then I think the market can reverse pretty sharply from that point of time too.
Okay. Abhay, good afternoon. Hiral on this side. We're talking about the entire game in terms of how markets and what markets are pricing in right now. If the tariffs get reversed, say, in the next month or two, what is the fundamental shift that you will expect, number one? And two, which are the sectors would you advise investors to look at, taking into consideration the corrections that have happened so far?
Yeah, good afternoon, Hiral. I think what I would suggest is, and what we are doing is that we are staying with sectors which are already seeing strength, which are kind of benefiting from the tariffs. And I don't think the tariff issue, even though there may be rollbacks, is going to go away because President Trump still has 4 more years to go. So we will have these bouts of uncertainties regarding tariffs and different things for next 4 years. So markets will learn to live with that. But I think for investors like us, what is very important is to find companies that are using this as an opportunity. So I think the whole EMS basket, and again, these are not my buy recommendations, but these are stocks in our model portfolio, has held up pretty well. You look at companies like Sirma, SGS, Keynes, Amber, Dixon. I think these are the companies that will benefit from domestic manufacturing and domestic consumption. And the second side, we have pharma. Now, pharma generic exports is a space that I don't think will be impacted so much by the tariff situation because this is a non-discretionary purchase. So we are seeing already slight confidence, cautious optimism by pharma exporters, even in the middle of this tariff discussion. So I think these are the two sectors. And then anything that touches domestic consumption, will be a beneficiary of lower GST, lower income taxes, lower interest rates. So we will see that boost, whether it is autos or real estate, home building, home improvement companies. So I think these are the spaces that investors would do well to stay with rather than looking for rebound plays which may not actually work out.
Okay. Abhay, can silver linings notwithstanding, could it well happen that we may be looking at a flat headline index and specific pockets of strength might continue to do well? Could that be the it has virtually been the template for the last 12 months. Can it last for a lot longer?
No, I completely agree with that. I think, though it's a question, so I would answer by saying that
yes.
I think so. I firmly believe that is happening, that the markets are changing their texture because for a very long period of time, 60% of India's market cap has been locked in the Nifty 50 stocks. And, you have a bunch of other companies, probably 1,000 of them that represent the remaining 40%. And I think this 40% is now started to express its might, its strength in terms of growth. They're getting access to good management, capital, markets, innovative products. So I am betting that over next 2 years, you will see that 40%, which is outside of the index, grow faster than what the index does. And I think that's where it's very important for investors to be very astute about what are they betting on and not just play the index, only.
Okay. So don't pay the index, which is absolutely correct. And you also mentioned, Abhay, that domestic-oriented sectors is something which probably one can look at right now. So if someone is sitting on dry powder, which sectors would you advise? Because we've been talking about, pharma is something that you already mentioned. A lot of chatter with regards to how the capex cycle plays out as well from here on. Would the cements or building materials, these be the sectors that you would look at?
Yeah, definitely, Hiral, I would look at them, but I'll caution that some of these subsectors have their own demand and supply equation, which is adverse, which has been adverse for last 4 or 5 years that we have seen. So the capacity has been coming up much faster than demand comes up, and as a result, the pricing power is just not there. So even in building materials, we are seeing that there is kind of overcapacity, cement also, overcapacity for the time being. So my only worry is that though you will see nameplate growth in consumption volumes, the supply side will also grow, so the pricing power may not kick in. So I would stay away right now from cement and capital goods and building materials. But I think other than that, just looking at the whole auto basket, looking at banks that are seeing a price correction right now, looking at insurance companies, that will benefit from GST cuts as long as they retain the ITC with them. So I think there are enough other ways of playing this rather than through cement and building material.
Abhay, just one small subset, it's a very micro one and a lot of people would have exited it, but this whole gaming thing, what have you made of it? It's being challenged as well as we speak. It's a very small subset. Do you have a view here, or I can ask you something else, by the way?
No, happy to. I mean, I'm a keen gamer, but I don't like paying for, or gambling. So I think a lot of this discussion about, whether something is by skill or by chance has been decisively ruled by the Supreme Court. So I don't think there is any point in anybody appealing that. So whatever is a game of chance is banned, and I think that's the way it will be for real money gaming companies. So I don't think there is anything there for investors, frankly, for some time at least.
Okay. Abhay, such a pleasure getting your thoughts, getting those silver linings as well. Really, really appreciate. Thanks for your time this afternoon.
Thank you, Neeraj. Thank you for having me.
The pleasure was entirely ours. That's Piper Serica. We missed asking a bit about the private markets, actually. He's become a very large private markets investor. Maybe at some point of time, we'll try and do that. What sectors are in vogue? But by the way, speaking of market opinion, right, as we hit that break, we'll leave you with more market opinion. This is coming in from Amish Shah of BofA Securities. We spoke to him earlier today, and here's his take on Indian markets with regards to earnings and tariff impact and everything else, actually. Listen in.
Absolutely, tariffs is one of the factors that can drive sensitivity for markets, both in terms of earnings and valuations. So I would argue that, look, markets are currently trading at around +1 standard deviation, around 21.5 times. 50% tariff, currently nobody expects to continue. Most of the market participants believe that this is a matter of time. We would probably over time revert to 20 to 25% tariffs, and that's what markets are pricing in. But clearly, if 50% stays for longer, then we could have the 11% downside case that we are arguing for right now. So basis the conversations with investors, I think everyone's expecting this issue to get resolved within a month or two. But anything beyond that, I think markets will start to price it in negatively.
Amish, again, just trying to understand, because you look at numbers and timelines so closely. For the markets to start baking in 50%, is there a time limit? Let's say that if indeed no resolution comes in for the next 60 days maybe, or 30 days or 90 days, then you in your models as well start factoring in a 50% tariff impact both on earnings as well as multiples.
Positive directionally. So clearly, I think government is doing the right thing. Their policy, both in terms of fiscal as well as monetary, is to stimulate growth in this environment. We've seen a total of $48 billion of consumption stimulus so far, which is about 120 basis points of GDP. If you think about it, the additional subsidies given out over the last 12 months, mostly by the state government, some from the center, is $24 billion. Over and above that $24 billion, you had $12 billion come in through the tax cuts, direct tax cuts that were announced in the budget of February. And then possibly our expectation is that there will be another $12 billion coming in the way of GST cuts. So $48 billion, it's about 120 basis points of GDP. over and above that, there will be some savings in the form of lower EMIs from the lower rates that we spoke about, plus there will be more liquidity into the system. So there is about, all put together, about 150 to 170 basis points of stimulus, depending on which way you calculate it. And that's the right thing to do. There is a need to stimulate growth right now. Government is going all out and stimulating that growth. Coming back to markets and implications, however, we think that the markets have more than priced in that recovery, and we think that the recovery is likely to be shallow in comparison to the street expectations, and therefore arguably earnings cuts will continue.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tech has changed. So should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or all of these other things?
As a child, I enjoyed playing tennis, so I always thought that okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
Biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy business?
I think the biggest advantage is long-term thinking. A negative, sometimes the perception of family businesses from the outside can be one where it lacks professionalism.
The next generation in a family business is the most important generation for the future of that business.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you
Welcome back. You're watching India Market Close, and clearly if you see in terms of the pressure as well, not that deep, but it is still there. But let's now get across to our segment, Heard on Street with Somit Sarkar, that all of us have been waiting for. Somit, what's the chatter from the dealing room? What have you found today? Because there was one bit that you already told us in terms of Indigo, what has happened so far. So what are you picking up?
So I'll start off with granules first, but what dealers are indicating here is that there are some buy flows that they are seeing at institutional levels at lower levels for granules. And also do remember that for Granules India, the stock will be coming out of FNO. This is the last series, so there are some buy flows that we are seeing for granules. For Indigo, the thing was, firstly, the deal size was around 800 million, which got reduced to 500 million. Now, some dealers are also indicating that a lot of institutional investors were quite disappointed given the fact that Rakesh Gangwal had come with this deal much before the anticipated time. So last deal happened in May, and then there was a lock-in period of 150 days. But just after 3 months, he has come in again with this block. So some part of the street was disappointed on that front as well, and hence the demand was quite weak, and hence they had to reduce the overall block size from 800 million to 500 million. Only 40% of this block was sought by long-only fund is what dealers are indicating. For Hexaware Tech, dealers are indicating that there could be a potential block deal on this counter as well. A private equity investor might look to exit from Hexaware. So keep an eye out for that counter. For Gem Aromatic, the company got recently listed. In fact, it got listed on Tuesday, I believe. There are some buy flows seen on large HNI desk for this counter at lower levels that we are picking up. So it's an interesting counter is what dealers are indicating. For Coal India, buy flows again seen on large HNI desk here. Now, the logic here that dealers are indicating is that for the August month, they're expecting an uptick in coal volume. They're expecting around 7 to 8% uptick when it comes to coal data, which also means that the volume degrowth that we have been seeing for Coal India will come to an end, and also e-auction prices are reviving. So both these are basically the reasons why Coal India is seeing buy flows at current levels at this moment.
Sumit, the other question is on Interglobe itself, right? That they've gotten most things right of late: market share, plane deliveries, the combination of planes, crude prices in favor. Is it only the timing of the sale that is a worry, or is there something else that could worry the street? But otherwise, you'd have thought that a block like this would get absorbed.
Well, it's just the timing that has been worried. That is the main worry here, because even after this block deal, it's not a complete exit. There's still some stake that is remaining, and time and again, such a large chunk coming in creates some kind of overhang for a stock like Indigo. And at this moment, even if you look at, obviously Indigo is a great company and they have been doing well, in fact very good when it comes to the aviation sector. But for the overall sector this time, that is the Q2, has been quite weak. July data is weak, August data is what I've seen for the first 20 so far. The trend is on a downward, is still a declining trend, what we are seeing. So overall on a YY basis, again, the numbers are expected to be a bit on the lower side. So 2 quarters back to back where we are seeing a decline in the numbers. Obviously, second half is much better. Second half is the much better part for any airline company. But again, for first half, the numbers are expected to be weak. So that is also one of the concerns at this moment for a company like Indigo.
Okay, so that's with regards to where Indigo goes. Probably it's a lot of things that are coming together, which is putting pressure as well on this counter. In fact, let's take a quick check with Kush in terms of what are the charts are indicating for Indigo. Kush, what would you advise investors to do with Indigo? And in turn, another listed player, which is SpiceJet, where you're seeing some bit of buying interest as well.
SpiceJet is one of those avoid category stocks for me and remains so. So I wouldn't really be interested in buying. And if anyone did have them from a levels perspective, 34 is a very near-term support zone on the upside. I think 38.50 is where there is some supply zone. So that's just on the levels. Indigo, on the other hand, interesting setup. The medium-term trend for this one is bullish. From a very near-term perspective, there were some negative divergences, and along with markets and with the news that just came out, the drop is a little sharper than expected. But if you just put it in context, from Feb of this year, the stock's not spent a lot of time below the 50-day moving average. This is the first time after about 20th June that the stock slipped below the 50-day moving average. Given the kind of medium-term trend and the recent past of recovering from the 50-day moving average levels, I think it's a good idea to accumulate Indigo at these levels. It might not be a momentum play where you would see a quick reversal, but I think this is a good time where you want to start accumulating Indigo. On the downside, 55.50 is where you keep a positional stop, and again on the way up, I think 6,000 is the first level, and once that is taken on, the recent swing high of 62.50 do become your targets.
That's with regards to where the aviation counters go. I mean, SpiceJet is an absolute not on Kush's list as well. In fact, let's head across to what the Adani Group has posted, and it's a landmark performance in the first quarter of FY26, with group EBITDA exceeding 90,000 crore rupees for the first time. Now, this record is powered by strong growth across the incubating businesses like airports, robust performance from green energy and energy solutions as well. And you're talking about the port business. Somit is here to give us more. Somit, what are you picking up?
Well, a strong set of numbers reported by all the Adani Group companies in the first quarter of FY26. In fact, if you look at the combined EBITDA of all the listed Adani Group companies, it has crossed 90,000 mark for the very first time. And this has been purely aided by the incubating business, that is the airport business, which comes under Adani Enterprises. Apart from that, other strong performers include Adani Green Energy, Adani Energy Solution and Adani Ports. In fact, Adani Ports, Adani Green, Adani Energy Solution and Ambuja have continued to report double-digit EBITDA growth even in the first quarter of FY26. Now, if you look at the planned capital expenditure, that remains at around 1.5 to 1.6 lakh crore. And if you look at the EBITDA breakup right now here, for Adani Enterprises, the number stood at close to 16,500, which is a contribution of around 19% to the entire group. Adani Green at 12%, Adani Energy at 9%, Adani Power's contribution has increased to 26. The number stands at close to 23,430. Adani Total Gas contribution remains lower at around 1%. Adani Ports contribution stands at 23%, and Adani Cementation contribution stands at around 10%, and the number stands at close to 9,249. Now, the most important part coming in for the Adani Group is the lower debt cost. The cost of debt in FY25 has come down to 7.9% as against 9% that we had seen in FY24 and 10.3% that we had seen in FY19. Also, the leverage ratio has come down to around 2.6%, and the liquidity remains very high. In fact, combined Adani Group companies hold a cash of close to 53,843 crore rupees. Now, if you look at the credit metrics, in fact, that has also been improving. In April 2022, around 25,400 crore of debt, that is 48% of the total debt, was rated AA minus and above. Now, this number stands at around 95,700 crore rupees, which is nearly 89% of the entire debt of Adani Group companies, which stand above AA minus rating. So that's a positive thing coming in. Also, on the return ratio side, the return on asset for Adani Group companies is best among the infra players. FY25 ROS stood at close to 16.5%, and the gross asset data, that stood at close to 6.1 lakh crore rupees, aided by higher cash flows in the company. Now, if you look at the company-wise performance for Adani Enterprises, the incubated businesses of high growth part, they have successfully commissioned India's first off-grid 5 megawatt green hydrogen pilot plant. And nearly 7 out of the 8 under construction projects are more than 70% complete in Adani Enterprises. For Adani Green Energy, operational capacity increased by around 45% on a YY basis to close to 15,816 megawatt. They have added around 3,763 megawatt of solar energy, 585 megawatt of wind power plants, and 534 megawatt of hybrid power plants in the first quarter. For Adani Energy Solution, under construction total order book stands at close to 59,300 crore rupees, and they have also secured one new transmission project in the first quarter. For Adani Ports, the overall volume growth increased by around 11% on a YOY basis to close to 121 million metric tons in the first quarter. And lastly, when it comes to the cement company, that is Adani Cement Ambuja, the present cement capacity stands at close to 105 million tons per annum, and they aim to increase this capacity by the end of this financial year to around 110, and they are they're well planned and well on track to achieve this guidance that the company had given earlier.
All right, thank you so much for getting us a quick update in terms of the first quarter of FY26 in terms of the Adani Group companies. Just a quick disclaimer, NDTV is a subsidiary of EMG Media Networks Limited, which is also an Adani Group company. But moving on, let me also get in Aditya Shah of Hercules Advisors. Aditya, welcome to the show, and always a pleasure to speak to you at NDTV Profit. The way the markets are panning out right now, you know, we're talking about some bit of an impact with regards to where tariffs go, though GST would come in as a bonanza as well. You have the festive season, which has already started, which will probably go on for the next 10 days, and then you have Shraddh. If you have to tie all of this together, how are you reading the markets right now, and what would you advise investors to do?
Good afternoon. Near term, the market looks a little bit difficult. As I said, the tariffs are coming in, and the GST cut, which I think would come only on September 22, would then mean that near term the demand gets cannibalized, and the demand will only come back by the September of 22 when GST cuts happen. So near term looks really very difficult in terms of business earnings per se. However, longer term, the market will continue to do really well. Companies will continue to do really well. India is a resilient economy, and it is a matter of time before we come to a conclusion on tariffs per se. It can be 2 months, 3 months, 5 months, 6 months. Nobody knows that. However, over a longer period of time, this tariff problem will get solved. So if there's a good correction in the market, it's a good opportunity for anyone who missed out in the market. We are anyways bullish on the market. Just that near term, there are some problems, there are some challenges, but as time goes on, it will get solved.
How long, rather, in this period, Aditya, if indeed the market stays sideways, I'm guessing money would be made via betting on specific pockets, right? So, and pockets that, for example, you've liked, chemicals, you liked a few chemical names, but that'll be in the eye of the storm because US exports will be a problem, right? So what do you look for? Do you look for domestic focused sectors? And if so, what themes, what stocks within that bucket?
If these tariffs continue to move on, there will be a hit in the earnings of all US-focused companies. That is for sure. No one would be left. Even though Trump has exempted a lot of companies from the tariffs, like the mobile phones and a lot of other things. However, blanket, there will be a hit on the earnings. So I would be interested, let's say a company like DV's Labs, although pharma tariffs are exempted right now, if there is a de-rating on the stock, I am with my both arms wanting to invest in that company even more. Even though that's a portfolio stock, I will invest more in that company. So from my perspective, I would like to go contra wherever earnings get hit because of their export orientation towards the US are the prime candidates where I will look at it. On the other hand, if you want to be really very safe, then as all mutual fund managers really do, they go defensive and they go to the domestic consumption story, where FMCG stock, which are very, very highly valued, are the ones which are really very defensive. But in my opinion, if you are a long-term investor, it's a great opportunity to invest in US-based companies. We don't know how long the tariffs will run. However, if there is a de-rating on very high-class companies, it's a great opportunity.
Okay, so great opportunity in few of the names that Aditya has mentioned. But let's shift focus to the Agarwal twins right now. That's how I would call them. Dr. Agarwal Eye Hospital, which will now be merged with its healthcare hospital. Healthcare is down 5.5%, but the smaller one is seeing larger cuts right now. Let's head across to Varsha to understand what is the reason behind this merger and to what is creating this kind of pressure. Over to you, Varsha.
Well, thank you so much for that. If I were to talk about the volume data, the volume for Dr. Agarwal Eye Hospital is trading at around 9.4x of its 30-day average, while for the other one, that is Dr. Agarwal Healthcare, is trading at almost 1.2x of its 30-day average. Now, the reason behind this merger is just to simplify the corporate structure, and this will be completed by Q2 FY26. And the merger is EPS accretive from FY27 itself. If you see the share swap ratio, which implies 15% premium to Dr. Agarwal's Eye Hospital of its average price, and the EV EBITDA, the acquisition is at EV EBITDA of almost 22x, which is at a 14% discount to the hospital average EV EBITDA trading at around 25x. The simplified structure could be a re-rating for the Dr. Agarwal Healthcare. That is what Morgan Stanley has been saying, and this is one of the reasons why they have gone overweight for the stock. Onto the outlook for the company, which was discussed in Q1 FY26 by Dr. Agarwal Healthcare. They are expecting to add 55 new centers, and also they're expecting 20% of revenue growth for FY26, and also 35% of PAT growth when it comes to FY26. So overall, if you see the outlook for Dr. Agarwal Healthcare is pretty much good when it comes to a bottom line, which is at 35% growth.
So much, Varsha, for that. Aditya, a quick one in terms of both of these, if you're tracking the space and these two companies, if you could help us understand what is creating this kind of pressure, because they're clearly saying that this is going to be a strategic step unlocking the full potential of the combined business as well. And what would you advise investors to do with both these names?
I don't track both of these companies, so will not be able to comment on them.
Okay, no problem. So that's with regards to the Agarwal twins, as I'm calling them. But moving on, let's quickly also look at few of the other names which are seeing some good moves in today's day of trade in terms of sectors. Consumption as a pack is the only one which is resilient. That's the durable side of it. And this morning, I think one of the analysts indicated that the charts are looking absolutely strong for a blue star. In fact, let me head across to Kush to get a view on the same. Kush, the durable space is looking pretty okay. Blue Star is where the charts were looking strong, as one of the analysts pointed out. How would you look at this one and any of the other names in the space?
So I can wait and watch. While yes, there is some traction today, and if you look at it from a technical standpoint, the stock actually has been correcting for the last 5 odd sessions. 200-day moving average support kicking in. There's a gap around the 1800, 1810 mark that could get filled in the coming sessions after the gap up that we had post the Independence Day announcement. So while they are showing relative strength from from a momentum perspective, from a volume perspective, there isn't such a big traction to suggest that the near-term swing highs that Blue Star made, for example, around the 1983 mark, could perhaps be tested anytime soon. Even if you consider something like a Voltas, recently the stock moved to 1400 plus levels, again correcting from there on. The volumes aren't really great, and the giveaway from the recent highs, the rejection from the recent highs, is a little concerning. So yes, if you have, you could continue to hold, but I would actually wait for initiating any kind of fresh positions in some of these names.
Okay, so that's with regards to where Blue Star goes. But the other stock, Neeraj, that we need to discuss right now is Ola. I mean,
now, last week.
Exactly. I mean, I think, Ola financials to what the company does, to what the outlook is. I think Puneet has just by-hearted all of it. I think you wake him up and he can talk about it, I think. And that's how Ola has been performing. I mean, there were days where we did see profit booking that did come in. But again, that pickup that you're seeing right now, in spite of a Ather which has overtaken a Ola in terms of the Vahan data numbers, and that's where it saw profit booking. Currently as well, even if you talk about GST, Ola is not the one which fits in because EVs already are at a lower GST structure, right? So there is no benefit of GST that should be trickling down to Ola versus the other two-wheeler players. So what is it that is actually keeping this stock afloat? I think we should head across to Puneet to tell us. Puneet, what is new?
Well, there are two key things now. The first one's, of course, the market share for Ola Electric, and we are essentially putting in a slight question as well for its investors here. And the second one on profitability aspects. So let's first look at the market share. And in the month of August, it's been a curveball to say the least, because we've seen someone like Bajaj Auto go from almost 20% market share in April down to just 11%. This could be, they've said that they've got the enough supplies for rare earth minerals, but this clearly shows an impact, at least in the production numbers for the month of August. And hence we've seen some players like Ola Electric as well as something like Ather Energy actually jump to number 2 position in terms of market share, both really neck and neck right now at 17%. There's literally just a 300 unit kind of change in terms of market share. So it just seems to be that currently Ather is number 2 with Ola Electric at number 3. But that seems to be the picture, because someone like Hero MotoCorp, if you can see, is jumped in market share from 7% all the way up to 13%. So essentially, it seems to be a fight for the top third, essentially the third position, because with supplies coming back of rare earth minerals, Bajaj should get back to the number 2 position with its current portfolio of Chetak EVs. And hence, the fight to be in the top 3 positions will be very, very key for someone like Ola Electric as well as Ather Energy. It's important to note, Ather is expanding in North India. States like Gujarat, Maharashtra, where there is 0 stores of Ather right now, have started to see some 1 or 2 stores prop up. And with the Rista, we're now seeing that gap being narrowed effectively in this particular time frame. So it seems to be that you have to have it in mindful that while the stock price is doing well, the market share of Ola Electric has slipped from 50% to roughly just 17% now as well. Let's now look at the other aspect, the profitability part. FY26 exit target for gross margins for Ola Electric is 35 to 40%. This includes the PLI benefit. For quarter 1, they did about 25.6%. So they need a 1,000-point leg up in the next 3 quarters to reach that target of FY26 with 35% gross margin. Once achieved, it's a very ambitious target. But if they can do that, it'll be one of the key and the major feats that they've done since its listing as well. The other one is on revenue targets. They mentioned specifically that they are looking roughly 4,200 to 4,700 crores in terms of revenue. And finally, EBITDA margin break even for its automotive vertical is what they've said. Secure PLI benefits, of course, for its Gen 3 scooters, and that will help the gross margins, but profitability is expected to get a boost because of this in Q2. Finally, in terms of FY26 outlook, quick numbers, they mentioned that they'll sell roughly about 3.2 to 3.7 lakh scooters. Till now, they've done about 80 to 90,000 till now. So it's still some time away. Last year, they did about 3.44 lakhs. So even if they meet the lower end of the guidance, it'll actually be a fall in sales compared to FY25. Revenue target, as I mentioned, and the break even will be something to watch out for. They will be doing that with cell integration in the motorbikes as well as the Gen 3. But that's the overall picture. Valuations not cheap by any means because it's not profitable right now, 4 times EV to sales and similar to the other players. But that's on Ola Electric. It's definitely charging up its investors' portfolio right now. If that continues, that'll be something to watch out for.
Is it done? I think is the question. Puneet, thanks so much. It's certainly charging up investors' portfolio, at least people, or helping people who had bought at higher prices recoup some of those losses as well if they aren't gotten out. But Kush, the rally has been fairly stupendous in the last 3 weeks, right? Is it looking toppish in any fashion whatsoever, or with the limited charts that you may have?
And mind you, this came after, I think, Tamanna put out that show on the channel about, the Gigafactory visit and everything. I think from there, I think things turned a little constructive, at least on the charts where the price and volume action were very interesting. To be very honest, from a purely technical standpoint, it does not look overstretched. The run could be staggering in the last 8-10 odd sessions where it moved from 40 to about 55 now. But despite that, it's not a bad idea to take some money home. I think on the channel also, we discussed an entry point around 45 levels, where we said 51 and about 58 are the levels for which you can hold. You've made a neat return if you entered at around those levels. So if you did, then I think it's a good idea to book some profits and hold the rest for levels of 60 and higher, but with a trailing stop loss.
Okay. Well, we getting some news flow on which I would want the comments of our guests. Government sources tell us, right, that the tariff impact will likely be for the short term, will impact trade. Some sectors would see losses like gems and jewelry, etc. But supply chains will recalibrate, and industries of the opinion that deals should happen in the best interests of the country. And I think on this, there can be no doubts that this is what almost every entrepreneur would be saying. Actually, instead of me trying to read out these things, let's get in the man who's broken this story, my colleague Rishabh Johnson, with all of these details. Rishabh, just lay it out for us. Is this government sources that we're getting this information from, and what is the complete story?
Right, these are official sources from within the government, and what we're picking up is that there is some sort of impact that will be seen, but it is currently what the projection is that it will remain in the short term. It will be limited to a few labor-intensive sectors. What we're also seeing is the fact that the government is looking at about 5 to 6 months for certain supply chains to recalibrate and be sort of resilient to these external shocks that are coming in. What we're also picking up is the fact that a new date for negotiations is not finalized yet, but channels remain open. We could hear on a rescheduling of the 6th round of in-person negotiations for the bilateral trade agreement very soon. What we're also seeing is that the government's agenda is currently to focus on the liquidity crunch and how to remedy that. There is a certain liquidity crunch that the industry is expecting due to this, and these will be addressed via the export promotion mission that was pitched in the budget this year. Still hasn't been implemented, and that is something that the government is working on. There is a restoration of old schemes like RODTEP, which is being mulled over. What we're seeing is that there could be certain interest subvention schemes, loan moratoriums that could be given to exporters to tide over this period is expected to at least last for a few months unless a resolution is reached on tariffs. What we're also seeing is that the work is on to expedite the rollout of this export promotion mission. So that's what we're picking up from official sources.
Rishabh, for that, and this is very interesting, Neeraj, because when you talk about growing e-commerce exports as well, it's mainly Flipkart and Amazon who are in fact lobbying for it as well, in terms of all of them procuring directly from the suppliers and warehousing them. Currently they follow a commission-based model. So if that happens, yes, it will be a boost in terms of exports, but it should not be misused. That's what the government has indicated, right? So that's the reason why there is some bit of timeline on that front, and there is no resolution or no confirmation that has come in on that one. And with regards to where the rollout of export promotion schemes go as well, the initial outlay, if I'm not mistaken, was somewhere in 3 digits or 4 digits, and now it's actually moved to 22 to 25,000 odd crores is what the government has said, and that number is lying with the expenditure side of the government. Once that is approved, then it is going to go to the cabinet, and that was one of the stories that Rishabh got to us as well a couple of days ago. So a combination of both of these probably will come in as an incentive, and the kind of GDP impact that everyone has penciled in, currently for that 25% cut is what we will see. The additional 25%, what my read is, basis all of this, somewhere will get negated. And I think that's the reason why you have your economists as well, who are really not everyone is looking at a 50% impact right now.
Yeah, most certainly. And Aditya, come in here. What are your thoughts on the same? I mean, tide over or difficult to call that right now?
As I said, there will be an impact on the earnings of the companies. So that's the worst case scenario. Basis that you have to assume the markets over the period of next 2 to 3 years. If you plan for the worst, then you are protected. If you don't plan for the worst, then you have a problem that when the earnings fall, the valuation will again contract. So from my perspective, as airplane seat, you have to book yourself in, bet on good companies, and hope that over the period of next 3 to 6 months, there is some sort of a deal that comes in. Otherwise, we could be in for a long range of sideways movement or a time correction, as they say, but not too much worried about it. Over a longer period of time, we will get a deal.
Okay, so overall, yes, I mean, you'll have to be prepared for the worst, and that's what Aditya is saying. But before we just thank Kush, very quickly before we let you go, any call that you're picking up at this hour?
No, not really. I'll continue with the protein eager long call that we discussed some time ago, and perhaps a short covering on Bank Nifty and Nifty, but not at the moment.
All right. Thank you so much, Kush, for joining us on the show and giving us your views. So protein eager, that's the call that Kush is sticking to as well. But let's quickly slip into a short break. On the other side, we'll get you the top buy, sell today, top buy today, sell tomorrow picks as well, and the bull versus bear segment. Please stay tuned.
Tech has changed. So should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or all of these other things?
As a child, I enjoyed playing tennis, so I always thought that okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
Biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy business?
I think the biggest advantage is long-term thinking. A negative, sometimes the perception of family businesses from the outside can be one where it lacks professionalism.
The next generation in a family business is the most important generation for the future of that business.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Back with India Market Close right here on NDTV Profit. Time now to get you the bull versus bear case on one of the key movers of the day. Now you look at the stock right now and it will feel like, hey, it isn't. But the intraday moves have been quite stupendous. The last 1 month, the moves have been pretty stupendous. Yes, Hero MotoCorp is what I'm talking about. Puneet is here with the bull versus the bear argument. I really wanted the bull argument at these valuations, Puneet.
Well, definitely, it is one of the key beneficiaries of the GST rate cut from 28 to 18%, and that's definitely the first bull case. 80% of Hero's motorcycles and sales largely come from the entry-level Splendor amongst other models, so it's definitely a key beneficiary. Estimates from companies, brokerages like Nomura do estimate 7 to 8% reduction in the price of vehicles in the entry-level cycle, and Hero will be one of the key beneficiaries. But historically, since FY23, it has had the lowest growth in terms of motorcycle sales compared to its other three listed players, which is Eicher, TVS and Bajaj. So in FY25 as well, it was just a 4.9% growth, and it is a big base of over 58 lakh vehicles that is sold. But essentially, it has been the slowest, and hence we've seen a valuation differential, to say the least, of Hero versus the others. And we'll get to that in just a bit. But the second bull and bear case essentially is about a brokerage note that came in today as well. Jefferies upgraded it today to a hold rating from an underperform. Target price is now 5,200 versus 3,800 earlier. So it's a huge jump up from the previous price. They've also said that they are maintaining a positive view on the company going forward, with it being the biggest beneficiary of the GST rate cut, but continue to hold something like a TVS Motors as the company in the two-wheelers place as the top pick. They are seeing over 28% CAGR in terms of EPS growth between FY25 and FY28, and hence, while the argument for Hero MotoCorp with this new GST rate cut news is positive, they are maintaining TVS as the top pick. When you look at the third bull and bear case for Hero MotoCorp, the new launches have been addressing the concerns. They've launched a new Glamour in the 125cc space. They've also had the Vida VX2 in the EV space, and looking at new scooter launches like the Destiny as well. So all these new launches will catapult it to maintain its overall market share of 35% across categories. It has been under pressure, to say the least, but between 30 and 35 is what the company has been operating in. But the new entry-level segment, essentially of 125cc, has been dominated by two key players of Honda as well as Bajaj. Honda has the Shine, Bajaj has the Pulsar, so they do contribute 75% of the total market, with TVS as well as Hero, in the lower end of that space. With commuters moving up now, they will have to plug in that gap, and they are trying to as well. Finally, in terms of valuations, 19 times price to earnings for FY27. We are calling it favorable because on a relative basis as well, it is almost 30% yet cheaper compared to its nearest players. Bajaj on a FY27 basis is at 23 times. TVS is over 28 times price to earnings. So definitely, despite this 18 to 19% up move in the last month, there still could be some more positives here. But the new ABS announcement that has come in January 2026, that will increase the prices. So you might get some benefit from the GST rate cut of 7,000 to 8,000, but the ABS will add roughly 3,000 to 4,000 in terms of cost. So that's the bull and bear segment essentially on Hero MotoCorp. Lot more positives and staying true to its name for now.
Staying true to its name for now. Okay, that's a nice way to do it. Thanks a lot for that, Puneet. And I wonder if there is a case from a trade perspective here. And Rajesh Palvia of Axis is with us. Rajesh, thanks so much for joining in. We were looking at a very simplistic RSI levels this morning, and it seemed like the auto index seemed overbought. In light of that, some of these two-wheeler companies started off really well but have cooled off. What's the trade that one can envisage in a Hero, or if not a Hero, some of the other two-wheeler companies?
Good afternoon. So we have seen a very strong rally in most of the auto stocks in last couple of week, and be it two-wheeler, be it four-wheeler. But again, in two-wheeler space, Bajaj Auto, Hero Motor, both have done well. Looking at the structure for Hero Motor, yes, some profit taking is happening at high level, but still, if we analyze on the medium term to long term perspective, still there is a potential to continue furthermore upside as weekly monthly charts are clearly showing sign of strength, and we believe that even if you get any minor decline in this volatile market, maybe around 5,000 would be the again entry level for Hero Motor at this juncture. Around those level one can buy and accumulate. On the downside, 4,900 is the key level to watch for till stock is holding above 4,900. I think trend is likely to exhibit on the bullish side. Once stock crosses above 5250, then next trajectory on the higher side would be around 5,400 to 5,500. So we are holding bullish view on Hero Motor, as well as Bajaj Auto is also looking attractive. We have witnessed, after a consolidation of 4-5 months, now stock managed to give breakout on the near term chart. So here also we are holding bullish view till stock is trading above 8450 level. I think if it continues to trade above these level, possible upward momentum towards 9,000 to 9,200 we could see on the short term to medium term perspective. So Bajaj Auto is also looking strong on the near term to short term.
What about your ideas for the afternoon, Rajesh?
So first is from chemical basket, that is Sudarshan Chemical. After a consolidation of almost 15 trading session, now stock managed to give breakout of this consolidation range. If we analyze the overall structure, stock is continuously making higher top, higher bottom formation. Stock is trading almost near to its all-time high trajectory. And the way stock is showing outperformance, I think this stock has potential to continue furthermore upside. Possible target towards 1540 for trading point of view. Down the downside, 1480 needs to keep as a stop loss. Another stock that is on the short side, which is showing a sign of weakness. So CDSL is looking weak. Now stock has broken its previous swing low, which was made in August itself. So on the breakdown of almost all near-term, short-term moving averages, we believe that furthermore weakness we could see in CDSL. So one can go short in September future of CDSL for downside target of 1420. On the higher side, 1485 needs to keep as a stop loss.
Okay. Well, some more news flow. By the way, Chinese President Xi Jinping has written a letter to President Murmu on improving ties with India. The letter was sent as the US is threatening China with high tariffs in March as well. The letter expressed concern about the US deals that could harm China's interests. Xi Jinping names provincial official who would steer talks with India. The letter was sent to PM Modi in June as well. And well, the Indian government has started working on improving these relationships with China, and India and China have accelerated a number of things, including the settlement of border disputes. China has called the warming of relationships as the dragon-elephant tango. National Security Advisor Ajit Doval was driving talks from the Indian side, needless to say, and China has assured India of supplies of fertilizers and rare earths during the meeting with Foreign Minister S. Jaishankar too. So lots happening around, but this is the important thing. And remember, as the SCO is on, I think the next 2 or 3 days or 4 days become really, really important. NDTV's Aditya Raj call happens to be there, and of course we'll get you details from there too. But as tariffs hit and as GST rates hopefully take shape soon, or new GST rates take shape soon, important to try and understand a very quick economic perspective of the same too. Aditi Nair, Chief Economist and Head of Research and Outreach at ICRA, with us on the show. Aditi, good having you. Thanks for joining in. How do you juxtapose the two, Aditi? new GST rates, but coming with a bit of a lag maybe, and tariffs in play now. How does it impact economic growth in the interim period until clarity emerges, and then maybe even post that?
Thank you. So to start with, tomorrow we'll get the GDP data for Q1, and we are forecasting growth to come in at 6.7% for the GDP and a little lower than that for the GVA. This is possibly going to be one of the best quarterly prints for FY26. We had a quarter where both capex was front-loaded by the Government of India and by the state governments. Revenue expenditure growth was also very high in this period for the center and the states, and especially compared to the previous quarter. And also we found that exports growth, if you look at the non-oil segment, growth was actually fairly decent at about 6%, and there was upfronting to some geographies before the tariff impact really kicked in. So broadly now 6.7% is where we're kicking off Q1. That's our estimate. And after that, we have these two different drivers which are coming in. One is the tariffs, as you mentioned, and the second is the potential rationalization of GST. So on the tariff side, of course, we expect the impact to be negative both for exports and for sentiment and for private capex. So we are envisioning a delay in private capex because of the uncertainty related to the tariffs that we've seen underway since the last several months. On the GST side, it's more of a mixed bag. Our sense is that discretionary purchases are likely to be deferred in the second half of Q2 until the actual rationalization happens, which is, the target seems to be Diwali, which may turn out to be a little challenging. Let's see if all the states can come on board by then. But at least in the second half of Q2, we would expect discretionary purchases to get a little delayed. However, after the GST rationalization happens, we'll see the positive impact coming in. So a little bit of a volatile trend as far as the growth numbers are concerned from the GST side.
Right. Aditi, good afternoon. Hiral on this side. Happy to speak to you after a really long time. You've given out what you're looking at in terms of the first quarter for your estimates. If you have to look at FY26 as a whole and incorporate all the events that are happening from the US tariff aspect, you have GST, which could probably coming in as a benefit as well. Would you look at rejigging your estimates for the entire year as a whole? Or even if you've not worked out the numbers yet, what is the potential, whether it be an upside or a downside?
So Hiral, really nice to talk to you after a long time. We started this year thinking that FY26 GDP growth would be around 6.5%. And in two tranches after that, we brought it down to 6%. So that's where we are right now. 6%, obviously, upside will be if the penalty gets knocked off or if the tariffs themselves are brought down after negotiations and a very quick GST rationalization. Downsides will be if the tariffs stay and the penalty stays, and the GST sort of rationalization takes longer than expected, but demand gets stalled in the meantime.
Okay. And apart from that, if you have to look at the RBI side of it as well, if I'm not mistaken, the next meeting will be in the last week of September, which is pretty much close to the GST rollout that is expected to happen by the 22nd of September. And that is a story that one of our reporters got for us as well, that the sources are indicating the 22nd September, that's the first day of Navratri, is when the potential GST rollouts will happen. Now, if that is the situation and you're looking at RBI policy in the last week of September, do you think there could be a potential of a rate cut also that could come in? Because the RBI governor at a FICCI meeting did mention that they will be on board to do as much as they can when it comes from the export side of the business as well. How do you expect them to, probably take a shift?
My sense is we're not going to get a rate cut. We may get some sector-specific support coming in from both the fiscal policy side and the monetary policy side.
Okay. And in what form do you expect that to be?
see some sort of, on the fiscal side, some sort of package for exporters. So if I again go back to kind of a August 1 scenario, the baseline that we would have had was 50,000 crore of leeway with the government of India to either absorb lower taxes on the direct or the indirect tax side, or increase either capex or give some sort of support to exporters. So now how this, sort of buffer gets used is something that we need to wait and see. Definitely some kind of package for exporters could be, considered if there is really no headway in negotiations in the next month or so.
Aditi, we'll leave it at that. Thank you so much for taking the time out and giving us this quick perspective. Really appreciate your time.
Thank you.
All right. Well, we know there's near-term pain for sectors, I think, and near-term pain on growth. What should the strategy be for sectors which are completely insulated from all of this? Now, Aditya, one assumes that NBFCs, even if certain banks have exposure to textiles, gems and jewelry, and might suffer, NBFCs by and large, because of the rate trajectory, the GST gash, and therefore the subsequent presumed uptick in consumption could all benefit. Are NBFCs a sweet spot to be in currently? You're on mute, I think, Aditya.
Definitely, the NBFCs are in a sweet spot, not particularly because of any of these issues, but simply because as the rate cuts come in, they are the biggest beneficiaries of those rate cuts per se. So from my perspective, most of these NBFCs will continue to do well as the asset quality cycle continues to ease over the period of next 2 to 3 years. That's where the real opportunity is, particularly within the NBFC space. Microfinance side of it, where a lot of these NBFCs have taken a lot of beating, is something that you can look at. For example, on a smaller bank like a Ujjivan Small Finance Bank or an Arman Financial, those are some stocks that will really do very interesting. If you want to go to the dependable, then you can go towards Bajaj Finance. Bajaj Finance will continue to do extremely well. However, my preference also continues to remain towards bank. Banks will also continue to do extremely well, even though they have exposure to the sectors which have high tariffs. But as the credit cycle continues to pick up, banks will also be the biggest beneficiaries of it. So on financials, positive on both banks and NBFCs.
Okay. Well, I wanted to ask about Interglobe, but well, since Vansh is talking about Shriram Finance, and we are talking of NBFCs right now, let me get in Vansh in, because that stock has plunged in trade today. Vansh, key concerns?
Yeah, so the stock is already down 20% in July and August, and now even the stock is trading even below the lowest target price in terms of the analyst coverage. Now the lowest analyst coverage in terms of Ambit Capital, which has target price of the stock at 578 rupees, they have valued the stock at 1.66 price to book in terms of the 12-month forward estimates. Now let's understand the concerns behind this. Now the concerns have been around the asset quality in terms of the commercial vehicle space for this particular counter, and there has been the guidance that has been deferred on the liquidity improvement as well. Also, there has been a weak operational performance in Q1 FY26 for this counter as well. Now, if I talk about some of the potential catalysts that can in turn be positive for this counter, firstly is the unchanged credit cost guidance by the company, and there has been a stable matrix in terms of the operational performance. Also, there has been a bullish commentary implying that the rural uptick will drive the future growth for this particular counter, and it is the repo rate cut that will aid the cost of funds for this particular stock as well. And lastly, the lower GST rates will further aid demand across the board. Now, these are some of the developments that are to be kept in focus while for Shriram Finance.
Okay. Thanks for that, Vansh. Now, the other thing in focus is Interglobe Aviation. And Aditya, what are your thoughts here? I mean, I remember the last sale that happened, only domestics. No global investors chipped in. I remember that. This sale, they had to downsize a little bit because of the demand missing. And that may be temporary because of the current issues. What's the view on Interglobe Aviation?
So it is a fantastic company. It's a case study for how aviation business can be run profitably. Next growth of Indigo's journey will come from the long haul routes that they will operate. They have a 787 Dreamliner coming in through a wet lease. That is the next leg of growth for the company. I think the long haul operations, Indigo will do well there again, and that's the growth driver. But from a valuation perspective, if you look at the valuation, 2.22 lakh crores for a company which is only 60 to 70% market share, does translate into about 3.5 to 4 lakh crores of market for the entire aviation sector. I think that is a tad bit expensive. So from my perspective, the demand is lower because of the valuation. If the valuations were to correct, I think people will start to come into Interglobe Aviation. It's a great business with a very fantastic growth opportunity ahead. So from my perspective, a good company, valuations need to ease off. One could start to look at the stock at about 4,500 or 5,000. Not entirely impossible for that to come in. If there are one or two problems within the space, that level could easily come in.
Okay, so that's with regards to where Interglobe Aviation goes. Let me, in fact, go to Rajesh as well. Rajesh, the cuts have deepened further. We are at the day's lows. IT is the top sectoral loser right now. 24,500 also is what Nifty 50 has kind of broken or hovering around those levels. In terms of a closing trade, anything that comes to your radar where you do see an opportunity? Let's be optimistic right now.
So for index, trend is likely to exhibit on the bearish side only because we have broken the 100-day moving average support area also, and the major support on the charts was at 24,500, and we are almost hovering around those levels. There is no as such recovery sign in terms of Bank Nifty also, and Bank Nifty is also now trading below to 54,000 level. So I think looking at both the indices, still indices are likely to be in the on the slightly on the weaker side only, and we may see further more bearishness as till the if we analyze on the rollover data also, it's seems to be on the short built up is there. So I think maybe we could see further more pressure in the indices. On the stock front, for BTST point of view, Metropolis is looking bullish as stock is showing a sign of recovery, and even if we analyze on the daily, weekly time frame, stock is showing sustained buying action almost since last 5-6 week. Stock is showing a sign of strength. Looking at the overall structure, we believe that Metropolis can extend its gain. 22.25 to 22.30 would be the target on the BTST point of view. One can buy with stop loss of 2155.
Okay. I'm tempted to ask you for any of the key consumption names which have struggled in the day today, Rajesh. Eternal off from the highs of the day, HUL sulking, and these are the presumed beneficiaries of GST cuts, right? What do the charts indicate?
So these stocks were showing sign of strength, but as Nifty has again slipping, and now we have not seen any kind of recovery. So broader market is witnessing some profit taking, though stock were in uptrend. But yes, looking at the overall structure for Eternal, we are still holding our bullish view as stock is still on the bullish side for near term as well as for the short term perspective. So any dip towards 310, 305 is the buying opportunity for Eternal. Till stock is trading about 295, I think trend is likely to exhibit on the bullish side for Eternal. Again, for HUL, this stock has also shown breakout on the weekly as well as on the monthly chart. Looking at the monthly structure, we believe that 2610 is the important level for the stock. If 2610 is defended by the market, by the stock in this volatility, I think here also we could see again buying interest to be there. Nykaa is also showing sign of good strength, so here also we may see good traction. So I think these basket consumption oriented basket is likely to exhibit again bullishness. Maybe this is just because of expiry pressure is there on the market, so that's why they are also behaving in line with the market action. But going forward, we are holding still bullish view, and we can see good up move in these counters.
Okay, so that's with Nika. In fact, we're seeing a good surge right now as we speak. Very quickly, you know, ICICI Bank and HDFC Bank, both of them are the ones who are actually contributing to the downtick right now. Aditya, what would you advise?
Both of these banks will continue to do well. The asset quality, particularly for ICICI Bank, had improved, whereas it marginally dipped for HDFC Bank. HDFC Bank, the improvement in net interest margin is the key driver for the stock going forward. And consistency from ICICI Bank is something that the market will watch for the next 2 to 4 quarters. So from my perspective, both banks will continue to do well, and they are the top banks within the financial space.
Okay. And Aditya, I heard you speak about Divi's Lab with some quote-unquote fanfare that you would lap it up with both hands if it were to fall below a particular level, etc. Anything else that fits the bill that way?
So there are many companies within the IT pack. If you look at it, something like an ND technology or KPIT, or if you look at it, if you look at Tata Tech, also it is also corrected. So you need to go sector by sector with exposure to the US, and I will definitely look at companies where there is exposure to the US and the valuations are really very vulnerable. This is a time, if this goes on for at least 3 to 6 months, valuation could sharply come down for many of these companies. Companies like Syngene, companies like Piramal Pharma, these are all companies that derive their revenues from the US. For example, companies like Laurus also, they also derive a lot of their revenues from US as well as Africa per se, for that matter. So from my perspective, I like to think contra, and contra thinking tells me that this is an opportunity. Every crisis is an opportunity, and this crisis also is an opportunity for good long-term investors to bet on strong companies.
Okay. Well, Aditya, we'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time. Just one question, Rajesh, before we let you go. With the IT stocks trading virtually at the lowest point of the day, is there more downside in Nifty IT? Is there a specific IT name that you would go short on?
So still trend is on the weaker side, and yes, we can see furthermore down move in the Nifty IT stocks. On the short side, I think Infosys one can look at to go short, as stock again failed to cross its immediate hurdle of 1530. So from large cap IT stocks, Infosys, if it continues to trade below 1530, we may see again downtick in this counter. On the downside, 1480, 1470 would be the next level on the downside for Infosys.
Time to go short as well, probably on Infosys. Thank you, Rajesh, so much for joining us on the show and sharing your views. But let's quickly take a look at what the closing rates are looking like. 1.5 minutes just left, but clearly a 650 points cut you're seeing is in terms of the Sensex. We are at the day's lowest levels, 24,500 is what Nifty 50 is looking at in terms of closing, 0.8% lower. If we can just get an intraday chart of Nifty 50 to see that kind of pressure point as well. That mild recovery that did come in this last few minutes, but we will be almost ending near the day's lowest levels is what it looks like as we speak. Let's quickly look at the broader markets and India VIX as well. In terms of broader markets, if you can have the mid cap, the VIX, there you go, 12.12. So there you're not seeing, that major volatility that's coming in. In fact, that's receding, which is kind of positive, but a 0.5% downtick there. So 12 is where your VIX is hovering at. In fact, your broader markets have seen deeper cuts right now, 1.2% on the mid-cap index and the small-cap index. Also, the cuts have been absolutely similar. So broader markets have been bleeding versus the benchmarks. Let's look at the heat map quickly, and we'll see where is the pressure coming from. Shriram Finance cuts have deepened further, almost a 4% cut on the Shriram Finance. In terms of IT companies, HCL Tech, TCS, Infosys, all of them under pressure. Your FMCG sector, which was in the positive in the morning, from there you have HUL, Tata Consumers, who have ended in the negative. ICICI Bank and HDFC Bank, both the heavyweights that have put pressure in terms of markets right now. Titan is holding up, Coal India is holding up, Hero Moto has cooled off slightly, but still trading in the positive. Maruti also continues in the positive. Adani Enterprises is in the positive. Reliance Industries ahead of the AGM is in the positive today, 0.4% higher as we speak. Let's quickly look at individual sectors as well, or if we can have the sectoral heat map to see the Indigo 0.5% in terms of the consumer durable space, and that's where we did see some of the stocks which have been resilient. But defense has seen profit booking yet again today. The top losing sector, 1.6% down tick there. IT 1.5%, Nifty real estate. A mild recovery there, but ending in the negative. Apart from that, FMCG, healthcare, Bank Nifty, and again in terms of banking as well, it was the private banking space which has seen deeper cuts as compared to the PSU banking space as well. Let's look at the broader market components as well in terms of NSE 500 or BSE 500. There you go. Vardhman Textile, a key beneficiary today, AstraZeneca, Sundaram Fasteners, Kaplan Point, Star Health, Honeywell Auto, a few of the gainers. On the losing end, your names like Adani Total, Rallis, AB Fashion, CSB Bank, Interglobe. Again, Interglobe is on the back of the block that ended lower with cuts of 5%, and eClerx, which has been under pressure. So these have been the movers and shakers in trade on an overall basis. But very quickly, let's quickly look at all the cues that we should be watching out for tomorrow from a global front as well. You have the IIP data that will be out tomorrow. Along with that, you have the US GDP growth that will be reported as well, and the initial jobless claims that will be coming in. So these are a few of the things you should be watching out for. On corporate action, you have Engineers India, Cantabile, Morpin, NBCC that will be giving out dividends. And you have Nitin Spinners and RB Infra. These will be trading in terms of the dividend. And you have a steel cast that will be seeing a stock split as well that you should be watching out for. So these are the cues, but clearly, Nifty managed to stay slightly above that 24,500 mark is what it seems like. 700 points is the kind of fall you've seen on the Sensex, closes marginally above that 80,000 level. And clearly, the pressure did come in the second half of the trading session. That's all that we have on this session of India Market Close. Lots more lined up on the other side. Please stay tuned to NDTV Profit, and a thank you from the team that put this show together.
Tech has changed. So should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or all of these other things?
As a child, I enjoyed playing tennis. So I always thought that, okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
Biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy business?
I think the biggest advantage is long-term thinking. A negative, sometimes the perception of family businesses from the outside can be one where it lacks professionalism.
The next generation in a family business is the most important generation for the future of that business.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really?
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahuguna. Now let's get straight into the show. So Trump's tariff tirade has triggered the selling pressure on Dalal Street. Benchmark indices closed near their intraday lows. Nifty has slipped just below its key support levels to wrap the trading around 24,500 points, while the 30-pack Sensex saw cuts of close to 700 points to end around 80,000 levels. Now, the broader markets underperformed the frontline indices, where the small and mid-cap indices fell over 1% lower. Bank and IT heavyweights contributed most to the Nifty's intraday fall. ICICI Bank, HDFC Bank, Infosys and TCS were among the top draggers. Marginal relief was observed from counters such as Reliance, L&T and Titan. All sectors end in the red, with IT, defense and realty leading the sectoral slump. Market breadth also ends highly skewed in favor of the bears. India's GDP growth is estimated at 6.7% for Q1 of FY26, as per a Bloomberg median poll of economists, now moderating from 7.4% in Q4 of FY25, but above 6.5% in Q1 of FY25. Gross value added, that is the GVA, is projected at 6.4%, with the gap persisting due to rising indirect tax collections and lower subsidies. The Reserve Bank of India forecasts 6.5% GDP growth supported by disinflation, pickup in indirect taxes and a favorable base effect. Agriculture growth is expected to ease from Q4 of FY25 but remain strong, while excess rainfall may have dented industrial GVA. Manufacturing GVA is also likely benefited from lower input costs amid global uncertainties. Overall, the growth is buoyed by robust rural demand and government capital expenditure, though private corporate capex stayed lukewarm. The Adani Group posted a landmark Q1 of FY26 with consolidated EBITDA exceeding 90,000 crore rupees for the first time. Now, this is driven by strong growth in incubating businesses such as airports, green energy, energy solutions and ports. Adani Green Energy grew operational capacity by 45% year-on-year to 15,816 megawatt, while Adani Energy Solutions secured new transmission projects with an order book of approximately 59,304 crore rupees. Adani Ports handled cargo volumes rising 11% year-on-year to 121 million metric tons. The group's net debt to EBITDA ratio stood at a healthy 2.6 times, with cash reserves over 53,800 crore rupees, which is supporting robust liquidity and planned capex of 1.5 to 1.6 lakh crore rupees for FY26. Newgen Software Technologies has received a 73 crore order for scanning and digitization of pending and disposed judicial and administrative records for an Indian state court on a turnkey basis, to be completed in 2 years. Now, this project aligns with India's ongoing e-courts initiative to modernize the judiciary through digital transformation, which is enhancing record accessibility and reducing dependency as well. The deal underscores Newgen's expertise in enterprise content management and process automation. Now, this is strengthening its position in the government sector. Shares of Newgen were last trading at 895.8 rupees on BSE following this announcement. GR Infra Projects has received a letter of intent from REC Power Development and Consultancy to develop a power transmission infrastructure project in Handia, Uttar Pradesh. Now, the project will be executed on a build-own-operate transfer, that is the BOOT basis, with an operation and maintenance period of 35 years. Annual transmission charges for the project are set at 367 crore rupees. Now, this initiative includes establishing a 2 into 500 MVA 400:220 kV substation with associated line-based bus reactors and transformers to facilitate the renewable energy evacuation. The project also reinforces GR Infra Projects' role in strengthening India's sustainable energy transmission network. E2E Networks, India's leading hyperscaler in AI or ML cloud infrastructure, has secured a 88 crore order from India AI, which is an independent business division under the Ministry of Electronics and Information Technology. So the order involves supplying of 1,024 H200X SXM GPUs to JAN AI, which is also a startup developing India's foundational AI model. So the GPUs will be deployed on a single InfiniBand network fabric for high-performance computing with immediate allocation. Now, this deal enhances E2E's position in providing cutting-edge NVIDIA H200 cloud GPUs, supporting the scalable AI workloads. The company's market cap also stands at 4,711.87 crore rupees, and shares have closed flat at 2,358.7 which is reflecting steady investor sentiment amid the positive development. Protean eGov Technologies surges after securing a 1160 crore order from UIDAI. Now, the 6-year contract involves setting up and operating Aadhaar Kendra across 471 districts. So, revenue is expected to spread evenly with a focus on real estate and manpower cost. Now, the company anticipates strong transaction volumes and contract scale up within 3 to 12 months. Equirus rates Protean eGov Technologies ad with a 960 rupee target, which is boosted by 1160 crore rupees of UIDAI contract. So the Aadhaar Seva Kendra segment is forecast to add 140 crore in the FY27 end and 180 crore in FY28 end to revenue. So the contributions are expected to start from Q3 of FY26, which is driven by growing Aadhaar update volumes. However, the Ask segment is likely to have structurally lower margins. Investec maintains a buy rating on RBL Bank with a target price of 300 rupees. The bank's management highlighted that return on asset is expected to trend upwards to 1% by Q4 of FY26, which is reflecting improving profitability. Loan growth for FY26 is also projected to outpace the peers by 3 to 4% points, driven by a focus on secured retail loans and also expansion in microfinance and card lending segments. Rakesh Gangwal and his family trust sold a 3.1% stake in Indigo for approximately 7,028 crore rupees through a block deal. Now, this is causing shares to tumble about 4% on August 28. The 1.21 crore shares were sold at 5,808 rupees each, which is roughly 4% below the market price. Now, the sale is also part of Gangwal's phased exit plan following a fallout with co-founder Rahul Bhatia. Now, since February 2022, Gangwal and his family have offloaded nearly 9% of their holdings, raising around 45,300 crore rupees. The residual stake stands at 4.78%, which is valued at 11,169 crore rupees. Dr. Agarwal's Eye Hospital will merge into Dr. Agarwal's Healthcare, which is AHCL, which already holds a 71.9% stake. So the merger is expected by Q2 of FY27, and the approvals are pending. And this also aims to simplify the corporate structure. AEHL shareholders will receive 23 AHCL shares for every 2 AEHL shares. A 15% premium to the 10-day volume weighted average price. Morgan Stanley also sees the deal as EPS accretive from FY27. The acquisition values AEHL at 22 times of EV or EBITDA, 14% discount to the sector average. So AHCL plans to add 55 centers in FY26 and expects 20% revenue growth and 35% PAT increase. Electronics Mart reported a challenging Q1 of FY26 with like-to-like sales down 18%, which is impacted by an unseasonal monsoon. So the company's revenue has declined to 1,739 crore rupees from 1,927 crore rupees year on year, with EBITDA margin contracting to 6.3% from 8.3%. So net profit has dropped significantly to 21.6 crore rupees from 77 crore rupees of year on year. So inventory levels remain elevated, particularly the air conditioner inventory, which is up by 250 crore rupees and expected to clear by December 2025. The company also sold 4 IQ retail stores in Telangana and Andhra Pradesh, and also launched a new multi-brand store, Bajaj Electronics, in Andhra Pradesh. So management retains FY26 revenue growth guidance of 15% plus and aims for 6% EBITDA margin. A proposed 50% tariff on gems and jewelry export could hit India's $10 billion industry very hard. So the US, which holds a 40% market share and contributes 59% of Q1 of FY26 revenue, remains the largest buyer. With nearly one-third of the sector's $28.5 billion annual shipments headed to the US, the impact could be severe. Jewelry dominates product sales at 64%, while TV remains the top format at 57%. So the industry is also pushing its 16-brand portfolio. aiming for an in-house brands to make up 50% of B2C revenue by FY27, which is up from the current 36%. Ola Electric is aggressively targeting a 1,000 basis point gross margin expansion and aiming for 35 to 40% gross margins by FY26 exit. So this is driven by production-linked incentive. That is the PLI benefits. Now, quarter one of FY26 gross margin stood at 25.6% with expectations of 40,000 to 45,000 gross profit per vehicle. The company's FY26 volume guidance projects sales between 3.25 lakh and 3.75 lakh vehicles. This is also aiming for revenue of 4,200 to 4,700 crore rupees. The auto segment turned EBITDA positive in June 2025. Now, this is supported by strong gross margins and cost efficiencies. So profitability is anticipated to improve significantly from quarter two of FY26 onwards as PLI benefits kick in. JTEKT India has approved a 250 crore fundraise through a rights issue of fully paid up equity shares. In quarter one of FY26, the company has posted a modest 2.3% revenue growth, which is reaching 566 crore rupees. Now, however, the profitability took a hit. EBITDA has fallen 16% to 31 crore rupees, with margins narrowing to 5% from 7%. So net profit has dropped 26.6% to 11 crore rupees. The steering and column segment continues to dominate, contributing 96% of the total revenue. So JTEKT serves major auto players including Maruti Suzuki, Toyota, Tata Motors, Mahindra and Mahindra, Honda, Isuzu, and Renault Nissan. Jefferies highlights GST rationalization as a key demand driver for two-wheeler companies, with GST rates likely to drop from 28% to 18%. Now, this change could reduce the entry-level vehicle prices by 7 to 8%. Now, this is benefiting the manufacturers like Hero MotoCorp, which sees 80% of its sales from the sub-100cc models. Consequently, Jefferies also raised its target price for top two-wheeler players, that is Hero MotoCorp, to 5,200 rupees and TVS Motor to 4,200 rupees, 4,250 rupees. Now, Bajaj Auto has been risen to 9,000 rupees and Eicher Motors to 6,925 rupees. So the tax cut is also expected to boost the demand significantly and aiding the recovery after a recent lull in the auto sector. Hero MotoCorp navigates a rocky road. Bull celebrate a GST drop to 18%, lifting the profits, and Jefferies hold ratings with 5,200 rupee target. So new Glamour 125 and scooter launches aim to regain the market share. Valuations at 19 times of FY27, PE, and which looks pretty solid. So bears have highlighted Hero's lagging growth against the rivals, with TVS is set for 27% of EPS CAGR. Honda and Bajaj dominate the 125cc, while TVS leads the scooters. So new ABS rules may push prices up by 3,000 to 4,000, squeezing the margins. Hero must accelerate to stay competitive. A 50% tariff on Indian imports has officially kicked in under the Trump administration, marking a sharp rise from the earlier effective rate of 2.4%. JP Morgan estimates that after adjusting for exemptions and sector-specific rates, the effective tariff on India's export basket will settle around 34%. Electronics, pharma, fuels, and critical minerals, making up 25% of the exports, remaining exempt. So they remain exempt. However, auto and auto parts face 25% of duties, while steel and aluminium attract the full 50%. So the move could actually, significantly impact India's trade with the US, its largest export market across multiple sectors. Time for an NDTV Profit Research Special. Since 2021, 21 new age tech companies have hit the markets, while 5 stocks like Eternal, Indigo, and Nazara Tech have delivered over 100% returns. 6, including Paytm, Ola Electric, and MobiKwik, still trade below their issue price. Analysts remain bullish on names like MapMyIndia and First Cry citing strong return potential. Underperformers are focusing on margin improvement, user growth and operational efficiency. With mixed performance across the board, investors are weighing whether it's the time to bet on the beaten down tech players with long-term upside. Nvidia reported better than expected earnings and revenue and said sales growth this quarter will remain above 50%, signaling to Wall Street that demand for artificial intelligence infrastructure shows no sign of fading. The stock, which is up 35% this year after almost tripling in 2024, slipped in extended trading as data center revenue came up short of estimates for the second straight period. Bank of America, India research projects muted returns with investors urged to adopt nimble sector rotation strategies. Long-term returns are expected to moderate at 2.4% till December 2025, favoring large-cap stocks over small and mid-cap. So, despite the foreign institutional investor outflows of $13 billion year to date, the risk-reward remains unfavorable and no revival in the FII flows is anticipated. Trade tariffs, particularly a probable 15% US tariff on Indian goods, pose downside risk along with uncertain US macroeconomic conditions. Market volatility is also expected to be influenced by earnings cuts, tariff impacts, political developments, and cautious fund flows. Apple is pushing back against the UK's plan for stricter tech regulations. The tech giant says the rules similar to the EU's could harm users and developers. The UK's Competition and Markets Authority wants to break Apple and Google's mobile market dominance. Apple also claims the changes threaten privacy, security, and innovation. The CMA insists its rules will boost competition and help UK app developers. A final decision is due in October. Prime Minister Narendra Modi and Chinese President Xi Jinping are likely to hold a crucial meeting on the sidelines of the upcoming SCO summit. Now, this high-level engagement comes amidst ongoing efforts to strengthen bilateral ties and address regional challenges. The summit will focus on enhancing cooperation in security, trade, and connectivity among member states. Stay tuned for more updates on this significant diplomatic encounter. Torrential rains have created havoc in Jammu, claiming 41 lives with 34 pilgrims killed in a massive landslide on the Vaishno Devi Yatra route. The pilgrimage has been suspended as rescue operations continue amidst record-breaking 380 mm rainfall in 24 hours. The Indian Space Research Organisation has begun construction of a new launch pad at its second spaceport in Tamil Nadu. Now, this facility, spanning 2,300 acres, will support small satellite launch vehicles, enabling up to 25 launches annually by December 2026. Now, the strategic location allows direct southward launches, saving fuel and boosting efficiency for polar orbits. Prime Minister Narendra Modi laid the foundation stone in February 2024, marking a significant step in India's space ambitions. Israeli drone strikes targeted a military building in Kiswa near Damascus, killing 6 Syrian soldiers, according to Syrian state media. The attack, which occurred Tuesday, followed another Israeli strike in Kunitra that killed 1 civilian. Syria condemned the strike as violations of its sovereignty. Meanwhile, Israel launched a raid with helicopter-borne troops near Mount Hermon, escalating tensions amid US-mediated talks. Syria's foreign ministry warned of threats to regional stability. The IDF has not commented on the operations. A tragic shooting at Annunciation Catholic schools in Minneapolis has left 2 children dead and 17 injured. The suspect, 23-year-old Robin Westmont, who died by suicide, legally purchased the rifle, shotgun and pistol used in the attack, police say. Now, Westmont fired dozens of rounds through the church's stained glass windows during a school mass. So the FBI is investigating this as a hate crime targeting Catholics, with a manifesto revealing Westmont's disturbing motives. Navarro strikes again after laundromat for Kremlin comment. Now, White House advisor Peter Navarro labeled the Ukraine conflict Modi's war, claiming that India's purchase of discounted Russian oil has fueled Moscow's aggression and burdened the American taxpayers, while saying that India could get a 25% reduction in the US tariff if it stops buying the Russian oil. He clarified why he has called it Modi's war, because the road to peace runs in part through New Delhi. All 32 NATO members are set to meet the alliance's long-standing 2% GDP defense spending target this year, a milestone driven by Russia's 2022 invasion of Ukraine and calls from the US President Donald Trump for greater European contributions. However, only Poland, Lithuania and Latvia currently meet the new 3.5% core defense spending goal set in June, with Poland leading at 4.48%. NATO's new 5% target by 2035 includes broader security investments like cybersecurity. Secretary General Mark Rutte stressed that spending must translate into real military capabilities to ensure deterrence. Russian President Vladimir Putin and North Korean leader Kim Jong-un will join Chinese President Xi Jinping at Beijing's Victory Day parade on September 3, a bold display of unity against Western pressure. The event, marking the 80th anniversary of Japan's World War II surrender, will showcase China's military might with advanced weaponry and thousands of troops at Tiananmen Square. So, with only Slovakia's PM Robert Fico as the sole EU leader among 26 heads of state, the parade signals solidarity with sanctions-hit Russia and North Korea. India Grandmaster R. Pragnananda has qualified for the Grand Chess Tour finale after a stellar runner-up finish at the Sinkfield Cup in St. Louis. American Wesley so clinched the title in a dramatic three-way playoff, defeating Pragnananda and drawing with Fabiano Caruana. The 19-year-old Indian prodigy secured his spot with a draw against Levon Aronian and tie-break win over Caruana, joining Caruana and Aronian in the GCT finale in Sao Paulo. Well, with that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere as there's more action lined up ahead for you all on the other side of the break.
Tech has changed. So should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or, all of these other things?
No, as a child, I enjoyed playing tennis. So I always thought that, okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
Biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy business?
I think the biggest advantage is long-term thinking. A negative, sometimes the perception of family businesses from the outside can be one where it lacks professionalism.
The next generation in a family business is the most important generation for the future of that business.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
The Nifty falls nearly 1%, closing above 25,500 after a 200-point drop from the day's high. Mid-cap and small-cap indices also fell over 1%. Banking and financial sectors continued their multi-day losing streaks, while all major sectors ended the day in the red. 50% tariffs to hit gems, jewelry, chemicals and home decor in near term. Exporters flag liquidity crunch, urging the restoration of schemes, while the government fast-tracks export promotion mission and pushes supply chain resilience, expecting recovery in the next 5 to 6 months. Amid escalating US-China trade war in March, President Xi Jinping reached out to India with a personal letter to President Draupadi Murmu, signaling Beijing's intent to revive ties and voicing concern over the possible New Delhi-Washington trade deal, say officials. An EY report highlights India as the fastest growing major economy driven by domestic demand, reforms and infrastructure push, while warning of external risks. Peter Navarro, former Trump trade advisor, says India could reduce US tariffs by 25% if it halts Russian oil imports. India rejects the allegations, emphasizing its energy security needs, and points out the inconsistencies in the US's stance. Sources say the Association of Healthcare Providers India is likely to withdraw its advisory to member hospitals to stop cashless services for Bajaj Alliance general insurance policy holders after major hospitals met with leading insurance companies to discuss key issues. The Adani Group of companies report strong financial results in Q1, driven by robust operational performance and growth across key sectors including infrastructure, energy and logistics. Good evening, you're watching Profit 360 on NDTV Profit, and let's look at our top story this evening. Trump's tariff tirade has triggered heavy selling pressure in the markets, with the benchmark indices closing near their intraday lows. The Nifty slipped to around 24,500, while the Sensex ended near 80,000. All sectors ended in the red, led by steep losses in IT, defense and realty. My colleague Puneet now joining us with a quick wrap-up of today's market action.
Well, it was another day when we saw the benchmark indices largely being under pressure today. We also saw some pain essentially in the broader markets, but let's first start with the Nifty. It fell from 200 points from the day's high, and quite a similar performance that we saw on Tuesday as well before the market holiday yesterday, where we've seen continuous pressure on the Nifty and no recovery in sight. For the Nifty 50, we saw stocks like Shriram Finance as well as HCL Tech fall the most, while some stocks in the auto space like Hero MotoCorp and Eicher tried to provide some solace. They also ended below the day's high as well and saw some massive correction in the Nifty auto as well, with most stocks slipping in the red at the end of the day. Apart from that, Nifty has fallen over 2% in the last 5 days, and that's largely based on what's happened with the tariff tantrum amongst other reasons. The GST did provide a boost to the market as well as some key sectors like auto as well as electronics and consumer durables, but that failed to sustain and ground over essentially over what's happening with the global geopolitical issues. Apart from that, we've seen the Nifty fall nearly 1% for the day. Benchmark indices largely were slightly higher than the broader markets, but even we saw pressure in the mid cap and the small cap as well. In the mid cap 150, it fell over 1%. That was dragged essentially by Poonawalla FinCorp as well as Aditya Birla Corp amongst other stocks. We've also seen essentially over the small cap lose over 1%. led by stocks essentially like Electra Green Tech, as well as something like CESC, which also dragged the small cap index down. Finally, in terms of sectoral indices, the Nifty IT essentially fell the most during the trading session today. If any, we could see some solace if there's a rate cut in September, but till then, we could see some pressure on the Nifty IT over the medium term as well. Apart from that, it emerged as the worst sector for the day. HCL Tech as well as LTTS was the other stock that got impacted. ICICI Bank and HDFC contributed the most to decline essentially in the Nifty, and the Nifty Bank as well as Financial lose for the fourth consecutive session. We will be entering a new expiry from tomorrow. Foreign investors have largely maintained short positions, but we are expecting, at least for now, not any kind of meaningful triggers which could have a positive impact on these indexes.
Thanks, Puneet, for that. Meanwhile, the tariff shock has set off a wave of market reactions. And to understand its potential impact, we spoke with Amish Shah of BofA Securities and Anup Dhawan, former Commerce and Trade Secretary. And here's what they had to say. Listen in.
Absolutely, tariffs is one of the factors that can drive sensitivity for markets, both in terms of earnings and valuations. So I would argue that, look, markets are currently trading at around +1 standard deviation, around 21.5 times. 50% tariff, currently nobody expects to continue. Most of the market participants believe that this is a matter of time. We would probably over time revert to 20 to 25% tariffs, and that's what markets are pricing in. But clearly, if 50% stays for longer, then we could have the 11% downside case that we are arguing for right now. So basis the conversations with investors, I think everyone's expecting this issue to get resolved within a month or two. But anything beyond that, I think markets will start to price it in negatively.
Amish, again, just trying to understand, because you look at numbers and timelines so closely, for the markets to start baking in 50%, is there a time limit? Let's say that if indeed no resolution comes in for the next 60 days maybe, or 30 days or 90 days, then you in your models as well start factoring in a 50% tariff impact both on earnings as well as multiples.
Positive directionally. So clearly I think government is doing the right thing. Their policy both in terms of fiscal as well as monetary is to stimulate growth in this environment. We've seen a total of $48 billion of consumption stimulus so far, which is about 120 basis points of GDP. If you think about it, the additional subsidies given out over the last 12 months, mostly by the state government, some from the center, is $24 billion. Over and above that $24 billion, you had $12 billion come in through the tax cuts, direct tax cuts that were announced in the budget of February. And then possibly our expectation is that there will be another $12 billion coming in the way of GST cuts. So $48 billion, it's about 120 basis points of GDP. Over and above that, there will be some savings in the form of lower EMIs from the lower rates that we spoke about, plus there will be more liquidity into the system. So there is about, all put together, about 150 to 170 basis points of stimulus, depending on which way you calculate it. And that's the right thing to do. There is a need to stimulate growth right now. Government is going all out and stimulating that growth. Coming back to markets and implications, however, we think that the markets have more than priced in that recovery. And we think that the recovery is likely to be shallow in comparison to the street expectations. And therefore, arguably, earnings cuts will continue.
Meanwhile, government sources have said on US tariffs, and this is the latest that's coming in, what we're hearing right now, is that the new 50% tariffs imposed by the United States are set to significantly dent India's trade flows. Officials admit, however, that could be only a short-term disruption as supply chains are forced to recalibrate, but stress that resilience measures are already in the works. My colleague Rishabh Bhatnagar, who has been tracking the story very closely, now joining me on the phone line with more. Rishabh, take us through what exactly government sources are saying and how they're reading the situation henceforth.
Right. The commentary that is coming in from government quarters is the fact that there is some sort of an impact expected of these 50% tariffs that came into force yesterday. Lots sectors like gems and jewelry, chemicals, home decors, which includes carpets, furniture, all of them are expected to be suffering a little bit of losses. That is, the government is very cognizant of that fact. They've also mentioned that a new date for negotiations for the U.S. bilateral trade agreement have not been fixed yet. But channels are open, and the next formal in-person round could be could happen very soon. Now, given the fact that the government is cognizant of the pain that these exporters might be bearing over the next 5 to 6 months, there is talk of addressing all liquidity-related asks via this export promotion mission. Now, this is the same mission that was proposed in the budget, but the outlay then was about 2,250 crore rupees for a year. Now, what it is being envisaged as is a 6-year package with 25,000 crores worth of incentives. And these incentives will, of course, include old schemes like RODTEP that might be restored. You'll have interest subvention schemes. You'll have market access initiatives all built into it via 2 sub-schemes called Niryat Disha and Niryat Protsahan. That's what we're picking up. We're also seeing that the government is keen on expanding e-commerce exports. And that is a story we broke a couple of days back with the easing of FDI norms that might be coming in. What we're also picking up from the government is the fact that there is domestic demand that is being tried to be upended. What we're seeing is that you have the GST rate rationalization, you have a big reforms agenda that the government is pushing for, and all of that is domestic demand, which will also cushion some impact of these tariffs coming in. So you're seeing fast-paced consultations for these export promotion missions. So all ends the government is working towards easing the pain of exporters who will be facing a majority of the brunt of these tariffs.
Right, Rishabh, thanks so much for that update. This is the latest that's coming in. What we're hearing from government sources is that they are expecting the 50% tariffs to be a jolt, but a short one nonetheless. Let's move on now, because in a diplomatic move amid escalating US-China trade tensions, Chinese President Xi Jinping allegedly sent a letter to Indian President Draupadi Murmu back in March, signaling a desire to improve ties with India. The letter, later conveyed to Prime Minister Narendra Modi, expressed concern about US deals that could harm China's interests. It also named a provincial official to lead diplomatic talks with India, and this outreach is what helped revive India-China engagement, paving the way for renewed discussions. Remember, a very crucial meeting taking place this weekend on border disputes and economic cooperation. My colleague Puneet now standing by in the newsroom, joining us with more on this. Puneet, take us through this letter, this secret letter, like it's being termed, that was sent back in March, and how it actually paved the way for India and China to mend relations, and more importantly, what this actually signals economically and geopolitically.
Well, definitely. It is one of the key aspects that is coming out from the story because we have seen improvements of ties as well as negotiations between India and China. And now with this letter coming in, it does link to what led to these ties being improved in the first place. So Chinese President Xi Jinping has actually written to President Murmu and essentially on improving ties as a key topic. And the letter has expressed concern about your US deals, which could be impacting China's interest in the global medium term. They've also said essentially that he's named a provincial officer who would steer these talks with India at this particular time frame. The letter goes on to say that it was sent to PM Narendra Modi in June, and essentially onwards we've seen those talks take place, as well as improving relations with India and China was one of the key topics of the said letter. Now, from India's side, the NSA, Ajit Doval, is leading the talks, is what this letter has gone to say. Apart from that, we've also seen that China has assured India of some key supplies of fertilizers as well as rare earth magnets, which is having a key issue right now in the automobile sector across the world. And with these assurances, India has also gone out from their side and initiated conversations of starting direct flights with China, amongst the other key measures which has happened. So from September onwards, the direct flights between India and China will start, and India has also lifted curbs on tourist visas for Chinese nationals as well. So this could lead to a multi-level delegation as it is happening right now, and could have some positive measures between the two countries. But the letter letter now puts on the key facts of why these conversations have started to happen and pave way as well, and gives us some key insights from President Xi's style of working with the government.
Right, Puneet, thank you so much for that update. This is Xi's secret letter being sent back in March. Remember, a very crucial meeting going to be taking place on Sunday. We'll be bringing you live coverage of the Prime Minister's meeting as he visits Japan and then later China. Moving on, India is projected to become the world's second largest economy by 2038 in purchasing power parity terms, with a GDP forecast of $34.2 trillion. This is according to the 2025 issue of the EY Economy Report. NDTV's Sakshi Bajaj joins us now with more details.
Big boost for India's economy at a critical time, really, with, of course, this projection coming in that India may be the world's second largest economy by 2038. This as per our EY Economy Watch report. Remember, this is the research team that has given this report. Now, the report is really saying that, look, India could be the world's second largest economy in purchasing power parity terms. For our viewers to understand, when we say that, this projection for 2038 is in purchasing power parity terms, which essentially means a measure of standard of living across countries, across currencies. So for our viewers to understand what really is $1 equivalent to and what really is the purchasing power of 1 rupee in comparison, that really is essentially what the report is measured upon. Now, the report is also saying that, look, India can, with effective countermeasures, handle the US tariff, higher US tariff impact very, very well. They're saying that, look, among the world's 5 largest economies, India's economy at the moment is the most dynamic. So these really are the broad highlights coming in from the report. But what are really economists making of this report? While they're saying it's a big boost at a time when India is hit with the 50% tariff rate from the US, it is a critical time for this report to be released and an optimistic outlook at that. However, they're saying that, look, we have to keep in mind that this report is long-term in nature. The projections are for 2038, remember, and they're saying that, look, the reforms really must be implemented. So the trajectory really and the spotlight really is on the implementation of reforms and really how swiftly can India implement the reforms that are really, it's the need of the hour, economists believe, to unleash reforms and multiple ones at that.
Meanwhile, the 50% US tariffs on Indian goods has come into effect, and over the coming months, the gems and jewelry industry could face significant cascading impacts, risking its global shine. My colleague Harsha from NDTV was at the Jaipur Gems and Jewelry Hub and brings us an on-the-ground report highlighting the challenges that the sector now faces. Let's take a look.
Gems and jewelry is the highest revenue earner for Rajasthan in terms of foreign exchange, much more than tourism. In fact, 18,000 crores are the estimates that the gems and jewelry business earns in Jaipur. And of that, about 3,200 crores is the US market, which is about 20% of the total export. I have with me Alok ji, who is the president of the Jaipur Jewelers Association. Alok ji, क्या लगता है आपको, what is going to be the fallout? अगर इस तरह से, if the tariffs have already come in, they've already kicked in, so now how is it going to impact the business? I mean, it's the biggest foreign exchange earner for Rajasthan.
It's a major disruption that we are going to see now, and the effect is, as we see today, if things are not sorted out in the near future, there'll be a lot of pain, and that includes the businessmen, small, medium, large, doesn't matter, even, and the artisans. Once this cascading effect goes down and people start leaving this industry, then it will be very difficult to just gather them back together.
Alok ji, आपका जो business है, how much of it is driven by America actually? कितना percentage? और किस type का जाता है? आपने बताया कि finished jewelry भी जाती है and there's some loose gemstones.
Yes. So we are majorly into jewelry exports, studded jewelry exports, and about, thankfully, we are not so much into American market, but still about 10 to 15% of our exports are to America. So that is what we are seeing. The season is coming, but what we are seeing is this will be zero this year.
Also, this segment employs at least 2 to 3 lakh labor in Jaipur alone, and they're going to be severely impacted. In fact, a lot of the labor who work here are from outside Rajasthan. आपका नाम क्या है? हाँ,
सेतवान।
हाँ, कहाँ से हैं आप?
यूपी।
हाँ, तो जो जैसे ये बात हो रही है कि भाई अमेरिका ऑर्डर देना कम कर देगा, तो फिर डायरेक्टली प्रोडक्शन हाउस में ऑर्डर कम होएगा, तो फिर तो कारीगर पे तो इम्पैक्ट आएगा ही ना?
आएगा।
हाँ हाँ। क्या चिंता है?
चिंता है घर परिवार अपना हम कैसे चलाएंगे। इसी से कमाते हैं तो अपना खर्चा चलता है।
I have with me Sudhir Kasliwal. The Gem Palace is one of the oldest shops in Jaipur. But Sudhir ji, with the kind of tariffs that we are seeing, the new administration, Trump administration, you also had made inroads into the export market. You were also sending jewelry abroad. You were not just doing traditional jewelry. How badly has that been hit?
You see, almost 60 to 70% of our export orders have been kept on hold lately after the Trump tariff announcement.
What are your customers saying about that? I mean, they must be with you on email. What is the concern?
The concern is increase in cost because they are wholesalers and they are also going to sell it to their customers and they must have quoted a price. We have also quoted a price. So the price hike definitely will affect their sales also, and our sales are being affected for sure.
So 60 to 70% of export orders is a huge hit for any business to take. Also, you know, Jaipur is also a thriving tourist industry. And a lot of tourists who come here also come shopping. They come to buy gems and jewelry. You know, in fact, it's always on the shopping list of every tourist who comes in, especially the upmarket tourist. So will they also be affected? If do you think domestic sales to tourists, foreign tourists will also be affected?
See, our sales are mainly to foreign tourists. And out of all the domestic, the foreign travelers coming to Jaipur, our sales are almost 70 to 80% to American tourists. They are our big buyers. Now, that is also going to be affected because that we'll see in the coming season, because now it's not a tourist season, but it's definitely going to affect our business.
So that's how the cascading effect of the Trump tariffs will slowly be visible in the Indian market. But for now, the Trump tariffs have sent tremors down Jaipur's jewelry business, and it's threatening to take the sheen out of what was once a glittering business for both import and export.
Right, and let's move on to a quick update coming in. Government sources are saying that the group of ministers has now proposed an early phase out of the GST compensation cess, recommending that it be replaced by a separate levy or subsumed under GST rates altogether. My colleague Shrimi Chaudhary now joining me on the phone line with more details on this. Shrimi, we understand that the GOM is aiming to end the compensation cess by as early as October 31st. Give us all the details.
Yeah, so as you mentioned, this GOM led by Pankaj Chaudhary, MOS Finance, has recommended in its report an early phase out by October 31st of this compensation cess ahead of the original deadline of March 31st, 2026. Now, the final decision, of course, rests with the GST Council in its upcoming meetings scheduled for September 3rd and September 4th. What they have recommended at this point in the report, which they submitted to Council, is two key options on the compensation of, the future of compensation cess. Is one that either replace the cess with a separate levy or additional levy, or integrate it with the broader GST rate framework. So the council now will deliberate on these options during the meeting, and in fact certain numbers have been also quoted by the GOM in its final report, saying that the collection from the compensation cess have already reached to slightly over 50,000 crore up to July 2025, and based on the current trends, by the time they reach October end, it will be around 88,000 crore. So what the suggestion is that there could be some surplus, of course, over and above the back-to-back loans which government has taken and which led and triggered the extension of the compensation cess, and that will be distributed among center and state equally. So, of course, the council will, decide a further, strategy how to go about it. But for now, they are suggesting two options, and of course, the early phase out of the cess regime.
Right, Shrimi, thanks so much for that update. This is what the GOM actually is proposing, and we'll get into more details as we get in the developments. Thanks for that, Shrimi. Moving on now, we have learned that India's industrial output in the month of July grew by a solid 3.5%, coming in at a 4-month high. This indicates a steady industrial performance despite Trump's tariff pressure. Now, I'm going to bring in Pallavi for a quick, detailed breakdown of these figures. Pallavi, over to you.
Right. So, as you've mentioned, IIP growth has come in at the highest in 4 months at 3.5% for the month of July, and this is compared to a print of 1.5% we had seen in June. This was largely on the back of manufacturing, which actually comprises the largest component of the index. So, manufacturing grew by 5.4%. That's on an annual basis, and that's compared to about 3.7% we had seen in the previous month. Meanwhile, the other components of the index, that's mining and electricity, actually saw a contraction, with mining falling 7.2%, largely might have been because of the ongoing southwest monsoon season, while electricity production fell 0.6%. Now, let's also take a look at some of the quick key IIP internals. Primary goods output contracted 1.7%, whereas capital goods grew by 5% and intermediate goods grew by 5.8%. Infrastructure, consumer durables also saw a growth, 7.2% and 2.9% respectively, whereas consumer non-durables saw a contraction. All said, this print was above what was being estimated, and given that we have seen tepid prints the last few months, it is an encouraging one at that.
Right. Pallavi, thank you so much for that update, these industrial output figures coming in. That's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
Tech has changed. So should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or all of these other things?
No, as a child, I enjoyed playing tennis. So I always thought that, okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
Biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy business?
I think the biggest advantage is long-term thinking. A negative, sometimes the perception of family businesses from the outside can be one where it lacks professionalism.
The next generation in a family business is the most important generation for the future of that business.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or, all of these other things?
No, as a child, I enjoyed playing tennis. So I always thought that, okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
Hello and welcome to KYC, that is Know Your Company on NDTV Profit. My name is Hiral Datia and with me is Puneet Javeri. Today on KYC, we are going to actually dissect a Quess Corp in trade. It's going to be an interesting company to talk about, and the scenario is absolutely interesting as well. The reason being is what's happening with hirings right now, because all of us have been talking about the negative impact in terms of where IT as a sector goes, because that's where majority of the downtake that has happened so far. But let's quickly run you through as to why a Quess Corp. Firstly, we want to understand the business outlook for FY26, and the reason why this is important is after the three-way demerger that has happened, how is business actually shaping up? Moving on, if you talk about the other aspects, which segments will lead the hiring in the second and the third quarter, which usually is an absolutely strong quarter? That's the second question that we ask. On number 3, what's the outlook looking like for GCC hiring, as IT as a sector has been slowing down as well? And moving on, can the professional staffing sustain the double-digit margins that we've seen so far? So these are a few of the questions that are on my list. Puneet, what are you going to look at as well?
I think one of the key aspects is, of course, of the company is largely into hiring for both banking as well as for technology, and that space has been largely impacted from the tech space. So I think that will be one. Monsoons, amongst other reasons, has been one of the key aspects which is impacting a lot of companies, but those are some of the key aspects to look at.
Right. In fact, will Middle East and Singapore growth also continue from here on is what we need to watch. What's the plan for on-site as well as GCC business transfer is what we should be looking at. And very lastly, how is the Hamara Jobs ONDC integration progressing for the company? So we usually look at 5 questions. These are 8 questions that we will try looking at with the management from here on. But moving on, let me quickly take you through, about Quess Corp. Firstly, as we know, the company is in the business of overall staffing is what we know. Apart from that, if you look at the presence, 9 countries is what they're present in, and they have a workforce of little over 550,000 associates, serving over 3,000 clients across diverse sectors. Talking about the demerger as well, they have done a 3-way demerger. All the 3 companies have been separately listed now. The main business, which is Quess Corp, is into workforce management. And the first new company is Digitide, which is into BPM solutions, InsurTech, as well as the HRO business. If you talk about the second one, which is Blue Spring, that company is into facility management, industrial services, as well as investments. Overall, if you talk about the market split as well, Quess Corp, it actually had a market cap of around 3,900 odd crores, Digitide around 2,900 odd crores, and Blue Spring around 1,200 odd crores. And this is basis the split that had happened then. So let's just be very mindful of that aspect. If you talk about the first quarter as well, in terms of the matrix, Quess Corp around revenue of around 3,650 odd crores on a PAT of 50 crores. Blue Spring reported a loss and a revenue of around 800 odd crores, and Digitide a profit of around 10 odd crores on a revenue of around 740 odd crores. General staffing, professional staffing, overseas business and digital platforms, these are the segmentals that you're looking at, where general and professional has seen an uptick, whereas overseas business and the digital platform has seen a degrowth from 5 to 18%. So that's with regards to everything that you need to know about the company. But let's quickly take you through the rating parameters from here on. On the first one, we have the income statement that we are talking about as well. We'll talk about the balance sheet, cash flow, return ratios. Moving on, if you have to look at the other four parameters, the shareholding, street credentials, street coverage and valuations. This is what we will discuss from here on. Puneet, let's start with the income statement.
Well, definitely. It is one of the key aspects because we've seen the demerger happening now of this particular entity. So you are seeing some kind of revenue correction that we've seen. Now for FY25, and we've only taken the last 2 years because these are comparable post the demerger. If you see from the FY23 level, compare the FY25 revenue, you will see a dip, and that's largely because of the two demergers of the two new companies that Hero just spoke about. So in that aspects, 14,990 crores is what they did in FY25. It is a growth, but you will see that there's an impact on the net profit substantially. It's down almost 6 times from the FY24 level. This was largely because of a demerger expense of about 30 to 40 odd crores that they did, as well as a write-off of about 118 odd crores, which impacted the profitability in FY25. So that has dragged down essentially the ratio in this particular aspect, and for that reason, we've given this a thumbs down. And in FY26, they are expecting some of these expenses won't be a part, especially the demerger expenses. The receivable aspect will be something that we'll quiz the management on. But on this aspect, we've given this a thumbs down.
Right, so that's with the income statement. Let's quickly look at the second parameter, which is the balance sheet of the company. Now, what's interesting in terms of the balance sheet is their net worth to an extent has come down significantly from a 2,800 crores that we saw in FY24. It's actually come down to little over 1,000 odd crores. And in terms of the cash and bank as well, that is nearly halved for the company. So these are two aspects that we are looking at, because of which we are giving it an absolute neutral rating so far.
Specifically, this has also seen that kind of demerger impact, which we've seen move
There will be
into
some movement that will
Blue
happen, correct, to the other companies, which is Blue Spring and Digitide.
Yeah. And in terms of cash flow, let's move on to the third metric now, and that largely seems to be stable-ish to say the least, because we've seen that kind of degrowth in terms of hiring trends. You're seeing that impact in FY25 as well. Company is guiding for a better performance in FY26 that will be led by professional staffing as well as the hiring in GCC trends. So we've given this a neutral, not given this an absolute thumbs down, largely basis of this aspect of a better outlook. But for FY25, it was still a better performance compared to FY23, but a neutral rating, giving the uncertainty in hiring for the tech as well as among the other sectors that it caters to.
Okay, so that's with regards to where cash flows go, but let's look at the return ratios. Now, what's interesting with the return ratios is if you have to look at 23, 24 and 25, it's the lowest. So clearly, the return ratios are well below your historic highs that you've seen as well. In fact, 10.36 is where the return on capital employed was in 2024, 23, 8.45, and right now 2.92 is really low. Simultaneously, if you talk about the return on equity as well, there again that number is in single digits, 2.36 lower level versus a 10.35 and a 8.97 that we've seen in the previous years. So clearly there is improvement that is needed on the return ratios, and that's the reason why we give it a thumbs down so far.
And essentially, the return ratios are expected to go and do better going forward, largely led by, what is happening in GCC trends amongst others, because that is a very, very high margin business for the company. But clearly the trends, seeing that impact of the high margin businesses moving to the other key verticals, and hence thumbs down. The next one is shareholding, and this largely, we've given this, in terms of shareholding, largely, in this particular aspect, a thumbs up, and that's because of maintenance of that kind of shareholding that this one has kept. So from 56%, it's largely been there. We've seen some increase from March of 2024 in terms of the level for public shareholders, and hence, we've seen in terms of the stock largely underperforming, the retail investors coming in anticipation of a better growth area. But we've given this a thumbs up based on the confidence that the promoter has kept in the business.
Okay, so that's with regards to where the overall return ratio shareholding goes. Street credentials is that we've already spoken about as well. Valuations, let's quickly look at that aspect from here on. If we can just get the overall street creds on the screen. in the last 6 months, we've seen a downtick of around 55 to 56% in terms of where the stock price goes. That the counter has actually underperformed in all parameters. If you have to look at the last 5 years as well, it's a downtick of around 31-32%. So not really rewarded the shareholders to that extent. So that is what we need to look at from here on. But, as Puneet was mentioning, the GCC hiring, which is a high margin business from here on, if that is able to improve the business, in turn, improve the return ratios as well, potential for things to come up and reverse. And that's a question that we will check with the management. But overall, a thumbs down in terms of the street credentials, Puneet.
Well, and that's largely also seeing that kind of merger impact, which we saw in April. About pre-merger, the price was 604. Post-merger, we saw that dip to 400. But since then as well, we've seen some form of impact on Quess Corp, largely basis on the operating performance as well. In terms of valuations, the nearest competitor is TeamLease, and we've always seen that kind of valuation differential between both these firms. Currently, valuation for both seems to be, on the lower side for FY27 specifically, baking in the negatives for this year. The outlook, of course, will be something to watch out for as we go into Q2 and Q3. Q2 and Q3 are, big seasons for hiring, and that does benefit companies like Quess Corp as well as TeamLease. But at least for on both the next couple of years, we've seen valuations largely been positive compared to TeamLease. But in terms of growth, that largely has been absent, and hence we're giving this a neutral for now. But in terms of commentary, that depends on what happens in Q2 and Q3, has some upside risk to say the least, and that's reflected essentially in the analyst ratings as well.
Valuations absolutely reflective in analyst ratings. But let's quickly just go through everything in terms of the street credentials that we're looking at in terms of coverage. 8 buy calls, 1 hold. But with that as well, you have a 42% upside, right? So from what Puneet is mentioning about from a valuation perspective, the business perspective, the GCC that could start contributing, probably that is what is being indicated in the upside that, the analysts are giving right now. And 8 is not a bad number, and hence a thumbs up in terms of where the street credentials go, the coverage goes. Let's quickly look at the final performance now. So the income statement is a thumbs down and your return ratios are a thumbs down. If improvement comes in, probably that could change in the future. Balance sheet cash flow, absolutely neutral because of the impact of the demerger that we've seen. Your shareholding, street coverage, both are a thumbs up. Valuation right now is sideways, but your credentials, because of the returns that it has given to investors, is a thumbs down right now. So from 8, the overall rating is a 3.5 in terms of where Quess Corp goes right now. The conversation that we will have with the management is actually going to tell us how this 3.5 probably will improve from here on or not. Let me welcome in Guru Prasad Srinivasan, Executive Director and CEO at Quess Corp. Srinivasan, welcome to the show and a pleasure to speak to you at NDTV Profit as always. My first question coming to you is, overall, with the demerger that has been done, now the business that Quess Corp will actually focus on, what's the outlook looking for FY26? Because usually Q2, Q3 is a strong quarter for the company. So taking aspects into consideration with what's happening around IT, the GCC business that you're looking at as well, which is a high margin business, how is Quess Corp actually stacking up?
Sure. Thank you so much and happy to join you all on this call. So first and foremost, let me start from the demerger structure in itself. So we had a very successful demerger, which officially we announced, and 2 other companies that got listed in the month of June. So Q4 results itself, if you look at, we started, announcing the result independently by each of these entities. So Q1 is the first, standalone result that we announced of independent entity Quess Corp. A couple of specific callouts. First and foremost, we had a double-digit EBITDA growth year on year, and our debt levels have become, for Quess Corp, debt level is, we are a debt-free company now. And the other parameters are like post-demerger, the business structure in itself has become far simpler. So we have 4 line of businesses. The first one is general staffing, which contributes about 53% of our EBITDA comes from general staffing business. The second set of business is India professional staffing, where 29% of our EBITDA comes from India professional staffing business. The third quadrant is our international business. About 18% comes from our international, 18% EBITDA comes from our international business. And the last one is a digital platform which we have incubated for future in terms of building our digital strategies around. So 4 line of businesses: simplification of corporate structure and debt free and much leaner balance sheet is what we were able to achieve by Q1, and we've just announced that as a result.
Mr. Srinivasan, good morning, sir, and thanks so much for joining in. It's Puneet this side. You mentioned that debt has now, wiped off from the balance sheet. Essentially, that will help the return ratios for you going forward. In terms of, hiring trends, if you can give us some perspective. Q2, Q3 generally is very strong for you. We're almost, halfway through Q2, and while you can't talk about numbers, have you seen any kind of hiring revival essentially in sectors like technology amongst others? If you can give us some perspective.
So let me go by platform and business. So Q2 has been definitely, we see a lot of green shoots coming across Q2. If I were to start specifically from a segment, if you look at, I think, general staffing, we have an open mandate of almost about 40,000 plus. To be precise, about 42,000 open mandate that we are on. It's a good way to start Q2. And between July and August, we have done substantial hiring specifically in manufacturing, consumer retail, and telecom. As you rightly said, India being the season between July to up until Diwali till October, we are seeing mandates, open mandates being fulfilled, and the other sector is supply chain logistics. Specifically, I think 1 or 2 sectors which are a little slow than anticipated is BFSI is slightly slow, but otherwise manufacturing, consumer retail, telecom, and supply chain logistics is doing well. Coming to professional staffing, GCC has been the most spoken about, and we are definitely, while the mandate quantum may not be high, our fulfillment ratios are far better, and we have been able to do good. Almost 70% of our fulfillment comes from specifically from GCC as a segment. So a couple of indicators probably that viewers would be interested. The rural consumption is far higher than urban consumption. 75% rural consumption is coming up from, and that leads to a lot of expense and the investments that can go into the segment, which is helping us to probably do our more open mandates are coming in from tier 2 and tier 3 segments, which is good to see than the key markets and urban markets. So almost 37% of our hiring we have done in tier 2 and tier 3 cities as we speak, and most of the manufacturing units are also being set up in tier 2 and tier 3 locations. So that's where we are now seeing a lot of demand coming in, which is in a way good for country like us. There will be more spending pattern in rural markets. So that is going to give rise to more jobs as we move forward.
Okay. So when you talk about, an uptick that's coming in from tier 2 and tier 3 as well, which segments are you looking at in terms of hiring? What percentage of your revenues will come in from there? And in turn, the margin impact that you see, is it a low margin game or is it a high margin game?
See, staffing would always would be in a range between 1.4 to 1.5% in terms of EBITDA, because it's a volume game. And the way we reorient ourselves is we definitely headcount is important for us, but profitability is much more important than our revenue. So we focus on our profitability for this business, specifically for general staffing, and of course, professional staffing has always been on EBITDA measurement. So coming back to your question, 1/3, almost, I said 37% of our hiring is coming in from tier 2, tier 3 segments. Again, the segments which are driving this are manufacturing, consumer retail and telecom, and logistic and supply chain. More e-commerce going closer to the customer in tier 2, tier 3 location, and you need entire delivery and solutioning around it to cater to their customer needs. So plus the retail being the season, and more retail going closer in tier 2, tier 3 location rollout. That is what these are 3 segments which are driving, and it also reflects in a similar ratio in our revenue as well as we move forward.
Mr. Srinivasan, my question then is, you're talking about that margin range of 1.3 to 1.5% when it comes to staffing. But now that you're focusing on GCC, you're expanding into, global technology services, which is a high margin business. Do you see that further upside that could come in? And if yes, what should that range look like then?
Good question. So if you look at our results between Q4 and Q1, our contribution from general staffing in Q4 was about 59%. The EBITDA contribution, what I mean. And in Q1, that 59% has come down to about 53%. So while headcount grew and we had net additions, our contribution to overall EBITDA as across Quess for general staffing came down from 59 to 53. So on the same way, if you take the second quadrant, which is our professional staffing, from 21%, we moved to 29%, which means our high margin businesses are contributing well back, which is helping us to, our overall blended margin across group. We moved from 1.8 to about 1.9. And by end of this year, we've been, guiding and we are modeling accordingly to be around 2%, and we are on course to that.
Mr. Srinivasan, a couple of questions. Now, on professional services, you mentioned professional staffing, you mentioned that, the contribution of EBITDA has gone down to 53%, but that continues to be, where the growth essentially seems to be visible. Could you talk to us about what is your strategy for increasing your GCC contribution? Because I think you mentioned that you're roughly around target. You already have 157 GCC companies that you work with, but the scope in India with the increasing focus seems to be much higher. So could you just talk to us about the opportunity, and if you can give us some kind of quantification that we could see in the next year or next couple of years for you specifically from within this segment?
I think just one correction. You said 53%. What I referred to was general staffing contribution coming down from 59 to 50. So that is what I mentioned. And our high margin businesses going up from 21 to 29%. So that's what I was trying to clarify. And coming back to GCCs continues to be, we have, there are about, if you look at, there are about 1,600 GCCs expected to grow at 13% year on year. By 2030, it is expected to be about 2,500 GCCs who are going to set up their captives back in the country, of which currently from 1,600 we cater to about 10% of GCCs in terms of hiring. Almost about 3,000 plus around 3,300 headcount of ours are currently present in GCC. So with this, we continue to grow. Probably, I think over 20%. I wouldn't hesitate to say that the kind of demand that is coming in and the fulfillment which is coming in. And as a company, we also pivoted to cater to, in terms of building better recruiter capability, bringing in more AI and digital as part of our mix to ensure that fulfillment and delivery happens much quicker and faster. So definitely this particular segment, which is high margin, would continue to grow about 20% year on year for us, and we are slated towards that.
Okay. And when you talk about IT as a segment as well, that's seeing some bit of softness right now. And plus you've seen a decline in terms of the open job mandates as well, right? So how are you actually strategizing to navigate this aspect? Because that is something which has been reflected in the fourth quarter numbers as well.
So this is specific, has been the trend for IT services companies. For all IT services companies, absolutely, I would we are not seeing any major demand coming in for, Q3 as well this year, as we're already close to Q3. This has been the phenomenon for almost last 6 to 8 quarters, and we've only seen headcount coming down there. However,